who are literally lost. So today, 20% of adolescents report low self-esteem. 52% have experienced or are experiencing an eating disorder. 70% of teens say anxiety and depression is a major problem among their peers. And 1 in 3 contemplate suicide.
Whoa!
3. And this is, there are many great, wonderful things that we can say about internet and social media and connectivity and knowledge and friendships and all that. That's great. This is the dark side of it. And up until now, there was nothing that a parent could do to actually manage and help their children.
It does not seem like social
And
media.
4 or 5 of these kids are Democrats.
They seem to be,
Raised by Democrat
saying
parents.
things that might keep the least restrictive legislation on, but that's about it.
I think this happens when somebody, in this case, RE, becomes mission driven. When it becomes personal to you and you see how dark and deep that rabbit hole can be, and how you literally how frustrated you are, and that you just don't know what to do because you just have no insight into it. And so a person with a single mission, with talent and expertise, which is what RE is why we ended up here today.
So this is just an app that you download?
Yeah.
Yep, you just go to Aura.com, you download the app, and turn on the controls on it for your child, and then you're good to go. It starts collecting data. It's like almost like an Aura ring in some ways, right? But for mental
Spelled
health.
differently.
Yeah, it's spelled O-U-R-A.
Yeah.
Exactly.
For
This is
AURA.
AURA.
Please.
Bob's meeting, knowing about it doesn't fix the problem with social media the way it does the kids, though. I mean, at least knowing about it, you can deal with it and maybe intervene. But there's something really wrong with what goes on social media.
Look, I mean, my take, when we went into this, we thought, hey, this may be like the cause of a lot of these issues. It's not very clear to me that is the case, by the way, because the way kids use social media is very different than 5 years ago. One thing that's very clear to us from the data, whatever it is your kid's feeling, it amplifies it. If you're on social media, it has the ability to now sort of, be a mirror that's basically giving you more and more content around things you're interested in. And interest can be dark interest, or it could be something that's very positive and motivational. So depending on where the child engages with it, you end up with a lot more amplification.
And Joe, here's the thing, which is that we've all coached our kids through difficult, challenging things. Drinking, drugs, driving, sex. Like we've had to manage over a lifetime these things. We had tools to do it. We had insights, and the brilliance of this. And I will say this: I have a lot of things to be proud of in my career, in terms of doing good things for families and for kids and for moms and this and that. Honestly, I'm prouder of this and Hari and what he's doing than anything I've been associated with.
All right, that says something. That is a huge mark in favor of this. What's the goal? If you come back 9 months from now or a year from now, what would you like to be able to say?
I want every parent in the world to have this tool. I want them to actually now suddenly be armed with the ability to support their children as they move from, out into the world of the online internet.
We tell Jeffrey, who's one of our investors, it's not going to happen in 9 months, but we hope that over the next 2-3 years that there's a lot more adoption and engagement, and more people that use it. We get smarter about helping our customers because the models get smarter.
Rebecca, I keep seeing Netflix come up on here and this and something, and so honestly, if we could be to safety and for security for parents, what Netflix is for entertainment, as a streaming downloaded app, that would be
That hurts.
beyond.
Not Disney for entertainment. You use Netflix now instead of Disney.
Well, Netflix is what's come up here, but honestly,
I was gonna steer you there.
Disney is the one that has set the standards and practices for us, and what we're trying to do, and nobody does it better than them. No one.
Do you think any streamer can ever catch Netflix at this point?
They don't need to, is the answer. So, no.
It's big enough world.
Yeah, I think you're going to have a handful of very, very successful scaled players out there, and clearly Netflix has done a brilliant, brilliant job, but I think Bob Iger's come back and actually pulled that place together, turned a profit on his streaming platform. He's doing a spectacular job. You got to give him a lot of credit. The stock will catch up with the performance of it, but Amazon and Apple and, you know, even Warner's Discovery. There's some great product on there. I don't know about you, but I'm deep into White Lotus. I didn't get to watch it last night. I'm sweating because I'm hours behind the rest of the world.
And you don't want any spoilers.
I do not.
Yes.
I didn't see last week yet, but I
Oh,
got
boy.
caught up to almost last week.
It's pretty
There's
brilliant.
something about the guy that is dealing with the end of his career that I don't. I'm just so glad that I don't have to worry that. You know what? I mean, the end of his career. Are you watching
I'm
it?
not watching it, so no.
He's getting these phone calls about this. I don't know. It doesn't even sound like he was that involved with whatever was set up.
Well, I'm not reading it that way, I have to say.
You think
It
he
sounds to
would?
me like serious
He
fraud.
Toasty.
Fraud where he's going to probably lose everything. And he's like, they can't take my house, can't. I mean, can you imagine? And then he wretches.
I think this guy's a crook.
You do?
Sorry. Maybe I'm wrong, but honestly, I'm reading it as this guy is a stone cold thief.
There you
But
go.
out of everything else he did, it's this one investment in the Far East that did it, right?
Whatever. I think
All right,
fraud.
now I have to watch. Now I have to
Fraud
watch
is
this
coming.
before I come down on this.
Either way, watch it, and we know how people get involved with it. I think they do something small, and then they get caught with that, and then they do something again, and then all of a sudden
But
they're.
just think, here we are on Monday morning.
Talking
You know,
about it,
we
yeah.
can't wait to talk about it. It's the water cooler at work. It's brilliant.
There's always something. Anyway, Jeffrey, thank you very much for coming in. Hari, thank you. And we hope you'll come back in 9 months or a year. Give us an update
Great,
on how things
absolutely.
are going. I'll check it out.
HBO.
Great, thanks for having us.
Thank you very much.
7 a.m. Just passed on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick. Andrew is off today. Among today's top stories, new tariffs from the Trump administration expected early next month could be more narrow and targeted than previously thought. This is according to published reports from this past weekend. Say despite significant tariffs set to be announced on April 2nd, sector-specific tariff announcements won't be likely unveiled that day. Sources tell CNBC that South Korean, this is a separate story, auto giant Hyundai will announce a $20 billion investment in the U.S. when its chairman visits the White House today. Sources say the pledge includes $5 billion set for a steel plant in Louisiana, with plans to hire 1,500 employees and produce next-generation steel for Hyundai and Kia cars. And China-based United Laboratories International announced earlier today it will license its weight loss drug to drug maker Novo Nordisk in a deal worth up to $2 billion. All the Mag 7 stocks are down year to date except Meta. And with the new tariff set to kick in on April 2nd, the sector could face even more pressure. Joining us up now with more, Gene Munster, Deepwater Asset Management, managing partner. Are any of these stocks not at tradable bottom levels, Gene, or you think they all are?
Well, I think that if you take the perspective of the next 2 weeks, April 2nd is going to be a vortex day. Not only we have the tariffs there, but we also get Tesla deliveries, which are widely anticipated to be down versus expectations. And so I think if you kind of put this mix together and think about April 2nd, I'm more in the brace mode of how the Mag 7 is going to react to that. Now I just put a finer point on it, the trees versus the forest here. On the tree side, we think about which companies are going to be most impacted by these tariffs. Of course, Tesla and Apple come up. And I think that those two companies, just because of politically where they're at, Tim Cook has done a marvelous job of navigating where Apple is at relative to these trades over the year. I think they're going to be in a great place. So I think that that piece should not concern investors. But the piece that should be of a concern is relative to how these tariffs impact a recession. I'm in the camp that we are still in position for a 2-year bull market that will end in a spectacular bubble bursting. But that whole view can be short-circuited by a recession. And so I think that's the other kind of the ripple here relative to April 2nd. So are we at a bottom right now? I don't think we're at a bottom. Do I think that these stocks will be higher at the end of the year? The answer is yes.
So, I don't. You think you can be that fine in terms of resolution to not buy now, but buy before the end of the year? You would try that?
I think that's being cute. I think that that's hard to trade. But if you just want my expectations about how April 2nd plays out and what I think that the narrative is going to be, I think that that's more of a headwind. But still, very much in the camp that we're much earlier than people believe in the AI trade, and these companies are going to have a more substantial benefit than even the high expectations around that.
There's some controversy, I think, with one of your, I guess, another person in your industry that follows things, talking about Tesla. What's your view on Tesla, whether Elon Musk needs to, I'm not sure what this analyst was actually, I don't know what his advice to the company was. He said, Elon has started to, I don't know, to smooth things over, but he needs to do more. It's almost like saying that, the bully at the school, or the person being bullied, he's starting to do the right things to not be bullied anymore, but he needs to do more. And I thought it was very odd that, do you think that Musk is culpable for what's happening with Tesla? He should be doing something different, shouldn't be trying to find waste in the federal government?
No, I think what he's doing is he's doing what he believes is right for the federal government, and there's some fallout in terms of how that impacts the brand in the near term, and that could last for a year. I think that ultimately he's in the camp of doing what's best for Tesla longer term. At the town hall meeting, I spent the weekend going over, and it's a trap to spend my time looking at the exact details and trying to scrutinize everything he's saying in that town hall. What's most important is to look at the arc of the conversation. And that arc of the conversation is he talks about the next 6 to 12 months are difficult. That's the word, difficult to predict. And I think that's code for probably numbers are going down. But he also emphasized this shift in the company and their mission statement to sustained abundance. And basically this is an AI robotics theme, the FSD optimist. And so do I think what he's doing today does it impact Tesla for the long term? No. And I would point out this just observation is that it's no surprise that Tesla is going to have a difficult March quarter. And yet the stock hangs in there. It trades at 80 times next year's earnings. And I think that is testimony to, I think, the kind of the resolution for Tesla owners, the stock owners, that they're okay with this near-term turmoil. So I'm in the camp that the stock can go lower near term, but the stock is telling us something different. The stock is saying they believe in what Elon's doing at the federal government. They believe in what he's doing for building this company around this sustained abundance theme. And robotics, as far out as that is, investors are okay making that transition and owning this through a difficult period.
But $800 billion market cap is a real company. GM's still $50 billion. So what is that? That's 16 times larger than General Motors.
I think they're different. Yeah, they sell cars, but I think I'm in that camp. They're a very
Totally
different company than any other.
Well, they got, no doubt, it's like a technology company that also sells cars, I guess. All right, Gene Munster, thank you. See you later.
Thank you.
All right, still to come this morning, we've got top stocks on the move ahead of the opening bell. Here's one to get you started on this. Let's check out shares of Boeing. Melius Research upgrading the stock this morning to a buy. They're citing an operationally focused CEO, a faster than expected ramp of 737 deliveries following the company's recent strike, and a win over Lockheed Martin on the Air Force's next generation fighter program. That stock this morning up by about 1.4%. We'll be right back.
Good morning. Thanks for watching Squawk Box. I'm Frank Holland. These are your morning movers. The market's overall getting a boost from reports. The tariff schedule for April 2nd could be more targeted and include some exclusions. One of those exclusions could be for autos. You see auto stocks moving higher across the board. GM shares moving more than 2% higher. Ford shares up more than 1%. Volkswagen shares almost up 1%. Also looking at Hyundai shares up nearly 4%. Also important to note, Hyundai announcing a $20 billion investment in the U.S. today. Also, Mercedes shares moving 1% higher. The CEO of Mercedes attending a CEO forum in China, a lot there with leaders in Beijing. And speaking of that forum over in China this morning, taking a look at chip stocks that could also be excluded from those April 2nd tariffs. Again, according to reports, we're seeing Qualcomm shares moving more than 1% higher. Similar story for Broadcom shares. Both CEOs at that CEO forum over in China right now. Again, chip stocks could reportedly be excluded from those April 2nd tariffs. Broad upside moves for chips across the board. Seeing Intel shares up almost 1.5%. ARM shares almost up 2%. Taiwan Semi up just about 1.5%. And then while we're talking about chips, NVIDIA shares moving 1% higher in the pre-market right now. You can see NVIDIA shares actually accelerating almost 2% higher right now. Of course, the stock coming off the GT conference last week and a down week last week where NVIDIA shares traded about 3% lower. Also taking a look at some other Mag 7 stocks right now. You see Tesla right here. Best performing the S&P 500 in the pre-market, shares up about 3.5%, just over that. Some news from Tesla this morning. It was scheduled to begin its self-driving trial in China today. Reports are that's been paused. We're going to cover that throughout the morning. Also taking a look at Apple shares this morning, up almost 1%. Apple CEO Tim Cook also at that Chinese forum announcing a new almost $100 million clean energy fund in China today. Those are your morning movers. More Squawk Box coming right after this break.
A group of U.S. executives led by Montana Senator Steve Daines met with Chinese Premier Li in Beijing this weekend amid some strained relations due to tariffs and other issues. This is the first visit to China by a U.S. politician since President Trump took office. Join us now, Shahzad Qazi, COO of China Beige Book. You can never tell what's going on behind the scenes, but for the photo ops, it looked positive. Yes?
I think it was positive, but sort of meaningless.
Okay.
Nothing much came out of the conversation at all. It was built up as potentially laying the groundwork for a big Xi-Trump summit, and I just don't think that's happening anytime soon. It seems the probability is definitely faded of something like that taking place.
Really? At this point, overall, who is in a stronger position for bargaining in terms of tariffs? Is the Chinese economy? I see good numbers, and I hear the numbers are not quite what they appear to be, and that the United States, maybe it's because I'm hearing from people who live here, that we're in a stronger position at this point to extract what we want.
I think that, Xi and others are certainly questioning how serious the administration ultimately is on levying large amounts of tariffs and then sticking with them. So how quickly can we get them in a deal? But as far as levying tariffs is concerned, the Chinese economy is certainly in a place right now where they can absorb the blow. And all the excitement around DeepSeek and so forth and the flow of money into Chinese equities recently, I think, provides this confidence boost. So I think, the U.S. policymakers are looking at a pretty confident, I think, and strong Xi. They should keep that in mind in any conversations they have.
We just had a conversation with Eunice Yoon earlier this morning, who pointed out that while the readouts here from the Trump administration are that he's going to sit down with President Xi, that may not be the case. That's not in the readouts that they're getting in China, that there is some apprehension around that, and if there is any meeting, that it would have to be on President Xi's terms, especially watching what happened to Zelensky in the White House.
That's absolutely on point. I think from the Chinese side, a meeting may take place at the end of a big grand bargain if they can win that. But before that is obviously premature from their perspective.
Can China replace any portion of what they'd lose in terms of trade with the United States? I know they're courting other countries. Is that feasible?
Not to that magnitude for sure. I know that they're obviously excessively exporting out to developing countries and creating problems there now. But no, the U.S. cannot be replaced as a buyer, and which is why I think they will continue to subsidize their exporters and continue to help them as part of sort of trying to absorb the blow from another round of tariffs.
So then you can't go one for the inflation that Chinese tariffs would cause in the United States.
The inflation conversation is far more complicated than the simplistic idea that tariffs go on, inflation goes up for sure.
And that it's a tax on U.S. consumers. So in the end, do you favor confronting China with tariffs?
There's no question that the idea of leveling the playing field and confronting China is important. Tariffs are just one tool and one lever. This needs to be a broader strategy, including what we do in terms of investment at home and to make supply chains secure. But tariffs are certainly an important part of that.
Yeah, and then there's security and IT theft, or IP theft, and Taiwan, and spy balloons going across our airspace. I mean, and submarines off our coasts.
Yep.
It's frightening.
And fentanyl. Yeah. So there's a series of complicated issues that have to be dealt with. Trade, at the end of the day, is just one component of the larger issue.
Exactly. All right, Shahzad, thank you. All right.
When we come back, efforts to improve airline safety. The acting FAA administrator, Chris Rocheleau, is going to join us for an exclusive interview. That's next. We'll be right back.
WNBC.
Phil LeBeau is here this morning, and he joins us with a special guest. Hi, Phil.
Hey, Becky, let's bring in Chris Rocheleau, the acting administrator for the Federal Aviation Administration. Chris, I'm really looking forward to this interview. We've talked about doing this for some time. I want to start with the addition of new air traffic controllers, the efforts you're making there. You just closed your first round of applications. You announced that you've made some progress there. How happy are you with the progress that you're making when it comes to bringing in more air traffic controllers?
Well, thanks, Phil. Good morning, and thanks for having me here. So we just went through, as you probably recognized recently, with respect to a hiring surge at the Air Traffic Controller Academy out in Oklahoma City. Under Secretary Duffy's leadership, we put out a surge call, and we've had over 10,000 applications for the positions themselves. About 7,500 of those have been referred for testing. So, obviously our focus is to get controllers, the best and the brightest, into the academy and get them out to the facilities as soon as possible. So, obviously we're going to keep a close eye on that and make sure that every seat is filled for the upcoming classes.
Chris, in light of the initial conclusions regarding the DC mid-air collision, there are more than a few people who are saying, look, what can we take? What lessons can we learn from there aside from banning helicopter flights at Reagan National? And how can we apply that to other congested areas, other airports and segments where there's real congestion concerns?
Yeah, that's a great question. Obviously, immediately after the DCA midair, we put restrictions in place to make sure that fixed wing and helicopter traffic weren't in the same airspace. Based on the preliminary report by the NTSB, we have actually made those restrictions permanent. But part of our ongoing work is to make sure that we're looking at those areas around the nation that have a similar kind of makeup of mixed traffic. We're using advanced aviation and AI tools right now, machine learning, to look through the data to understand kind of what the makeup of the situation is there, to make sure that we're ensuring safety and efficiency in the airspace. But at the end of the day, what we want to make sure is that where we find that mixed traffic, we're tackling it as quickly as possible.
Is a place like Midway a possibility? I know that there are commercial jets. Obviously, we see all the airlines that fly out of Midway here in Chicago, but there are private jets that fly out of there too. You almost had a runway incursion there, about 4 weeks ago? And I think there's more than a few people who are sitting there saying, just keep commercial traffic at commercial airports. Don't allow private jets to fly out of the same area.
Well, so obviously the system is incredibly large and complex. We maintain safety and efficiency of that system every single day. We're going to have a commercial and business aviation, general aviation at multiple airports across the nation. Our job, of course, is to make sure that we're watching those operations, that pilots and controllers are doing their jobs, making sure that the system is safe throughout the nation.
Hey, Chris, you were just out in Renton, Washington, along with the Transportation Secretary, taking a look at where Boeing stands. What's your view of the progress they're making in terms of improving their operations?
Well, yeah, it was a great trip. Had a chance while we were out there, Secretary Duffy and I, to meet with the Boeing leadership. We met with the machinists, the engineers, and more importantly, I got a chance to meet with our frontline inspectors, our boots on the ground, to really get a sense of how Boeing's going with respect to their safety and quality plan. I will say I'm encouraged that I believe they're on the right path at this moment. Obviously, we're going to need to see sustainable progress as it relates to the quality of the aircraft that they're producing. But I think it was a very productive trip, and we'll see how things go in the coming weeks and months.
Could you see lifting the cap on MAX production by the end of the year, maybe by the fourth quarter?
Well, I got to say, having a really close look at what's going on right now, I'm going to leave that up to Boeing. Right now, we're going to make sure that they're producing safe aircraft, each and every aircraft. We're going to sign off in each and every one of those aircraft. As for a production cap, it's really going to be how they are able to sustain a quality build each and every time.
Chris Rocheleau. Chris, thank you very much for joining us today. The acting administrator for the FAA, joining us from the FAA headquarters this morning. Becky and Joe, I'll send it back to you.
Okay, great. Thanks, Phil. Coming up, 23andMe filing for bankruptcy. We're going to bring you those details next. And later, we're going to talk to Senator Darren LaHood for the latest out of Washington on tariffs, TikTok, and much more. Squawk Box coming right back.
Asset.com.
Welcome back to Squawk Box. I guess it remains to be seen whether we made a real low on, let me see what day this was. The S&P was, Becky, on that day, it looks like March 13th, 55.19. So what is that, about 12 days ago or so? We probably shouldn't understate that. If this was down 357, we'd probably be breathlessly telling you every 5 minutes that the market was down 357. We barely mentioned this today, but it is a pretty good rebound that we're seeing, especially after Friday. Did you see down 400 at one point?
At one point, no, I did not see that.
Because
It was on a
Austin Goolsbee came on with Leisman and was saying that some of the cuts might be pushed back a little bit based on, I don't know what, it's a dual mandate. I don't know which is really, is the economy really weakening? That's And is inflation really coming back, or is it not coming back? So they got both those things.
Some of the Federal Reserve cuts might be pushed back further in the year.
Right.
That's what I said.
And stagflation is starting to hit, but maybe we don't get either.
Today it's
because people say
the
market.
tariffs. Well,
Yeah.
today it's tariffs.
Today it
too.
is.
It's-
Today it is.
If
There's
the
no
tariffs
doubt.
are more focused,
But you can look at an S&P chart, and it's like this: tariffs on, tariffs off,
Yeah,
tariffs on,
every
tariffs
day.
off. So who knows which it is? But those are decent gains that we're seeing, especially Nasdaq up 271. Genetic testing firm 23andMe filing for Chapter 11 bankruptcy protection. CEO Ann Wojcicki has resigned from her position, but is staying on the board. She's been trying to buy back the company, but has been unsuccessful so far. In a post on X late yesterday, she said she's still committed to buy the company's assets. 23andMe had a $3.5 billion market cap when it went public in 2021, but it's now at about 50 million. Have you done this?
I did years and years and years ago because I was actually interviewing Ann Wojcicki and I wanted to try it before I interviewed her.
My daughter did it,
Yeah,
so I kind of know, and I'm adopted, so it's really.
there's a lot you can find
I don't know
out.
what the hell I am.
Yeah.
I don't know. Does it matter?
Well, it matters if you get to the point of trying to monitor your health down the road. If you're looking for
Yes.
any potential things that could show up, and sometimes based on your heritage and your genealogy, you can
Yeah.
find some things that you're more likely to contract and maybe alter your behavior. As a
I've
result.
found out a lot about health lately, and as you get older, it gets worse.
Newsflash.
Yeah. Exactly.
All right, when we come back, we'll talk about how the strength of the dollar plays into tariffs, inflation, and the markets. Right now, though, as we head to a break, let's take a look at the morning's pre-market winners and losers in the S&P 500. Tesla leading the way. It's up by 3.5%. It's followed by Freeport-McMoran at up 3%. Squawk Box will be right back. Welcome back, everybody. Economists and strategists are closely watching the latest tariff news and the value of the dollar as a result. Our senior economics reporter, Steve Leisman, is here. He's going to explain how the greenback figures into tariffs, inflation, stocks, and the Fed, and it's been something we've been watching a lot more closely recently.
In 90 seconds, I'm going to do this. The changing value of the greenback, another complicating factor in figuring out the effects of the ever-changing outlook for tariffs. The dollar shot up after the election, but has given back most or all of those gains, began declining shortly before President Trump took office and careened lower after that meeting in the White House between the president and Ukrainian President Volodymyr Zelensky. The DXY, that's the basket of dollar-related currencies, rose a bit last week, but is weaker again this morning. The dollar likely appreciated in anticipation of tariffs reducing imports. That makes greenbacks more scarce overseas. Then depreciated after Europeans, especially in Germany, decided to spend more on infrastructure and defense, along with a somewhat weaker outlook for U.S. growth. Peter Book for our Bleakley Financial Group, he says, a weaker dollar means American consumers will pay more of the tariffs than they otherwise would. The weaker dollar, along with tariffs, could make it more difficult for the Fed to address weaker growth with rate cuts because they're both inflationary at the margin. Dollar could also be reflecting shifting investor appetites for equities from overseas buyers. Bank of America writes that it's watching, quote, a potential realignment of portfolios away from dollar assets as the American exceptionalism thesis fades after years where U.S. dollar-denominated assets were the colloquial only game in town. Now, I've never been too excited about the dollar. It typically has offsetting effects on importing and exporting industries in the U.S. when it depreciates or appreciates, but tariffs in the pool of capital in Europe could be a different factor this time, Becky.
Yeah, a different factor, and one that big multinationals have to pay a lot of attention to. And then there have been questions about treasury purchases and where those are coming from these days, too.
And how much investors will be involved in the buying of U.S. assets. Goldman writing a piece this morning that says they expect U.S. foreign purchases to be about the same, a little bit less than they were last year, but they are major holders of U.S. equities, and the dollar plays, on the one hand, you say, oh, well, the dollar's going down, the value of my assets as an overseas buyer gone down. On the other hand, they're a little bit more on sale than they were.
Why wouldn't there be a stealth move to be comfortable with a lower dollar? Every single person we ask, and the administration says we don't want a lower dollar, we just want a stable dollar. They don't ever say they want a strong dollar. They say they want a stable dollar.
So you think there's a shift to what you're hearing in the rhetoric?
I do.
Well, look.
Why wouldn't it be better if you got $37 trillion in debt? Why wouldn't you want a weaker dollar?
If you care about the trade deficit, then
and the trade deficit,
a lower dollar should help your exporting industries. Those are being somewhat curtailed, or those gains are somewhat attenuated, perhaps, by retaliatory tariffs. So you want to be careful how all that shares out.
I feel like it's a conversation we've had with every Treasury Secretary. Though. They always
no, I know, but I think it's different. I think it's different.
But Joe's picking up something interesting here. That maybe they really do want a weaker dollar. The question becomes, look,
if rates go down, isn't the dollar going to be weaker? And he wants lower rates. There's no doubt in my mind.
There has been a U.S. advantage in terms of the differential. I didn't prepare the German, the Bund versus the 10-year, but that differential has gotten smaller, right? So that has been something that you'd be, well, I'm going to buy U.S. assets. I got a stable dollar. I got a higher interest rate. It's going the other way now, right? You've had this increase of rates overseas, and then you have inflation differentials that are slightly better in Europe right now than they are in the U.S.
Can't you attract capital if you force it in here with trade policy? Then you don't necessarily need a strong dollar to bring capital here.
You don't, but Joe, we've been the major magnet for global capital for a very long time.
And even if it goes down a little, we still will be.
We still will be. We're still going to be financing this deficit. Right. There's all kinds of stuff. I think there's 2 points. The one that I take away is that there are offsets to consumers paying tariffs. The stronger or the weaker the dollar, the more the consumer is going to pay, because it's not offset by the currency. Right. The other question becomes the impact of the dollar and the changing dollar on global capital flows. There is a big movement overseas right now, and we'll see how much that means for the purchase of U.S. assets.
I was going to say, and the purchase of U.S. Treasuries, which it comes back to that too, and there have been some net sales.
Just one last thing in response to Joe. Whatever you do, it should be stable.
Stable is good.
Right.
So Peter Booker wrote today, whatever you're going to do on April 2nd, let it be the last one.
Yeah.
It won't be.
It won't be, but that's what he's saying.
Multinationals would love a weaker dollar.
No, not necessarily.
Because of the tariffs?
No, because U.S. companies do business in the country where they do business much more than other companies do that, which is what I think President Trump is trying to get at.
Bringing home your profits.
You bring home your profits, you translate them.
Right, one of the greatest investors of all time just said I'm correct. So
How much?
on my staple dollar versus strong dollar.
I don't think Paul.
I don't know that we disagree.
I don't think she was arguing with you on that.
So there.
Did you just go give me a raspberry? Is that what you did?
Totally.
I did.
And then someone will put that on Twitter, I'm sure.
Steve, thank you.
Coming up,
Pleasure.
raising the heat on higher education. We're talking to the president of the University of Chicago about the pressure some universities are facing from the White House. Well, maybe don't have, pro-Hamas rallies on your campus. That might be a start. Squawk Box will be right back.
Insurance.
Welcome back, everybody. Columbia University will cede to a list of demands from President Trump's administration following a threat to halt the university's $400 million in federal funding. The university has agreed to ban masks, to give campus police enhanced power to arrest students, and to other demands as well. The Trump administration had moved aggressively to investigate anti-Semitism on campuses across the U.S., with a focus on Columbia in particular, following last year's on-campus protests. Joining us right now to talk about school defunding, free speech, and more is Paul Olivasados. He is president of the University of Chicago. And Paul, thank you for being here today.
Good morning. Thank you.
So let's talk about what's happening at this point. Columbia pretty quickly caved to the Trump administration's demands. I know that there have been a number of university professors who have asked you not to do the same at the University of Chicago, but where do you think we stand right now?
So first of all, let me say right now we're in a crisis of trust for higher education. And the way universities build trust or can rebuild trust is by showing over and over again that they're genuinely places of truth-seeking. And for us at the University of Chicago, that means we start from free expression. It means we teach our students to look at problems from different sides, to engage on issues where they have a difference thoughtfully, with rigor, being quantitative, with curiosity. Those kinds of things, which are embedded in the Chicago principles and institutional neutrality. The situation at Columbia is very concerning for two reasons. One is I'm very concerned about the many young scientists there who are working on important projects. They're working on important projects for them and for the country and its competitiveness. So I'm very concerned about what's happening to them. And what we see also is there are obviously threats to free expression that come from below, cancel culture, disruption of classes. Those things should not be happening at universities. But on the other hand, now we're also seeing that there can be threats to free expression that come from government intervention inside the university.
I mean, University of Chicago is in a very unique place, I think, because of your history, because of what you've laid out. I think back to 2016 and a letter that the dean wrote to the incoming freshmen that year that caught a lot of flack because you said that this was not going to be a school where there were safe places or worries about triggering students on campus. You took a step out and said, that's not what we're going to have here. But then I look at what's happened with some of the protests you've seen on your campus too. You had 5 students that didn't receive their degrees last year because they were involved in some of these protests. They all eventually got their degrees and kind of came out and talked some trash about how this shows that this was a complete win for them on those sides. The ADL has said that they have concerns. I think they gave you a D grade for protecting Jewish students on campus. So you're kind of in the middle, caught on both sides of this thing.
Well, first of all, let me say that we do allow protest on the campus. It's part of free expression and it occurs, but we draw the line at disruption and we've been very consistent with that. And I think we've done that such that students truly are learning. I will say the ADL also did say that Jewish life on the campus is actually excellent.
Yeah.
What they did say is they would like for us to make statements whenever other people make statements that are, offensive to them. And we have institutional neutrality. We don't make statements every day. That's part of why I think our university has such a strong free expression culture.
Columbia deserved what it got in this case. There are Jewish students that are afraid for their life at Columbia. You're saying that's different where you are. So suddenly the left is concerned with free expression for Hamas protesters. Didn't give a rat's ass about it for conservatives appearing on campus or for misgendering some. I mean, it's totally doled out depending on what their point of view is. So the liberal.
I can speak to our university.
I know you can, but I saw Larry Summers saying that. I'm not talking about you. I'm talking about Columbia, and you allowed conservatives to speak.
We sure do.
Not everyone did.
Well, so I told you we're in a crisis of trust for higher education.
Self-inflicted.
And the way back right. is for universities themselves, frankly, to come our way more, right. to be truth-seeking, and to allow all the different kinds of expression.
You don't think that the Harvard president, Columbia president, Penn president, you don't think that they all had reasons to lose their positions given their response to the Hamas protests and what happened to Jewish students?
I can't speak to what's happening with those universities. Why not? My position is to really say what I think is the way forward, to say what's the way forward for all of these institutions. Okay. And the way is to commit themselves.
It's not hard to say that they should have protected the safety.
Well, I definitely, look, that's what we do. I certainly believe that's the right way.
It's easy enough to say they should have too, and that it was probably well-deserved what happened.
Well, let's talk a little bit about the funding, because there are some big concerns about the funding getting cut. You mentioned for scientists who are there, and this could gut the scientific study that we see at American universities and institutions.
I'm deeply concerned about it. So let me give you an analogy. Let's say that the United States we're in a geopolitical competition to have scientific, technological, and therefore ultimately economic preeminence. And if we think about the United States over many decades, we're a little bit like a city where we field many sports teams, and every year we're at the top. We win championships in every area of science and technology, every single year. We're at the top globally. That can be at risk if young people don't see a path for themselves where there's funding and support for them to follow their careers. And I can just give you example after example, at least at my university, of some of the amazing things that the young people are doing. It's inspiring, and we want to keep them in the game.
Will the universities that have deep endowments, like the University of Chicago, step in to keep that funding until this gets settled and resolved, or are there going to be cuts like we saw at Johns Hopkins in
Look, at the moment at the University of Chicago, we're able to continue our work, but of course we're deeply concerned about what we see that's going on elsewhere. I want to give you two examples of things that we do with our endowment, which I think your viewers will care about. We now have received some wonderful gifts that enable us to have 10% of our student body come from rural communities, 10%. That's an astonishing percentage, and I think they bring viewpoints to the campus that enrich us. At the same time, here's another gift we just received in September. It's a gift that enables us to create our Chicago Forum for Free Inquiry and Expression. It's an incredible place. It's now sustained by that gift. So the endowments are enabling us to do important things. They're not just there to kind of pick up from other things.
Did we move to Doge? Is that what we're on now, or were you talking about what happened with Columbia?
No, this is the 400 million. This is
the 400 million.
This is an NIH funding, actually.
No, I understand, but was it from the? It was levied against Columbia because of
the halt of funding.
The halt of funding had to do with the violent Hamas demonstrations.
Very well. I'm just saying that there are scientists in many laboratories in Columbia that are now young people who are working on really important.
But if Columbia gets its act together, the funding comes back, doesn't it?
I hope so.
I was talking more about the NIH funding.
I thought you were talking about
There's been a freeze on it.
Wasn't Hopkins Doge?
Well, it was Doge, but it was also the freeze of NIH funding that was for funding. Because they're putting a freeze on everything until they go back through, and there's been an argument about how much the university can take for its general funding purposes out of all those NIH funds too.
And not due to the Hamas.
Not due to the Hamas.
But all I'm saying is, as a country, we have an immense interest that young people come into science and explore problems with great ambition. And whichever way funding gets cut in those areas, the loss will be potentially a generation of people who won't participate, which will weaken us as a country.
So as long as they can get to class without worrying about their lives, they'll be able to conduct their research.
I'm not defending what happened in Columbia. Come on.
That's not the
Maybe they're two different things, but I don't see why you can't condemn the. Okay, but Columbia is losing some of the funding because they don't make it safe for everyone.
Well, they've agreed to these demands from the Trump administration, so they probably
and
won't get
they're
$400
getting
million
criticized for
funding.
agreeing with the demands.
Every university should be a place that allows truth-seeking and that does not allow students to be disrupted in learning or harassed or treated.
Exactly. But it's not the way it is right now.
The universities that aren't that way should be fixing themselves as fast as they can.
There you go.
Because the alternative where the government comes in and intervenes and starts saying who's going to teach what and who the professors are and so on, I don't think that's a future that we want.
Paul, thank you very much.
Thank you very much.
Squawk Box will be right back. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, new tariffs from the Trump administration expected early next month could be more narrow and targeted than previously thought. We'll see. Jack Ma-backed Ant Group reportedly used Chinese-made chips, including those from Huawei and Alibaba, to develop new techniques for training AI models that it says would cut costs by 20%. Sources tell CNBC that the breakthrough is part of Ant's move away from NVIDIA chips to ones that are made by AMD and China-based firms. And Bayer shares are falling sharply in Germany after the company was ordered to pay $2.1 billion by a Georgia state court. It's the latest legal defeat for the company in a case about its Roundup weed killer. The verdict includes $2 billion in punitive damages and $65 million in compensatory damages.
Gold prices this morning back above 3,000. 3,030, that's got to be close to an all-time high. Joining us now with more on gold and the commodities market, Urs Der Zuaz, industrial principal. It's really kind of across the board. We were talking, Urs, about the dollar, whether or not there is a change in the strong dollar policy, but for some reason, a lot of commodities are in bull markets. Is it all the same thing, or is it specific to each individual commodity?
I think it's specific, and good morning, guys, and hi, Joe. I think it's specific to commodities in general, individual commodities. Gold itself is obviously a great store of value. It's going to be there for a very long time. But there's got to be better trades right now when you're getting in at all-time highs. Gold seems to be high on the tariff hysteria, which is, as we may be thinking today, more targeted, and it may be transitory, although I know that's a dirty word, but there's got to be better trades than buying gold at 3,000 right now. The biggest concern, I think, is China deflation, and we have a tremendous amount of geopolitical tension that is separate from tariffs, and tariffs make China deflation worse. So I would focus on China deflation as any sort of trade right now.
That sounds bearish, doesn't it?
Look, people are buying gold because they're nervous, right?
Not gold, for other commodities.
Other commodities too. I mean, China's the biggest consumer of dry bulk goods, so they're the biggest consumer of iron ore, coal, and grain. Now, grain, that's still going up slowly, but that's because of population, right? But coal and iron ore are sort of sideways for them. It's been spurred lately, but Chinese stimulus has not worked to stem deflation. There's a lot of nerves about prices going down. Nobody really wants to invest. Consumers in China are very nervous, largely driven by the COVID crackdowns that they experienced for years. They're keeping money in their mattress. And then if prices are going down, they're waiting for prices to go down further. So I would be very careful about watching China and stop worrying about tariffs. If anything, tariffs make China deflation worse and puts a tremendous amount of pressure on Beijing.
What's the most important side of the oil markets right now? Is it drill, baby drill? Is it that if there was a resolution of Russia and Ukraine, would Russian oil be back on the market, or is it already back on the market in the what you refer to as the dark fleet?
Yeah, no, Russian oil never left the market. There are sanctions, but about 20 to 25% of certain tanker classes are just simply moving Russian and Iranian oil to China. They shut off their transponders and move the oil on old ships. First of all, those ships are dangerous, but secondly, because of safety concerns, but secondly, that oil never really stopped moving. If we wanted to stop that moving, we can pick up the sanctioned ships and get them off the water. But the United States has not been doing that. The Trump administration has not been doing that as of yet, but there may be moves in that direction. He's been talking a lot about shipping. But Biden certainly wasn't doing anything about it. And so that has never really stopped flowing. It's sort of a ridiculous farce to think Russian oil isn't on the market.
Great. Okay, Urs, keep an eye on all these things. You're going to have a job for a long time, I think, Urs. It's very interesting time to do what you're doing.
Look, instead of burning Teslas, we might want to buy some rather than gold.
I agree. All right, very good. Thank you.
Take care.
All right.
All right, let's get to Mike Santoli. He's standing by at the New York Stock Exchange. And Mike, we're looking at a pretty decent rally this morning.
Yeah, Becky, a little bit of a tension release. You know, sort of late last week and over the weekend, I was writing about how you have to be aware of the moment of peak uncertainty might be close by when it came to tariffs. We spent a few weeks in this correction, essentially trying to handicap what the extreme case is for tariffs, at the same time wondering if the Fed was going to be there, at the same time thinking the economy might be quickly deteriorating, and we maybe got some reassurance on all those fronts. Now, still a lot to prove for this market to say that that low a couple weeks ago was the real one. We're bouncing off this level, which exactly was the same as the peak from mid-July. I keep pointing this out because it was the moment of maximum soft landing confidence and Magnificent Seven dominance in the market. So we're looking at about a 1% gain at the open today. That would get us to above last week's high, around 57.30. The 200-day moving average is 57.50. So we're kind of in this zone of, okay, let's go to the next waypoint and see if things can hold from there. Now, a big downside pressure point of this market has been the so-called momentum stocks. This is a whole investment characteristic, a cluster of stocks that really led the way higher, and this ETF essentially encapsulates that strategy. Big plunge, really driving the S&P 500 down, really not a tariff-influenced group of the market. And you see they've actually stabilized here. So stabilized, tried to make some progress. That at least removed some pressure, this idea that the crowded hedge fund favorites in momentum maybe have worked their way through. We are also entering the last week of the quarter. Sometimes you look at asset allocation moves, stocks versus bonds. Obviously, bonds have outperformed. Total bond index is up on a total return basis year to date, about 2.5%. And then you have, of course, this losses in the total stock market index. That can create some mechanical rotation into equities from bonds for people who do rebalance quarterly. So, you know, firmer setup here, but you have to kind of monitor exactly how much oomph is behind this bounce today, guys.
Yeah, it was interesting. We were talking to Stephanie Link earlier, Mike, and she said that she had 9% in cash a few weeks ago, and she's down to 3% in cash now. So she deployed 2/3 of her cash. That was a pretty substantial amount of cash relative to the portfolio over the last couple of weeks. Yeah.
I mean, and also you've seen all these measures of hedge fund exposures really come down. Essentially, you know, they have a lot of buildup of short positions. So the point being that, you know, it's a cleaner look in terms of how people are exposed to this market, and you know, we'll see if the fundamentals can support a more positive view.
Okay, Mike, thank you. Joining us right now to talk more about the markets is Oksana Aronoff. She is the head of market strategy for alternative fixed income at JP Morgan Asset Management. And what did you think of what you're hearing, this bounce back that we're seeing today? Are you feeling more calm about things, about the questions when it comes to tariffs, about the questions when it comes to whether we're heading into a downturn or even a recession in the economy?
Look, I think the uncertainty remains, and we're going to continue to sit in this chop, both in terms of treasuries and the equity market probably as well, right? Treasuries have been essentially in a range with a lot of volatility in this sort of low fours, high fours. I think they're going to lunge back into the high fours given some of the policy that's coming down the pike, but it is still being written. So uncertainty is not a friend of animal spirits, but one thing that we're seeing, and my broader point always is that, look, our job is to be prepared for a variety of scenarios. Look how the narrative has shifted from recession a couple of years ago, right? Didn't materialize. Soft landing, and now it's kind of moving towards, oh, maybe a slowdown and higher inflation, so maybe the odds of stagflation are picking up. And that's not outside the realm of possibility, and our job is to never dismiss anything and be prepared. And I think that the Fed is certainly in between a rock and a hard place increasingly, because if we do see a slowdown and we continue to see this elevated inflation backdrop, what do? Do they cut to address the growth concerns? Do they remain stay put, or even hike to address inflation, depending on what path it takes? Very difficult position that Jay Powell is in, and I think some of it is of their own making. They started the cutting cycle too soon.
So the hope for the markets is that you're going to see the Fed swoop into the rescue if the economy turns down. You don't think that that's likely to happen?
I think those days are behind us. I mean, it would take a very dramatic kind of meteor slamming into the economy for the Fed to come. Your garden variety recession, I think those days are behind us, because when inflation is alive and well, as it is today, the Fed's hands are tied to deliver the kinds of cuts and the kinds of support that it's been able to deliver in past downturns, including, when we think about what the administration is doing in terms of tariffs, and we expect that adds, roughly 0.5% to the inflation that we're currently running. When they were implementing some of these similar policies in 2018, inflation had a 1 handle on it, and now we have a 3 handle on it. And the Fed is always beholden to the inflation environment.
So if that's your thesis, what do you tell people to do right now?
So, look, at most, the Fed could cut once or stay put here, but it's just that the runway is very, very limited. And so my broader point is always we need to really evolve, particularly on the fixed income side, right? Because the equity investors have over the years been used to very volatile markets, significant losses, right? Price losses, et cetera. So that part of the portfolio has evolved significantly due to that. On the fixed income side, which investors rely on for stability, preservation of wealth, and all of those things, we haven't really gone through that evolution. And I think we need to really be prepared to be much more tactical. So, for example, in our portfolios, when the 2-year got up to 5%, we were buyers of that. We're not buyers of it necessarily now because it's just sub 4.
Yeah, it's below 4%.
Have liquidity at the ready. You were just talking about the fact that there are times to deploy it, and I think price returns, the kinds of price returns that bond investors got used to over the past 10, 12 years since the financial crisis are not there. And where you buy something really matters. So have liquidity at the ready to participate, especially given the amount of credit risk in portfolios. I think a credit reckoning is upon us. We are seeing an unprecedented amount of defaults for a non-recession part of the cycle. They're not sort of big, headline-grabbing defaults, but we're seeing a lot of companies default. They're just small companies. So in terms of number of defaults, that number is very high. In terms of the dollar value, it's low because the smaller players are finding it possible.
But that's the warning signs.
Exactly, these are the warning signs. So be tactical, have liquidity at the ready, evolve your portfolio construction.
Oksana, thank you.
Thank you.
We're coming up with less than 2 weeks from the deadline for the ByteDance to divest TikTok US. We're going to talk about where things stand in US-China relations with Congressman Darren LaHood of Illinois. And then later, geez, I feel bad for him. Last time I read he was coming out, he was a senator. And then later, Dan Niles had been expecting the Mag 7 to underperform despite ramping up AI CapEx. His thoughts on the sector later in the hour. Squawk Box will be right back.
and make it count.
We're just 12 days away from the deadline for ByteDance to divest TikTok, and so excited in the U.S. Joining us now, Congressman Darren LaHood of Illinois. Representative LaHood sits on the Select Committee on the CCP and also is from Peoria. Your district is in Peoria. Whenever we have any questions about anything and how it will play across the country, we can I have you, before you leave, can I get your contact information?
Absolutely.
For will it play in, what will play in Peoria for TikTok, do you think?
Well, if you go by the law that we passed in Congress, a bipartisan law, we need full divestiture from ByteDance, and that's what we're working on. That's what the intent of our law was, to make sure that China is not using the data of Americans. That's number one. Number two, the algorithms that the CCP use as a part of TikTok, we need to have a divestiture from that. So I really look at this through a national security lens, Joe, and that's what the Congress voted for in a bipartisan effort. So we have till April 5th to see what the Trump administration comes up with.
Congressman, I don't want to be cynical, but until TikTok helped the president win, what is it? Was it I guess re-election, even though they weren't consecutive. But suddenly it seems like the entire administration has tacked a different way on TikTok.
Well, we'll see what happens between now and April 5th, but the law is the law. The Supreme Court has said that. They've given the Trump administration some time on this. But let's remember, Joe, I start off with the premise, China has a plan to replace the United States, and they're working at it every single day. They want to beat us technologically, militarily, economically, diplomatically. That's not just me saying that. CIA Director Ratcliffe has repeatedly said that. And when we voted on TikTok in the Congress, remember who voted for it? Marco Rubio, J.D. Vance when they were in the Senate, Elise Stefanik, Mike Waltz, my colleague on the Intelligence Committee. We have to get this right. We've given them a lot of discretion, and the president has put the vice president and Mike Waltz in charge of this. We'll see what they come up with.
Do you think there was any paranoia in the original bill itself? Because I watch what's on. What I don't understand is it that we're worried that they're collecting information about our country and our youth, or is it they're actually putting things on there to try to undermine our youth at this point? Because you could take any U.S. Social media company and probably tar them with the same brush in terms of not being so great for society and our youth.
Well, Joe, I think it's two things. Data is the future. If you talk to anybody in technology, it's data. And having the CCP to have a backdoor to everyone's data, privacy data, health data, financial data, having the CCP, the Communist Chinese Party, as a part of that is just wrong. We can't allow that as an adversary that's working against us in so many other areas. Number two is the manipulation of information that you see on TikTok. You're never going to see any criticism of Xi Jinping. Right. You're never going to see anything about the independence of Taiwan. You're never going to hear anything about human rights violations in Tibet or what happened in Hong Kong. It's a manipulation of the data. If you go to China, it's a surveillance state. They monitor everything. They censor everything. If that's what we want in terms of TikTok and ByteDance, that's what we passed the law in the beginning, or in the Congress on. That was the genesis of it.
But in terms of just free speech advocates, if they don't divest, do you shut down TikTok? That's where people think it's a private company. You're actually shutting it down because you don't like, whatever you're seeing on TikTok.
Yeah. Well, that's the legal framework that we're in right now. But the law is the law, and what we've asked for is a full divestiture of that. So we want to continue with TikTok. We want to continue with free speech, but ByteDance has to be eliminated from this process, because that is the back door to the CCP. That's who they're being subsidized by, and that was the intent of the law that we passed.
Then how does it play? What's going to finally happen, do you think? What's the best outcome for everybody involved?
Well, I think putting the Vice President Vance, Mike Waltz in charge of this, I know they're working with some wonderful U.S. technology companies right now. They're in the middle of negotiations on that. They have till April 5th to do that. I have full confidence in the President and J.D. Vance to come up with a solution that protects the American people, but also, again, divests from ByteDance, which is what we all want.
You made the point off camera that there was a time when Peoria was very, very conservative. So that's where the expression came from. If it will play in Peoria, you've got like the most conservative place. It could play anywhere. I mean, it's changed from that, but we still use that expression, right?
We sure do.
About playing in Peoria. How is Doge playing in Peoria? How is tariffs playing in Peoria? How is the forced deportation of criminals that are here illegally? How are all those things playing? Because we hear that Republicans are avoiding town hall meetings because there's so much backlash, but then I look at who's actually there, and a lot of the people that are there are not Republicans in the first place. But how is it playing? How are all these things playing in Peoria, in your view? And you're a Republican, I guess you'd say they're playing great.
Sure. Well, let's take Doge, for instance, Department of Government Efficiency. What I tell people, it would be a much different conversation, Joe, if we were $36 trillion in surplus. We're not. We're $36 trillion in debt. So having a conversation about how we make government more efficient, more effective, more accountable, how you get rid of waste, fraud, and abuse is a good thing to have. This year, we're going to spend $7 trillion of taxpayer money. We're only going to bring in $5 trillion. We can't continue this deficit spending. And so Doge, I think, can be somewhat controversial, but when you tell people you have a different set of eyes coming in and streamlining government, that should be a good thing.
How come the Republicans haven't been able to do that in Congress with the budget? Like, why not pare back? And it's not just the Republicans, it's the Democrats too, but how come Congress hasn't been able to pass more balanced budgets and get their arms around this?
So, great question, Rebecca. I mean, we haven't had the fiscal discipline to do that. We keep spending and spending and spending. I call it reversing the curse. And this is why we got elected. This is why we have the House and the Senate and the presidency, is to reverse that curse for our kids and our grandkids on that. So this is our opportunity to do that. Doge is one step in that. And I remind people also, everything that Doge comes up with, 95%, is going to have to be voted on by the Congress. And we have an obligation and responsibility to do that. So I think when you explain it that way and you tell the American people that we're going to try to reverse this, they're acceptable of that.
Will Congress vote to support those issues that Doge is bringing before it?
We'll see. That will be the controversial part of this. Elon Musk has till July 4th to kind of come up with his proposals. Once he does that, the tough part will be Congress implementing a number of these cuts. But we have to do that.
All right, Congressman, have you thought about running for Senate at some point?
I love my
job. You
love
the job. How many terms have you?
I've been in for 9 years. I love representing the 16th District of Illinois. It's a great district.
What a diverse state Illinois is in terms of political leanings, is it not?
Yes, it is. We're I would say a purple state, but we got to work on making it a little bit more red.
You really think it's a purple? The governor doesn't think it's a purple state.
Well, we'll see. President Trump did remarkably well there this last election.
He did. Okay, Congressman, thanks.
Thank you.
Come back.
Thanks.
When we return, developers starting to see higher construction bids on fears of rising material costs. Robert Frank's going to join us with that story and talk about what it could mean for high-end buyers. And later, why the Mag 7 may be in AI trouble. Dan Niles will talk tech stocks. Squawk Box will be right back. tariff fears putting pressure on real estate developers as construction costs are moving higher. Robert Frank joins us right now with more on this story. Good morning, Robert.
Good morning, Becky. Good to see you. Well, building contractors already raising prices as much as 20% on fears of tariffs, and that could make housing even less affordable. The CEO of Related Group telling me that general contractors and subcontractors are hiking prices in anticipation of further tariffs.
We're seeing subs throw in additional cushion into their numbers, anticipating tariffs.
Is it like 5%, 10%, 20%?
No, it could be as much as like 20%, depending on what material they're getting from what country.
Raising prices.
Yes.
The National Association of Home Builders estimates that tariffs on lumber, steel, aluminum, and other building materials could raise the cost of a new home by as much as $10,000. The trade wars with Mexico and Canada also hurting potential sales. Related's chairman, George Perez, told me that some buyers from Mexico and Canada are canceling contracts to buy condos in Florida.
We had a project in which we lost, I think it was 7 or 8 Canadian and Mexican buyers that are ready to sign a contract, and when all these things came from the tariffs, and they felt that they didn't want to buy, you know? So, you know, is that uncertainty?
You can watch the full interview with the Related Group on CNBC's Inside Wealth. Go to cnbc.com/insidewealth. That's cnbc.com/insidewealth. We forget that Canadians are the largest foreign buyers of U.S. real estate. They purchased $6 billion worth of homes last year. So this will be a question of which they dislike more. Most of them buy in Florida. Do they dislike Trump or Canadian winters more? This will be the question.
They're also the biggest tourist group visiting New York City.
Where does Mexico?
Mexico's the third largest.
Who's second?
China. China.
So I know I've heard Vail and other places are.
So between China and Canada, $9 billion of U.S. real estate are sold to buyers from those two countries every year. So especially a place like it's Florida, Arizona,
Mexico,
and Texas.
Is Mexico's third in Florida too?
Yeah. So it's especially in the condo market, it's an important market.
I thought nobody was buying Florida condos though because of the reassessment issues that are going
these
on.
new Related Group is a developer of new buildings.
Yeah.
It's the old buildings that are
wants.
tough to sell, but the new buildings are still going strong. And Mexican Canadian buyers are a big part of that building. And then you add to that construction costs and what that's going to mean for projects and financing. Again, at the very high end, a 20% increase won't really matter.
Yeah.
But for project costs, lending, the finances, it could be a big deal.
I think cold winters trump. Don't you think?
I think weather is a powerful motivation.
He'll be
for
back.
people, but
Hey.
Thanks, Robert.
Thank you, guys.
To boot time. Up next, South Korea's Hyundai making a big investment in America. Plus, Chicago Fed President Austin Goolsbee telling us on Friday that he sees lower rates 12 to 18 months from now. But it was the T word that made markets jittery. I don't know. Don't try to guess anymore. In the morning before ending in the green for the trading session. Steve Leisman, Rick Santelli are going to break down the growth path for the economy. Squawk Box will be right back. Hyundai making a big investment in America. CNBC's Seema Modi joins us now with more. Seema, good morning.
Hey, Joe, good morning. We are hearing from sources that South Korea's Hyundai leadership team will be at the White House today to announce a $20 billion investment in the U.S., $5 billion of which will be used to build a plant in Louisiana that will hire about 1,500 workers and produce high-quality steel for the cars that it manufactures here. The announcement will be made by Hyundai's chairman alongside President Trump and Louisiana Governor Jeff Landry. It's the latest foreign player following TSMC and SoftBank to make that trip to Washington and pledge U.S. onshoring in hopes of avoiding a trade war ahead of the April 2nd reciprocal tariff deadline. Hyundai CEO Jose Munoz recently saying the best way for Hyundai to navigate tariffs is to increase localization. So that's what they're doing here. It is a top seller of electric vehicles in the U.S., competing directly with Tesla, with plans to open a third automotive plant in Georgia this week, guys.
Seema, is this all new? Because I had people, people always have an axe to grind that some of the provisions in the IRA had the Louisiana plant already in the works. Do you know is there anything to that? Because then I saw other things that said it was purely based on anticipation of some tariffs from Trump.
I think you're absolutely right. This Louisiana plan has been in the works for some time, but now being sort of fast-tracked here in a race of the April 2nd reciprocal tariff, where countries like South Korea are trying to do whatever they can to get around it, and now using this $5 billion investment in Louisiana, upping the ante to say we'll put $20 billion altogether into the U.S. to avoid and dodge tariffs, Joe. So overall, the trade story is certainly picking up speed here and pushing more countries to make these bigger investments.
Seema, success has many fathers, but failure is an orphan. Did you know that?
Good one.
Like that. Yeah, it is. Everybody taking credit when something good happens. Thank you. Markets reacting to new reports. Reciprocal tariffs scheduled to start on April 2nd. May be rolled out in a more targeted way. Tariffs on autos and semiconductors are not expected to be scheduled next week, according to reports. On Friday, Chicago Fed President Austin Goolsbee addressed the tariff impact on inflation, and it was right here on Squawk, and you're going to find out what the T word is.
At the end of the day, remember, imports are only 11% of GDP. So one-time tariffs that are not followed by retaliation and that do not spread out of what they're initially applied to, they're more likely to be transitory and on inflation, and the monetary policy would look through it. Now, you should always be careful whenever you're saying something is theoretically going to be transitory. We learned through the pandemic.
CNBC's Steve Leisman and Rick Santelli join us now. Well, that's not why the markets sold off almost immediately, and I want you guys to give me your take on what it was that Austin said. Hey, Rick, Steve, I've already had it on. What do you think Goolsbee said? Did he say longer, or it'd be later that the cuts would be coming? Was that it, Rick?
Yeah, I think that's it. I'll be quite frank with you. When I heard it and when I hear it again, I think it's spot on. It's some good tariff honesty, in my opinion, although it does make me cringe when I hear anybody associated with the Fed use the word transitory, but I think he's pretty much got it. I'm not exactly sure. Markets do a lot of different things for a lot of different reasons, and I'm not sure what it gravitated to, so I'm not sure I have a great answer. I look at what's going on today, though, real quickly, and we have a lot of green in the equity space, and we have interest rates moving higher. And once again, that pairing is not a bad thing. I contend that we'd rather see interest rates more on the firm side, more market-driven, and at a time where potential negative aspects of what tariffs may bring down the road is more left to a reality of the future and trying to discern the marketplace. You know, uncertainty isn't a horrible thing. Many experts have been talking like there was a time where there was no uncertainty in the markets. I would like them to point out that exact date to me.
We still, Steve, we still want to mainline those interest rate cuts. I mean, wouldn't it be good if we didn't need the cuts?
It would be good, definitely.
For both inflation and for growth. If we didn't need any cuts, it means growth is fine and inflation's not bad, right?
Oh, that's true. I have a slightly different take from Rick on Goolsby. I think there's two issues that are before the markets right now when it comes to the Fed. The first is when they can cut, if they need to cut to address inflation, to address weaker growth.
Yeah.
And the second thing is if they can cut, right? So the if is dependent upon it being judged to be transitory,
right.
And that leads you back to the when. And I think what Goolsby said that gave a little chill to the market was this idea of it's going to take us a little bit longer to figure it out, right? So you have the thing pass through the system, and there's a bunch of reasons, Joe, that would give the Fed pause here. And if you look at, well, why would the Fed hold back at all? First of all, you have inflation above target. Second of all, you have this recent run in inflation. Then you have this mixed response right now in terms of inflation expectations. The surveys are not doing so great, and the market-based expectations are doing pretty well. They seem to be pretty stable. So a kind of mixed picture out there. And what was the phrase that somebody said that when you go into a dark room, you move more slowly? And that's where the Fed is. And Rick's right. There's always uncertainty. You just have this kind of artificial, man-made uncertainty being introduced to the market.
Rick, you...
And Joe, you've said this many times, Joe, about inflation. You know, the inflation numbers that are being acknowledged, I was worried about them a year ago. The sticky last mile of inflation is nothing new. When I hear Fed officials talk, even Steve, even you right there, making it seem as though this inflation knowledge that we have is something recent. It's not recent. We've seen spongy 2.5% to 3% year-over-year inflation numbers on pretty much every form and every number that measures inflation. So really, very little has actually changed in the marketplace outside of a new administration and a lot of uncertainty in the future. With respect to the economy at large, it's the same issue. Is overspending going to continue to play a positive? Have we kind of run out? Is the new administration going to pull money that's unspent? Has the economy have enough organic priming of the pump to last on its own? These are all somewhat old questions, with kind of charged up now with a little bit more uncertainty. That's really the way I see the world, and I think the green in equities of late is a good positive. And the rest of the world, the fact that this president might have woken up Canada and Europe, is that a bad thing? I read the Journal today talking about 2 or 3 investors that don't want to invest in the stock market anymore. It was the craziest article I ever read.
I don't disagree that the inflation has been a little spongy. My only point with that is that it has a delimiting characteristic in terms of the Fed's ability to respond. It doesn't. It means if you had inflation at target, if you had inflation expectations under control, then the Fed could easily, without looking over its shoulder, address economic weakness.
Yeah, you hear that from a lot of places, Rick. The other day I saw something on the Drudgington Post. All Republicans don't like something. I can't remember what it was. They had Lisa Murkowski, and they had an unnamed Republican source. That was their, probably Adam Kitzinger or something like that. Hey, if you know that you're in Chicago, Rick, Austin Goolsby has grown into that job. Hey, do you remember how he used to be when he was like sort of just an Obama?
And you know where he's from, Joe?
Where?
University of Chicago.
No, I know that.
Who you gave a hard time to this morning.
Oh, that guy. Jeez.
But he's from which has the great economics department.
I don't
of all
want
time.
just call.
It's a great
if
economics.
Columbia needs to be.
No, he's grown into it. He doesn't seem as political as he used
That's
to
what
be.
I'm saying.
And I
That's
think
what I'm
a
saying.
big
That's what I'm
positive.
saying.
Absolutely.
It must be hard for him. It
Let's
must be
call
hard
it
for
what
him.
it is.
Yeah, it must be hard for him.
Yeah,
He has a job
to be
to
a
do.
But he was so good at being
to be a Fed
a
official,
Democrat.
he
He
needs
was
to
good
look
at
at
much
the
of the work.
variables in an unvarnished way. Yeah, I'm
Yeah.
impressed.
I
really
think it's a
am.
good example
I'm
of how
impressed
you
too.
can leave
I'm
your
impressed.
you can leave your political card at the door when you go into the Fed.
Good. Okay.
And I think look at Adriana Kugler. She's another one who might have been expected. There is nobody who has come onto the Fed from a Biden or a Trump
Oh, really?
administration appointee
Hey, Rick.
who to me. We're going to finish stuff.
Yes.
Can you say Janet Yellen?
Wait, say
Can
that
you
again?
say Can you
No,
say
but on
Janet
the Fed,
Yellen?
I think she
What?
was super
Absolute. Oh my
political. She
God.
knew.
Yeah, I'll
Rick,
tell you
was
what.
she political?
Listen, I was never a big fan of Janet Yellen, so you know what? I'm always very honest.
Through
I think
and through.
she's a
Right.
great
Well,
civil
Brandon,
servant.
well, Brandon,
She's
what was
done
your
a lot of
inflation record,
jobs.
John?
She tries really hard. She just.
What was her
Remember when
in
she
my
said that
opinion, she's not the
biotech
kind
had
of leader the
peaked or
Fed
something?
needed.
Remember that?
But what was your inflation record?
I
It was really good.
okay.
What was your growth record? It's okay.
I mean, inflation.
She kept rates at zero too
40
long,
years.
even though she actually
People's
raised it.
records
Too
for
long, but what was the
people's
impact?
records for 40 years was very good.
What's that?
Look, one thing
People's
that Janet
records for
Yellen-
40 years
one
was
thing
very
that
good.
Janet Yellen really was fighting at the end of her term as Treasury Secretary was dumping from China, like all the dumping that was coming in, and that's something the Trump administration has picked up too. That's a huge part of the
I
conversation.
remember
I thought
all
she was too
interviews.
political at
All-
Treasury, by the way. That was my opinion. I don't think she was political at the Fed.
Okay.
I wish she had that one coup removed from the politics.
Yeah, the
of
Dow's
Biden
up 400
administration.
points now.
Dow's up 400 points
Nasdaq's
because
at
of you and Rick.
12.
It's you.
Because
Let's keep talking.
probably.
Let's keep talking.
Probably. All right. Thank you, Rick and Steve.
We are continuing to watch those futures climb through the morning. You saw the S&P futures up by close to 70 points now too. Up next, we're going to talk tech stocks and where you should be putting your money to work with tech investor Dan Niles. Right now, though, as we head to a break, take a look at the pre-market winners and losers on the NASDAQ. MicroStrategy is leading the way. It's up by 4.8%. AppLovin up by almost 4.5%. Then you've got Tesla up by 4%. And AMD up by 3%. Biggest decliner right now, AstraZeneca down 1.7%. We'll be right back.
Orlando Resort.
Welcome back, everybody. The tech sector having a few rough weeks. The NASDAQ trailing off since mid-February. It's now down about 8% just since the start of the year. Much of that pressure coming from the Mag 7. Joining us right now is Dan Niles. He's founder of Niles Investment Management. And Dan, I know you started the year without liking any of these Mag 7s. You were worried about a lot of different issues. Is that still the case?
Yeah, unfortunately, Becky, that's still the case. And the Mag 7, to round it out, are down 13% year to date on average. And I think it's a mistake to think it's a problem with tech stocks in general, because if you go overseas and you look at the China internet names, those are up 22% year to date if you look at the K-Web, for example. And I think it's also a mistake to assume this is just all tariffs affecting them, because they get affected the least to some degree by the tariffs because they don't sell that much in physical goods relative to the rest of the market. And if you look at sectors like staples or materials or industrials, those are all flat to up. And if you look at the MSCI All Country World Index, excluding the US, that's up 8% year to date. So this is a problem with US large cap tech stocks because their estimates have been going down, and in some cases from the middle of last year for the top line. And if you look at Q4 results when they reported, 6 of the 7 Mag 7, those estimates went down for the subsequent quarter. And so that's really the issue.
You know, the conventional wisdom is that CapEx spending going into AI, going into a lot of those big names has not slowed down. But you take issue with that conventional wisdom.
Well, math takes issue with that conventional wisdom, not me. So if you look at Microsoft, for example, which is the biggest CapEx spender out there, they're going to spend over $80 billion this year. You know, people look at that and they go, wow, you know, fiscal year 25 CapEx this year is going to be up over 50% for Microsoft. And you get all excited and you go, wow, that just shows CapEx demand is strong. If you look at it on a sequential basis, because remember, Microsoft's fiscal year ends in June. On a sequential basis, CapEx was growing about 16% on average each quarter of last year. They have guided to flat sequential growth for the next 2 quarters. And so that's why, and you can see that in a lot of the companies, whether it's Amazon or the other big names out there. And so it's just looking at the math, not me, and you go, well, that's slowing down. And then you look at estimates for what revenues are supposed to grow at, for example, at a company like NVIDIA, where investors have revenues growing at about 10 to 11% each quarter sequentially for the next 4 quarters, and you go, there is a mismatch there. But I do like certain areas that are related to AI.
Can I just wait before you tell us what you like, just NVIDIA will say that extra spending growth is going to come from other companies, not just the big guys who have been spending to this point, but as it gets cheaper, as the use cases kind of expand, that you'll see other companies stepping up to increase the spending. Do you think they're wrong on that?
No, but again, it comes down to timing, because here's the thing, you have a killer app right now out for the consumer in either the smartphone or the PC. And the problem is you don't. Apple, for example, pushed out their Siri upgrades for AI out to 2026. So you have this sort of gap between training, where you're already training on all the data available on the internet for the largest models that are, applicable. So that's going to slow down. But the inference spending, which is what you're talking about, which I'm bullish on, you're going to have this sort of, digestion phase, which is what I've been talking about for a while now, in the middle, where training spending slows down. You don't have the inference spending pick up because you don't have things like, Siri AI out sitting on all the smartphones that people use. And so I think you're going to see that slow down. And my point is that I don't really care what NVIDIA has to say, because I'm looking at the biggest customers out there and what are they doing. And then don't forget, yes, you're going to have some other people spending on AI, but do you think that potentially China has been pre-buying in front of sanctions? Obviously. And so you've had a lot of demand pulled in because of that as well, and you're going to see that fall off on the other side of it.
So you were starting to say what you liked, and I cut you off. Go ahead and finish that thought.
No, I started the year with my top picks, and 2 of them were related to AI, but it's companies that take advantage of all this money spent on AI infrastructure over the last 2 years, well, you're producing all this data, but then companies want to get access to it. And so that's why, like Cisco, I think you're going to see an upgrade in enterprise for those networks. And then telecom carriers want to be able to let consumers through fiber get access to that as well. And so you've got big upgrades going on, Deutsche Telekom, British Telecom overseas, and then in the US in terms of BEAD funding, et cetera, of wanting to let consumers get fiber to the home so they can get access to this data. And so that's where I'm focused on. And then as well, companies overseas, such as in China, where you're seeing, because of DeepSeek, investors going, a lot of those companies are trading at half the valuations of the US tech companies. They've been given up for dead, but they kind of had their ChatGPT moment with DeepSeek earlier this year. And I think you're going to see some improvements there. And then we've got things like banks we like, as well as the mid-cap value space, which hopefully is more immune to a lot of these pressures we're seeing as these tariffs kind of move in and out. Those should do better, I think, going forward, because the valuations are just a lot cheaper than the large cap stocks.
Dan, thank you. It's good to see you today.
Thank you, Becky.
Coming up next, some morning movers. Squawk Box, we'll be right back.
Today. All right, let's check in with Frank Holland. He's got a final look at what's been happening in the markets this morning. Frank, good morning.
Hey, good morning to you, Becky. We have an M&A mover this morning. Take a look right here. AZEK shares are moving higher, moving more than 22% higher on reports that James Hardie will buy the home building product maker. The deal is about $8.8 billion, including cash, stock, and debt. James Hardie also forecasting would gain at least $350 million worth of additional earnings once the deal is complete, and that expects to save about $125 million. Still, you see shares pulling back about 11.5% in the pre-market. All right, moving on. We got another upgrade this morning. It's FedEx moving higher on an upgrade from Jefferies, moving the logistics giant to a buy. You can see shares are moving 1% higher. Analysts say investors are just overly focused on the macro challenges and not focused enough on the upside from cost cutting and the spin-off of its freight division. The CEO of FedEx also reportedly in China for a CEO forum there this morning. Also, we have UBS upgrading two commodity-focused stocks. The rating on Nucor moving up to a buy from neutral. Price target also raised from $156 to $160. You see Nucor shares moving about 1.25% higher. Analysts say they see an attractive entry point and say demand downside from tariffs, if they were to take hold, would likely be offset by some reshoring efforts. Also, Steel Dynamics moved to a buy. Analysts say that the tariff protections are actually a tailwind for that stock. Shares are up almost 2%. Joe, back over to you.
All right, Frank, thanks. A final check on the markets. Here are the futures. And for those keeping track at home, the S&P is indicating up another 67. It closed Friday down from the highs 7 point, what was it?
Got it right here, 7.8%.
So we briefly, I think it was only 1 day.
We're at almost 10% of the.
We were over 10.
Yeah, so
for 1 day.
10% for 1 day.
For 1 day, and then so we'll see. And there
but
was.
I will say, it used to be when we were down 5%, you'd have it for a nanosecond. And so this time, double it to 10%.
But 10% corrections are, some would say, healthy and necessary. Yeah. From time to time, we hadn't had one in quite a while. Doesn't feel good, but after 2 straight years of the outsized gains that we saw, so we're bouncing back a little day after a bounce back week last week. Here are the treasuries. Rick's right. Nobody likes interest rates to go up, but it does allay some fears about a growth slowdown or growth fears. Same with oil. $70 seems to be a pretty good place for Goldilocks, but we're 68.42. Crypto, definitely a risk-on asset at this point. Bitcoin up almost 3%, back above 85,000. Got all the way down to 78 at one point in the most recent pullback, or maybe lower. And there is a currency check. We will both be here tomorrow. My Tuesdays are the hardest for me. Monday,
Mondays are way
Monday
harder.
hasn't sunk in.
You're like already
hasn't
through.
really sunk in. I'm
Monday's
back.
over.
Tuesday's hard, but I'm going to be in a good mood.
All uphill from here.
I'm going to be in a good mood. Make sure you join us tomorrow. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're together, and we are both live at Post 9 at the New York Stock Exchange. Carl has one more morning off. I think we'll see him tomorrow. Let's give you a look at futures as we get you ready for a new week of trading. And, of course, if you've been paying attention, we are looking for a significantly higher open, perhaps on some changes in possible tariff policy as April 2nd gets closer. Let's get to that and our roadmap. Of course, it does start with tariffs and this bounce that we're seeing broadly, and of course in many of the tech names showing some optimism ahead of the open. Reports are that the president may hold back, at least on some tariffs next week. Tesla is also amongst the biggest movers, of course, set for a rally after what was that record 9th straight week of losses, something we've been covering closely. And China is trying to woo American business. Beijing pledging greater market access. Yeah, as top global CEOs gather. It's called the China Development Forum. And got a lot of CEOs showing up there. Jim? Let's start, though, with the markets. Welcome back.
Oh, good.
After an amazing week. Of course, it's not as though you were not. Yeah, minor surgery, doing okay. Thank you. You had a hell of a week last week. You're back here now.
It was a week of intimidation.
Intimidation? What do you mean by that?
I'm a liberal arts person.
Yes, as was I. But
right.
So
and,
what?
Yeah, that has advantages. I mean, we've read Shakespeare, studied the Bible, the English language,
amongst other things. Yes.
But I had to have everything explained to me in order to be able to be in the room. But once it was explained to me, it was very clear that the bulls are right about AI. The bulls are right about the amount of money it's going to take and the speed it's going to take. This is about need for speed now, and it's a war among Grok and ChatGPT, and existential for Google because Google Cloud has to make up for Google search.
So, I mean, not to cut you off, but you're a believer.
No, I didn't mind
the big headlines coming out of your interviews with Jensen, of his discussion on stage at the big conference, were $1 trillion in spend for 28.
They
right?
can spend $5 trillion if they have it.
And then it's 100x now, isn't times what it was even the need
a year ago. And I called him out on that. I called Jensen.
It seems hard to imagine, but you're a believer.
Yeah, I'm a believer because, look, when you look Jensen in the eye, and you can do that. I mean, this guy's like a for real guy. And you say, look, I don't believe any of this. Well, he just says, well, then you ought to go do more work. He does it much more politely than that. But he just then lists all the people and the thing and who wants it. And then you go to a cold, steely realist, someone you and I have known for 2 generations, Michael Dell. And he says, Jim, think big. Nothing big. And I said, look, I'm like the biggest thinker in the world. No, you're constrained. And I realize I'm constrained by the 4 walls of my liberal arts brain.
That's interesting. You think if you weren't a liberal arts brain, you would be constrained? I'm not sure I agree with
No,
you.
I would be better. I mean, I would be better. I mean, I just think that if I had an engineering degree, I would be a better partner to you. And I regret that.
Well, I regret that you aren't a better partner to me. I think...
I miss you.
I guess the last
I was up at Dave Cody's leadership camp, and you had done it the year before.
I had done it a number of years ago. A number of years ago. Yeah, boy, they've had plenty on their plate at that law firm. All right, let's get back to the markets though. So here we are. Reports are in the Journal and other places that perhaps on April 2nd, while we're still going to get plenty of tariffs, they aren't going to be quite as broad as might have been thought.
Right, and I'm thinking that let's take a Michael Dell.
Might not be automotive, for example.
One of the reasons why the tech stocks have gotten hit is almost everyone's convinced that if you import anything, there's going to be 20% tax or 25% tax.
Right.
So therefore, they have to, all numbers have to come down. If you could get a reprieve on that, then the multiple expansion on just regular garden variety tech would be extraordinary. You'd have to put your money in that. Could it bleed over to Mag 7? Yes. I think our great friend Mike Wilson, I don't mean that at all, with his weekly warm-up of Mag 7, I think it was a significant piece. And a lot of it has to do with nothing special. Riding the wave of, I don't know, nationalism.
What would a name be? If you want to name some names that are riding a wave?
Darden. I'll talk about Darden. You won't go to Olive Grove. I've been there. But it's a restaurant chain. It's not like a blow-away restaurant chain. It's like an okay restaurant chain. It reports an okay number, and the stock goes up huge. FedEx does an amazing earnings bottom line off of anemic top line, upgraded today, but everybody hates it. Micron, okay, it's up 9 in the evening. It's down 9 in the morning. What happened during that period? I don't know. People watch March Madness. I mean, it was an upset that I don't know about. Nothing happened. Tech. I'm saying that could reverse.
Okay.
Micron is an inexpensive stock doing well. I'm using Micron, please, as a metaphor. Don't try to pin me down like that. It's a metaphor.
I get it. Listen, you could also use back to NVIDIA. I know.
Well, I mean, that's NVIDIA.
What is it trading at? It's trading at about 20 times.
26 times using, I'm going to use Ben Wright. Just to Ben, by the way, Ben, you saw who they like. They like Ben.
They like Ben? Okay.
They like Danoff. Will Danoff.
Like Will Danoff from Fidelity. Yeah, well, why wouldn't they?
Why? Because he's the best there is?
Well, also, yeah, he's an important
He's the best there is, you know.
So when you're saying they like, what you saw a certain dynamic there in terms of NVIDIA and either the analysts or those or their investors, they treat them differently? What are you talking about?
No, it has to do with intellectual firepower meets knowledge.
Okay.
You need both. And they think that Ben has tremendous knowledge.
Oh, well, that's good to know,
because
we bring them on all the time, so that's a nice thing to know.
I think that's probably right to do.
Because that may be of value to our viewing audience then.
He's a holistic approach.
Right.
They like that too.
All right. You changed it from, though, a discussion of the multiple on NVIDIA to some of the analysts and investors they like. Let's get back to the multiple here. I mean, to back to what Mike Wilson was saying. By the way, I thought he was retiring or something. He's still around, huh?
No. Saganagi retired. I miss him.
The most notable change here is Mag 7 earnings revisions look to be stabilizing, potentially bottoming.
Well, because they suck.
I mean, these have been some of the worst cap stocks. So,
I mean,
I hold up NVIDIA as an example. We talk about $1 trillion, of which conceivably they'll take an awful lot in 2028, given they don't seem to have any real challengers at this point.
No, I mean, there's no one near them. I visit a facility, data center.
Yeah.
Want to be more deep than that yet. And you just get the sense there's NVIDIA, and then everyone else is a distant 2, 3, 4, like nowhere. Broadcom's in the mix, by the way, and Marvell's in the mix, but they're not at the. They're moons. They're moons. I'm talking suns. It is a sun. People have to stay focused on that. Or we can just, start talking about, I don't know, VF Corp.
We could. But one thing we're going to continue to talk about, though, is tariff policy. Do you think that a day like today is indicative of a change, and yet there'll be another change tomorrow?
Thank
that
you.
Will
yes, because you see,
bring more uncertainty?
I believe that the president watches CNBC.
You do?
I think the president recognizes that perhaps it would be good to start narrowing things down. He's made some real progress. I mean, there's companies that seem to decide to put plants here every day, right? I mean, it's working to some degree. And he doesn't need to be, he doesn't want to destroy the market. I think that there's this perception that he doesn't care anymore. I think that's bogus.
You believe that President Trump does still care about the market
tremendously.
Its performance? You do?
Yes, I do. I think that it's a canard that he doesn't. I don't know about our Treasury Secretary, even though he's 35 years in the markets, and he tells you that probably within like, hi, I'm 35. Oh, I'm sorry, I'm the Treasury Secretary. That's wearing thin. That whole rap is wearing thin. But I do think that the president cares passionately about the market.
And so
that was a misdirection play. And I saw it like when the Chiefs played the Eagles, they were constantly.
Interesting you're saying that, because that has been sort of the new narrative, has been that it's not nearly as important as it was during the first term. He's not going to keep scoreboard going. I mean, again, I come back to that moment you had with him right here at the New York Stock Exchange.
Well, you got to cue it up? Yeah.
No, but I remember it well because it was a remark from him that was unexpected in the sense of he always talks about how the market's going to go up. And when you asked him, he actually said markets go up and markets go down.
Right, it was very JP Morgan like. It was like JP Morgan.
And so,
but he didn't want to be the reason why we have a big decline. That's what I think.
Okay.
It became Trump centric, and he doesn't want. I don't think he wants that. I think he doesn't want that. He doesn't want your 401k to go down. He doesn't want your IRA. He's like pro-investor, but he's not so pro-investor that he doesn't want to get something done. But he is getting things.
But they are believers in tariffs without a doubt. He is clearly a significant believer in tariffs, both as raising revenue and potentially
it's working.
What's working?
His strategy's working.
How is it working?
Because these countries are caving, and these companies are caving, and they're building things here. We see them all the time. Korean companies now are folding. European companies will fold because they're afraid. They're afraid of him, and it's working. That strategy's working. What's not working is the idea that tomorrow he might change it. That's stay. What he said this weekend's got to stay. That's what has to happen. You can't change again tomorrow. Say that they're not reciprocal. We're going blunderbuss. Because reciprocal is what business wants. Blunderbuss protection they don't want. Over and over again, I heard that.
It's somewhat clear to me how it all ends up, Jim. I mean, we've had this conversation a bit with Navarro, your friend, and with Secretary Lutnick.
I don't mind him being called my friend.
Do we end up with a domestically focused manufacturing base that's better, but that's more expensive for everybody involved? Can we really be competitive globally?
What's hard because it costs so much to make things here.
And then ultimately you get to a level of autonomy in many factories where you talk about this, but that's not jobs, and jobs is what is at the heart of it.
If you want to know, Stargate and Taiwan Semi are the two that matter the most. Taiwan Semi, if they can build the 2 nano, the small ones, not the large ones that go into cars.
Right. The R&D center as well, I guess, is important.
If Taiwan Semi works out, then that's a hedge against what we read about every day in the papers about what.
Good morning, retail traders.
Now, David, the Chinese government, that's also, I mean, they're playing one hand military, and the other hand, they're inviting people over.
There is a lot going on. In fact, that's actually.
That's the problem. So
what's
there's a lot going on, but we decided to view it positively today.
Yeah. Today.
Yeah, today.
Well, for now. That could change.
Right. But
As
I'm
you
telling
point
the
out,
president, this idea that
940, everything.
I'm taking that off the table right now.
It's interesting
I'm
you're
taking it
doing
off the
that.
table. I did a lot of work on it.
Okay, I believe you.
Something I asked everybody about.
Okay.
And I'm telling you,
no, that's an interesting.
It's top of mind.
That's important.
So I don't believe that
that's
he doesn't
important.
care. He cares.
Let's move on to China. Jim mentions that, of course, Chinese officials are courting dozens of business leaders from around the globe. They're at the China Development Forum. It is in Beijing. We're talking the likes of the CEOs of Apple and Qualcomm, of course, both of which have large businesses in the country. AstraZeneca, Pfizer, FedEx, Medtronic, all CEOs of those companies in attendance, as Eunice Yoon is in the Chinese capital as well, and she brings us the latest. Good evening there, good morning from here, Eunice.
Thanks, David. Well, with President Trump's tariffs creating a whole lot of uncertainty for global businesses, Chinese leaders are taking the opportunity to pitch directly to U.S. CEOs.
Next resistance today is 574.60 on the SPY. Good morning, everybody.
Basically listing out the reasons why investors should invest. He pointed out the recent consumption initiatives that China has had.
Let's see what the 5-minute tells me. Yep. We're definitely at a resistance right now. Looks like we might have broke it. Oh. China court business leaders. China. What time is it? 15 more minutes. Oh boy. I had a real good week last week. Just took one loss. It wasn't a very big one. I think I made about 50 trades. No, a little bit less. About 40. So we got a gap this morning. That's going to be our low support. Somewhere right around, if we can stay above 567.75 on the pullback, and that's on the 5-minute. If we can stay above that, I'm going to put an alert just right above it. That'll be our double bottom. I'll bring it up above the 200. Now that I see that, it's weird how you notice one thing and then later you notice, oh, well, there's the 200. Duh. China. Yeah, Kramer said something this morning. See, the analysts have been talking behind these fat cats, these billionaires. They don't care much for Trump. And they think that he's purposely doesn't care about the market anymore. And that could be one of the most false statements I've ever heard in my entire life. No, Kramer comes out and he says, I think everybody's wrong about that. I think Trump does care about the markets. And I have to agree with Kramer. Right now we got a pretty good open. See if we consolidate this and pull back or just go ahead and start taking off and have another big day. I kind of predicted this week would be a good week because everything I heard last week was all positive, all but the tariffs. And we'll have certainty on the 2nd of April. So that should go ahead and solve a lot of issues that these idiots on here up at Wall Street are talking about. There's a 40% chance recession risk. Trade wars. I mean, just nonstop. That's what they say here just now. I want to see who puts this news out. Benzinga. Tesla had a big breakout today. Let me pull up the year. I think I got a resistance on here. Yep, we got 268.81. So another $9. And it could stop shorter than that if I fine tune it. Right around 260.34. Man, I'll tell you what. I have this account with the IRS. There's a couple of chicks in there that just hate coming to work. This morning, this one, she has real bad asthma. And I forgot all about it. It's been like 5 years since I've worked with them. They've been working from home for 5 years straight. And so I started cleaning the top of the cubicle, and I sprayed a little bit of Lysol, and I forgot about her asthma. And she had a little asthma attack. Now, I've worked around a lot of people, thousands, but I've never seen a group of people that are so damn spoiled. Government employees. I hope they do away with all of them. We'll see if we break 260.34. That's just a rough estimate. So, oh, they took it off sale. Shit. I was going to buy these Brooks. They had them on 10% off on Amazon. Ghost Max 2. I love this shoe. Yeah. I should have got it yesterday, I guess. It's a great shoe right there. Very comfortable. And not really, it's firm, but yet, you know, you don't even feel it. You can't even feel them on your feet. I gave $170 for mine. I still want them for $150. Still might be worth it. Let's keep shopping around. QQQ's at resistance. So we'll see if that pulls back. They're kind of hitting some resistance levels. We got a triple top on the SPY. We could go a little higher on the IWM if we break 208. And then we got a triple top here on the SPX. And it'll probably open up. It might hit the 200. We'll see here. Might have to adjust that resistance. I don't know why I don't have a line there. Oh, God. If we break it, that'll become support, the triple top. at 5702. Nice and gonna be nice and warm outside today. I had a great weekend. Anybody doing your homework on stocks? Anybody watch my video? Every video is a learning lesson on how I trade in a way. IWM bounced last week off the 200 twice on the 1 hour. And it's respected the 200 all day today, 24 hours. So we'll see if it holds. That's going to be a major support, I think, on the 1 minute. And pulled right back to it at open here. If that holds, we'll stay bullish. All right, 4 minutes left. I better make sure my platforms are up. There we go. Yeah, be dabba doo. Somebody has a price target of $13.50 on Zim. That's about where I like it. If I remember right. I got 1482. But I've heard 1350. Yeah, I got 1482. I don't know why. Maybe on the weekly. Yep, that's it. Definitely on the weekly. One more minute. Woo! God. It's that 1502 support. So it said if we broke the triple top, we'd come back down and hit that 5702. Look at shorting this thing right up the bat. Someone came out this morning and said that the tariffs are going to be a little more milder than they've been predicting. Targeted. It's another reason why we could start having a real nice rebound in the market. Looks like Tesla hit my resistance. Come within cents. So we should pull back on it too today. The 260.34. Or if we break it, we'll move higher. Oh, there it is right there. Well, somebody bought a bunch of them right there. Let's see if we pull back on Tesla here. Good morning, Punk. Magnificent. Chris, Randy, Mabardo, Subway and S and RPT and Ricky. No particular order. About 4 years ago, I started telling myself I want to predict the next move. And that's really paid off when it comes to predicting how the market's going to go. Tesla's looking nice. SMCI is double bottom. We got Tesla moving. Where's AMD? Where are you tonight? AMD looks positive. Nvidia. Apple pulled back here. Watch Apple. Everything's looking good. TQQ's up 270. Now this is way oversold. Had another big bounce on it today. A couple bucks. This morning. Well, actually, 3. Boeing had that great news. Boeing, I think's going to start moving long. We got to hit the 200 on it. It's had flat last year. It's been hard to break the 200. 189.96. And the VIX. What do they got to say about the VIX?
Day moving average, if you kind of go back in time, either in corrections and or bear markets, that one is actually the biggest headwind that we have seen. So we could have counter trend rallies up to that particular point, but that's where you usually do see failures. I will say, if you kind of look at this right now, we go back to this example of, is this October 2023 or is this January 2022? Because the technical landscape and how we're kind of mapping out from just the chart standpoint kind of mirrors both type of scenarios here. If you think that we're in the October timeframe, then we have a lot more room to the upside. You're talking about another 15-20% to the upside here, and then we kind of coast. If you think this is the January type of January 2022 style of an event, you're going to have these intraday or these counter trend pops to the upside and then massive sell-offs that occur right after. And I kind of go back and look at the weekly chart, and you can look at the weekly chart on the E-mini S&P 500. That'll actually give you a little bit more.
Yeah, they really like FedEx.
Are we going to basically skip off of the 50 period moving average on the weekly? Are we going to basically break above the primary
I got
trend line,
242.80,
which is sitting at 5,900
at the 200.
500? That could be the case. Are we going to see kind of this rock skip off the zero line on MACD? That could be the case. That's exactly pretty much what happened in October. But if we do not, and this is kind of that first wave of a 3-wave pattern, which you can make that case as well if you are a bear, you come back up, test around 5,900, 5,950 on the E-mini S&P 500, more shorts kind of get back into the market, and you have this scenario where the stochastics kind of still makes lower lows, which I have that at the bottom here. So I think it's still a very tactical market here. We're going to be in a lull where sentiment indicators right now have been very bearish. The market's been pricing that in. Tariff risk policy has been bearish. The market has been pricing that in. Getting a little bit of a bright spot here, but the hard data has not shown any of this real slowdown in the market. And until that actually happens, bears are going to need to have another catalyst to break the market down. The market just doesn't break down because of no reason. You need to have continued catalysts in order to do so here. So I think this is a decent little pop. I would be very tactical with it. I would look at that 200-day moving average as your first short zone that you see maybe some sellers kind of getting in. Now those that did buy the low, taking some profits at that level.
Okay, so the 50 and the 200-day both watching, and that long-term trend line from October as well, which is higher up to like 6. So some good levels to think about there. Good answer. And also like the point about being tactical, because there's a lot of room in this playground here without having to assume that all of our problems are gone. But to your point, it was good last week. We saw Powell staying steady, and economic data also firm. We stopped missing data. I know you're looking at copper too. We talked commodities a moment ago. KG, give me 60 seconds on that.
Yeah.
So I paid close attention last week to all the indicators, and I was with Powell on it. I said everything looks great. Inflation was lower. Then this morning I heard about there might be some lightening up on some of them tariffs, which I think they purposely wanted to bring this market down just to get in at a better price. Got a new high on the SPX just now. Looking for the opportunity to take the put. The options are getting back to cheap. As the market goes up for some reason, they were expensive when we were coming down. Puts aren't though, they're expensive. With the 5700s. I gotta watch the gamma. Okay, you buzzards. The last week's strategy was I'd buy like 1 or 2 contracts at first, and then I'd double down if I didn't get it at the right spot. Like 1, then I'd buy another 1, then I'd have 2, and I'd buy 2, then I'd have 4. If it went down any more, I'd buy 4 more, and I'd have 8. These are at 380. The 5700. We got like the 9 for the first support. Be nice to see a double bottom. News at 9:45. We got 1 minute. There's 460. I gotta get some water. My throat's killing me. I'll take a Rossinger. Had a little bouncer. So close to that 9. I just might just get out here and wait. I'm feeling real bullish. FedEx is 239. I got 3 of them. Slash ES is up 75. IWM's at resistance at 208. SPY looking real strong. Tesla about to 268. We had 267.23 on Tesla. AMD's at my resistance at 119.82. I didn't talk. Oh, that's in the video. They're talking about the tariff's not going to be as bad as they thought. PMI 53.5 versus 51.6. The global composite, then manufacturer 49.8 versus 51.9. There's a mixed message error. Come on. Can't tell these candles. GM's back up. Oh, CrowdStrike. And what else? Mister. A lot of hype about Mister this weekend. What are they gonna do? TQQ's breaking out. Tesla real close to my resistance. OKLO. That's. I had some. Never heard of it. It's a nuclear company. Nuclear regulators. We got a little megaphone here. Pretty good size one. One spy. The bottom of it traded at the VWAP. The Bulls are in town.
Pricing in at this point. So this is the way I look at it, going into an unknown earnings event where they have no earnings, and staying risk defined on it. But if you're taking a bullish stance on it, maybe selling out of the money verticals on the put side might be the way to go.
All right, I don't hate that. I like it quite a bit actually, given that this thing, it gives and takes. It's obviously quite volatile. It was a pretty nasty swing from 60 down to 24 bucks, right. But it looks like it's got some decent momentum, so it's on the bullish side, which is respectful to the bounce.
Yeah.
You got one in Vistra too, which is a little bit less crazy.
Yeah, and a little bit more aggressive strategy that I'm going to use on this one also, because it's pulled back from its all-time highs also, still up nearly 100% for over the last 12 months, so it's had a good run. So I looked out in the April monthly cycle. They've already had earnings at the end of February. Those are past, so you don't have any event risk in this one. Where I'm going to buy an unbalanced or broken wing call butterfly to the upside, where I can offset some of my costs on the initial trade on this one. Buying one of the 135 strike calls, basically at the money, then selling two of the 145 strike calls, and then wrapping it up by buying one of the 150 strike calls. So in essence, you're buying a $10 wide bullish call vertical within this strategy, and then selling a $5 wide one to offset some of the cost. You're paying roughly about a $2.60 debit. There's your risk, $260, and it takes your break even to 137.60 to the upside, and that's only about 2% above the current share price in there. So you don't need a monster move, and you can see here from the risk profile, yeah, the apex profitability at or near that 145 strike that you sold two options on, but anything above that break even of 137.60 is going to be profitability. Now, if you were just to buy the 135.45 call vertical instead of this unbalanced call butterfly, that's going to cost you over $4. So you're reducing your exposure and risk on this trade, but then you lose some of the profitability if it goes far above 145.
Okay. All right, so upside, but capped.
Yeah.
But it still gives you a nice little pop if it does, another day like today.
Yeah.
Okay, all right, thanks, Tom. Appreciate the trades. Bullish on the nuclear space as stocks firm up and a rally takes shape. We're in hour two and we come
Tesla's
back.
about to hit my resistance.
The number we got this morning, the flash composite with a good services indication for the economy. Bonds sold off on that. Stocks pushed higher. We are jamming.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop.
Crypto pump coming?
Robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Come on, baby. I'm looking at the calls too here. I'm gonna do stick.
Russell's up right next to the Nasdaq, towards a 2% gain on the day. Really no pushback so far this morning. A little bit in the small caps, but other than that, we are in real good condition right now.
Dow Jones at 500 points.
Stocks. We're going to talk some commodities and some energy. We're also going to look at the tariff story with the dollar firming up with a nice bounce at the old support. Dollar now closer to 104 after a very stark response to our services print there. We're going to take a look at a few charts. DoorDash on the list after a surprisingly great year behind it. We're also going to take a look at Williams-Sonoma. We're going to look at TKO, all entering the S&P, by the way. Look at TKO. That's a fun one there to include on the charts. Thing has gone from 85 bucks to 150, so some entertainment value there. Let's go to George Tillis. Let's talk about that number that came out first. George, we've got a good morning here at PMI Composite Flash. Did see manufacturing sub 50, but what else is new? The new part seems to be the services with a nice surprise at 54.
Yeah, I mean, overall, the composite was higher. Manufacturing, as you mentioned, was a little bit lower at 49.8. The estimates or forecast around 51.9. That was also to be expected to be down considering last month's print. But if you look at the services component, that was actually quite meaningful, higher by about 3 points, 54.3 versus 51.2 estimated, and the previous was 51.
So what are you
quite
saying?
a bit of an expansion in the services component of the Purchasing Managers Index. But if you look at the composite
Expansion.
as well, which comprises on a weighted basis more on the services side, that number was higher at 53.5 versus the estimate of 51.6.
Okay, so what does it tell you, George? We knew we had manufacturing weakness, so it's kind of always been the case, ongoing and running. So the services side presents one of the better beats we've had on economic print, really in weeks.
Yeah, I think it's. I think the representation or the summation of it is that there's basically the economy still in balance. When it comes down to, of course, the services side of the economy, that's the greatest component of our production. If you look at the manufacturing, it's been relatively weak. I think there's some hang up in manufacturing, probably because of tariffs and the uncertainty around that.
Materials
but
cost
nonetheless,
going
I
up.
think it's a balanced number. And it definitely does show that the economy is not in a recession right now. It does also show that the economy is still expanding from a services standpoint at the very least. Manufacturing, again, 1 month doesn't make a trend change, but at the same time, the services side, I think, is making up for it.
Bloomberg points out that
Come on, 63. Let me see it.
For nearly 2 years, driven by higher tariffs, labor costs, federal spending cuts, manufacturers passing those on to customers. So, the part that it seems the tariffs are hitting on is obviously the more industrial side, which the market doesn't really worry about too much. We've been brushing that under the rug for years, rightly so. So it seems that the response, bonds down, yields up, dollar firming, stocks up. I think it's the right response to this number for sure.
Well, I think the markets are moving, absent this particular number on some, potential tariff relief. I think that's a huge drag on the market. It has been since February, because at the end of the day, trade is not a zero-sum game. So everyone loses because of tariffs and contractions of growth. And if there's an industrial policy that's being put forth, it's going to take some time.
Well, that's kind of the point here, George, though, is that the market just saw that the tariffs are having an inflationary force on manufacturing. We're rallying. We sold off bonds like it's a good thing. So I wonder if that's telling us that tariffs really are starting to get priced in here.
Yes.
Well, I think so. I think there's a lot of delay in terms of planning for businesses because of tariff uncertainty, particularly the automakers. I mean, there's a lot going on right now. So with that said, you have to keep in mind that our economy is mostly services versus manufacturing like it once was, decades ago. So with that said, I think these reports are relatively balanced, but I think absent these two reports, the markets wanted to go higher today just because there's some positive news in tariff relief.
Okay. George,
a little bit more, and I'm going to get out of him here.
Tariff implication for the manufacturing side put a little pressure on inflation this week, or do you think that's already kind of understood given what we saw from CPI?
I think the biggest problem with the tariff is not inflation. I think it's growth. The thing about tariffs and international trade is that if you place tariffs on one country versus another, trade is not a zero-sum game.
This tariff talk's been just way too much, and I agree 100% that these people never have it
That's
right.
just the math. So I think the tariffs are more challenging to growth versus
I got out
inflation.
at 3.
Thanks, George. Like that. Good stuff. Good context on the big picture. What it means for us as the market tries to get its head around tariff impacts showing up in manufacturing, not so much in services. Caroline Woods, our senior markets correspondent, looking at a group, though, that has been under pretty relentless pressure. Lennar gets a downgrade this morning, Caroline, but it is not stopping the stock from trying to firm up after it got hit on earnings last week.
Yes, we're seeing Lennar shares attempt to rebound this morning, Oliver, up about 1.3% right now after the losses associated with earnings. Results actually came in better than expected last week, but that margin guide seemed to really disappoint investors. And of course, Lennar highlighted several challenges that the company
Probably regret it.
including the macro economy remaining challenging. The company said while demand
Just now sold it.
persistently higher interest rates and inflation combined with a downturn in consumer confidence and a limited supply of
I could have got
affordable homes has made it
310.
increasingly difficult for consumers to access homeownership. They also said they aren't seeing
Was it worth it?
seasonal
No.
pickup typically associated with the beginning of the spring selling season, and we know that they've had to incentivize buyers to buy homes, and that's weighing on margins. So we did see Evercore downgrade shares of Lennar to Inline from Outperform, cut their price target to 131 from 159. So as you can see here, currently trading just below 117. So still upside from current levels, just not nearly as much. And the analyst over at Evercore pointed to that gross margin guide as reasons for being more cautious now. said the Q2 gross margin guide of 18% was lower than hoped for. Management indicated that it was due to incentives rising further from Q1, as I said, and that it's willing to tolerate, Lennar is willing to tolerate a roughly 8% operating margin for the foreseeable future, despite the fact that on the earnings call, they said long-term operating margins are probably closer to 15%. So Lennar's strategy to maintain and incentivize its volume is going to keep its profitability, according to Evercore, at dramatically depressed levels. The analyst went on to say, Lennar is resolute in maintaining pace and letting margins be the shock absorber, and someday its machine could become a compelling differentiator for the company. However, in the meantime, there are real questions as to whether this machine is built for too much volume than the market will allow. So moving to the neutral camp, essentially turning more cautious, we also saw several price target cuts on Lennar. Citi cut to 127 from the previous 145, kept a neutral rating. UBS is in the buy camp still, but cut to 164. Barclays slashed to 110, is in equal weight, and then RBC is sector perform and cut to 122. I should note this Evercore analyst now joined the majority by having this new inline rating. More than 70% of are in the hold camp for Lennar, but doesn't seem
That wasn't a big deal at all.
Today, now up about 1.5%. Keep in mind, still down more than 2% so far in March.
Okay. Been a rough period here for weeks, for months. However, what I'm hearing from this analyst report
Big
sounds
$90
like what we've already known, that maybe they're built for heavier volume and supply, and that seems like a story that we should generally be pretty well priced in. So the fact that we're up on that note, I think, is encouraging. Thanks, Caroline. Lennar up 1.5% here. Appreciate that.
I love you, Caroline.
Equities have firmed up this morning and are generally holding it. Got Alan Nuttman here with us in studio, Chief Market Strategist,
Nike down another 55 cents.
Bullseye today, Alan.
Well, Friday was a great move if we've been watching and waiting for the markets to tell us. I got a lot of nonsense here.
I like that.
So
I feel like
these
I'm
are
in
all
art
facts.
class.
Right, these are all facts that I like to look at. But it's all
Facts.
about one thing. It's all about price. And that price action on Friday was what you like to see.
What'd you like about it mostly?
So we gapped down, so it was an FO move and a fake out move.
An
And
FU
down,
move.
Filled in that gap after the
I'll
first
be
hour.
right
It
back.
didn't test that gap. Didn't go any further lower, so then it filled in the gap for the rest of the day. That's a very, very positive sign. That was kind of a little bit of a shake-up capitulation.
First of all, fake out to the downside.
Right.
Fake out,
Exactly. So, but it wasn't as violent as we've seen in the past. Back in August, we had been in the same situation where the market was down 10%, but it did have a more violent capitulation. This was more subtle, but the way that we're following through today is obviously very, very beneficial.
Yeah,
But I'm
this
all
is
about
big.
price.
Okay.
58.25 is the halfway point of this drop from the top in the S&P.
Okay.
And every time in market history we've gotten back half those losses, it's had a V recovery. So that targets 6,800 in the S&P, which is about 18% above.
Okay,
where
hold
we
on.
are.
How do we go from 58.25 to...
So if we get above 58.25, that's a midpoint of that drop from the top.
Okay, and that's also the election level right there at that gap.
Okay,
Yeah.
so, but whatever, and all I'm saying is if it gets to that level, then we'll see complete V recovery.
Okay.
Every time in history that's happened.
You think we get past 58.25 and go back to the high?
Then we're going back to the high. If we go back to the high, that's a full V. You take that total drop from the top on that old high, 6,800. That's happened every time in history. Look at the charts. So I'm going to be one to say, I'm going to be one to not be the dumb guy. I'm not trying to be the smart guy and just say that could easily happen again. It's happened every single time.
Every time we recover half the losses.
Right.
I like that stat. Okay. So 58.25. All right, thanks, Alan. No, I'm just kidding.
So
what else you got?
So what was important about Friday also was
I love that stat, by the way.
the VIX. The VIX was pivoting around 21. 21 is the halfway point of this December low to this recent high at whatever it was, 29 or so. So what we see is that I talk about constantly when I come on about bullish divergence. The market made new lows but not new highs in implied volatility. That was a sign of a sentiment shift. That was a sign that this downtrend was coming to an end, and we're seeing that bounce. And we're seeing where's the VIX at right now? 18. The VIX was down 10-12% last week. The market actually was positive on the week, so there was a lot of positives, and obviously you want to see a build, and today is a build up on that.
All right. VIX looking like it's on a return to normal. Average, 16.5, 17, something like that. So if we're going to get back to normal, still got another point and a half at least, maybe 2.
Well, we've got a lot of upside potential, obviously, because now this has been such an orderly sell-off. which is very unique over the last couple of years. But if you look at all the big boys of the Magnificent Seven, you've got Microsoft, Google, Apple, they were down 15, 20%. But, what did they make last quarter? 24 billion, 23 billion, 36 billion. They haven't forgotten how to make money, and so they offer some good value here for all the Mag 7s, and they're just hanging now. Today's action brings us all back to the 200-day moving average. The 200-day moving average was broken in the S&P for the first time in more than a year, and so that's where this, this loss of confidence is really happening. Nothing's changed, but just this loss of confidence has impacted the market.
Okay. Levels that KG was talking about as well, like that, some consistency. You're going for
not loss of
natural, though,
confidence
today in your trade.
Well,
for all that, you got me all.
I look all around.
America bulled up.
They're going off false pretense. That has nothing to do with confidence. They're all going to get stuck with the bag if they don't shape up. So we're coming up to a double top here on the SPX. If we're going to go higher if we break it. If not, we'll pull back. We have to go with the previous high. There it is. Now watch this. So we got double top. You know what I think of them. The 5720s. Puts again. Who's this guy?
Way you play too. So you're just,
as long as you're not on tilt.
I don't know what that means. I don't play. So, but anyway, so I like this. We get up to 12 again, which we were back there, not that long ago, September
last year.
The option about doubles in value. So it's just about probability and about risk reward and payoff.
All right, I like it. You're playing both sides here. Bullish on stocks, looking for us to at least try and retest the moving average.
Yes, it'll be very important to see that 200-day moving average by the end of the week. Let's not get too into it. The ups and downs, that's how markets work. But
this is an international trade, though, which has been in vogue more so than U.S. stocks lately.
Right. Brazil has really gotten beaten down. The real was up to 6-1. If you ever want to go visit there, that's like free. But I'm also watching the dollar. The dollar's the big catalyst I'm looking for. Yeah, we've had a little bit of a bump, a burp. I would call it in the dollar today at 104, but I mean that drop from 110 all the way straight down to 103 was pretty quick, pretty fast. I could look for it to firm a little bit.
Tesla broke out,
and I'm going to spend tens and tens of dollars. So I'm going to Italy here this week for spring break.
Ooh, nice.
So I'd like it. I appreciate the little bit dollar. Last time I went, the dollar was at all-time forever highs, and like I said, it was free.
It's a great feeling when you travel at a strong dollar. It really is.
Right. But I want it to weaken for trading. Okay. So it's a temporary request. That's all I have.
You've got the vacation hedge. Thanks, Alan Nutman. Appreciate it. Entertaining indeed. Alan Nutman, Chief Market Strategist, bullseyeoption.com. Good stuff. And speaking of Brazil, a commodity-centric world, we're coming back to commodities next. Equities, by the way, being led by the Russell now. Small caps nearing that 2% threshold.
Yeah, Randy, I'm in your cage too. I don't like to chase. Done nothing but go straight up. I got it out to the hair of my skin on that one there. That's right, we can handle it. New high. It's going to give up here soon. I'm going to make me some coffee. I haven't had my big play yet. I made 90 bucks today so far. I am looking at the 57.20 put, so for the reversal, if it ever happens, might have to change
Trading
that.
Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles,
I have a
courses,
little bitty
and more,
fat finger on the
all
S
crafted
on
just
the
for traders.
VIX
And with
to
guided learning paths,
1839.
stacked with content curated to fit your unique goals. You can spend less time searching.
Kind of said short the VIX and go long.
Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up
No.
correctly? It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot
Oh
do
my goodness,
everything they
the
need to
Fed
do to
can-
save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Believe me, when it comes to investing, you'll love
Carl's way. Not with Schwab. I can trade on my own. I don't need your stupid help, Carl. No can do.
Get out here.
Where are you going?
Schwab.
New high. Tesla's very strong today, you congressman on the left. I'm trying to notice anything different about these candles. It just looks to me like they're getting smaller. SPY I have 574.60. Give it another shot, Jimmy. You can do it. I will. I'll do it right here. March 24th, the 5720s at 310. It's my risk. Nope. Come on, baby, take it. Give it to me. I got my order in a way. I'll grab one at 320. Change of mind. Damn it. I can't take the trade. $320. Cannot be interrupted. Risky.
friendly list to the US, and you've got assets that are within reach of US sanctions, then I think you're probably rethinking why you want that. I mean, if you're an unfriendly country, do you want a lot of money parked in either US banks or in US treasury bonds or anywhere near where the US can get hold of them? And gold is one of those assets that is a large market, or a fairly large market. It's not as large as a bond market, but it's a large market where you can store money outside of the reach of the US government. So I think that's one reason why places more central banks are buying it and more governments are buying it. And that doesn't look like it's going away anytime soon. I mean, the US government, the new administration and the old one, did look like they want to, they're being much more activist in their weaponization of these things.
Traditionally, gold's usually pretty easy.
That's your opinion, my friend.
And knew where real rates are going, but given the central bank buying, seems like that relationship.
You got 360 now.
Is there a level in treasury yields or the dollar or anything macro-wise that could put an end to gold's rally?
I don't know. I mean, you're right. There did used to be. It did used to trade to real rates and look like, to some people it's a currency, to some people it's a commodity, to some people it's a real rates trade. And the interesting thing about about gold, and actually about trend following in particular. What we do is just let price determine the relationships. That if you are trading on relationships around things like real rates, and then that relationship breaks, what do you do? How do you deal with that? So,
I'm gonna make my coffee, and I'm still in this trade.
Look at it, if the price is going up, then we'll buy it. If the price is going down, then we'll sell it, and we'll just let the market figure that stuff out.
When would gold's downside become a sell signal? Give us a little secret sauce. Is that like if it breaks down through 29 or something?
Yeah, I look at it right now. At least for us, we do at the slower end of trend following. I think it would be somewhere probably 2,700, something like that. It depends how it gets there. These things can sort of consolidate through time and price. So a long period of sideways would do it as well. But yeah, something like 2,600 would do it right now, I think.
Okay, and it sounds like you guys have been in it for a while too, so I guess that gives you some flexibility, some buffer room. On the commodity front, another one.
I don't think today's going to be a big payday for me.
Kind of fizzled out a little bit. Was Nat Gas had that big move
until things change here.
How are you thinking about that right now?
Yeah, natural gas. Yeah, that's been a fantastic trade. So we traded that from over the last 4 or 5 years.
We got 3 contracts at 320.
In Ukraine.
There's
we were on the
380.
long side of it through that. It spiked up a lot, and then I think in the middle of 2022, 23ish, we've been short for a long period. And we've been short up until this recent move where we lost a little bit to start with. That's the nature of trend following. We've been long for the last couple of months, and what we're seeing really in natural gas is previously it's been a domestic market where the prices of there's UK natural gas, there's European natural gas, and there's US natural gas. They didn't really interact with each other that much in price terms, which is different than oil. If you think oil generally, there's some small variations by region, but generally speaking, oil is a global market and natural gas is a more domestic market. And what's happening, I think, is that over the next few years, partly in response to the war in Ukraine, what you're seeing is via the rise of LNG and sanctions that US natural gas is morphing into a more globally determined price and what happens in Europe, where it gets cold in Europe and they've got storage issues, then because we can now liquefy it and put it on a boat, it's moving to a much more globally determined price. So I think that's what you're seeing now, that it used to be domestic and now it's a more global market price.
One hypothetical I'm curious your thoughts on is, let's say tomorrow or at some point, anytime there's a definitive truce, Russia-Ukraine, what's the trade related to that?
That's a big question. I don't know. I mean, you would hope that that if there is a truce, that Russia doesn't get invited back to all the cocktail parties again right away. That there's going to be consequences for that. But being sort of a real politic about it, is it likely that there's some use of trade to help get a deal get done? I don't know. If we were to go back to a world where Europe was very dependent on natural gas, I mean, that would be a little surprising right now, but you never know. I think if you saw large-scale imports into Europe of Russian natural gas, again, I think that would be a large catalyst, but that seems a ways off at the minute, but you never know.
All right. Like I said, good for the
390
this morning, which we've been talking a lot of commodities. Very helpful. Thank you, David.
$4.
Yeah, thanks very much. See you.
All right.
I'd like to see it come back and touch this here triple here.
David Espel, co-CIO, Mount Lucas Management. Let's look at some stocks that are entering the S&P 500. Speaking of entertainment sports, I guess, TKO is joined in. And all winners today, Williams-Sonoma as well, proving resilient to some faltering in the economy.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
One of the girls that came back to the IRS has, I think, asthma, and she's real sensitive to Lysol and scents. SCENTS. Should I take all the air fresheners out of the ladies' bathroom? I was cleaning around her cubicle and sprayed some Lysol, and she had a little attack. I felt bad about it. I went up to her and apologized, but I didn't know or I forgot. It's been 5 years. But I noticed that one of the scents in the stalls in the ladies' restroom where the toilet stinks was thrown in the trash last week. We're kind of showing a little bit of weakness, but we're at the 50. It held the 50 SMA on the minute. I could have got out at $4. I probably should have sold it. I had 3 of them. I'm going to wait. I still think we can hit this bottom down here. But, I mean, this is the time to get out right now. There's 4. Give me 450. I'll take that any day. Then I'm going to start being on a roll again. There's 4. I get 4. Tell me what you think. I feel real bad today, man. I tell you what. It's still on my mind. I can't get it off my mind. This morning, we got a little stall in one of the bathrooms. It toilet kind of stinks every once in a while. I think we need to pull it out and check the little thing that's under it, see if it's glued. Okay. Yeah, I know not to spray around her anymore. And I got some cleaning stuff that's non-smelly. But here in a little bit, I'll go back down there to the ladies' restroom and pull them out of the stalls and just put the one in the main part of the bathroom. So these employees have been they've been working at home for 5 years. They're real spoiled people. And I've worked around a lot of people. And I've never had issues with cleaning supplies and making place, smell good and clean. Most of them are pretty complimentary about it, but so I got 2 girls at this job. One's always complained about smell. And I've dealt with her pretty good, but she's been there at work. But the other one that ain't been there for 5 years hates coming back to work, for one. Just hates it. I mean, she just hates it. She's making like 60, 80,000 a year. And I forgot that she had asthma. And so I cleaned the top of her cubicle and got, that smell. And she started coughing and went and run away real fast and stuck that thing in her mouth and started sucking it down and breathing that asthma thing. And so I felt real good. I mean, I started sweating. I felt bad, and I don't want to hurt nobody. And so I noticed last week that some of the air fresheners I put in the bathroom, one of them was thrown in the tampon box, where the used tampons go. I didn't know it until today when I stuck in there to clean it out. I said, fuck, there's my... I thought somebody stole it. And we have some gas coming up from this one stall that needs to be fixed, I guess, out of the toilet. So I figured I'd put some smelly stuff in there and make it smell good. Now I'm worried about her going into the bathroom if it was her that threw that down in the trash. I mean, this girl's sensitive. Oh. She just hates the fact that she has to come to work. I really don't. It makes my job a little bit harder. I got to go out and buy a special cleaner that doesn't smell. Looks to me like they want this thing to break out. We'll give it just a little bit more time here. We're back at 123, triple top on the SPX. If it breaks, I'm stopping out of this trade. I don't want to mess with this. Could have sold it for about $240. London market's closing in 15 minutes. They're buying gold. Come on, dip, bitch. Yep. I think we found bottom so far. So the inflation was good. Inflation numbers are good. Manufacturing numbers are good. Everything's good. And this is where the psychological part comes in. Tariffs, that like the we've had some pretty good sell-offs. Look at Tesla. That one guy had it right. Remember when I laughed at him about 220 something? A couple months, 3 months ago, a couple months ago. I wonder if he was looking at the 200 EMA. Oh, yeah. I've been a business owner since 1992. Had a picture frame shop before I had the janitorial business. We broke out of the triple tops. And got stopped out at $3. Okay. IWM's hit my resistance level and broke it. Had a real strong red line resistance at 208.02. Let me see where that come from. It's not the weekly, so it had to have been the monthly. Yep, it's the 50 SMA. No. It was the 21. The 21. On the monthly time frame, Caroline, today I'm taking my time.
Also seeing some weakness in super micro, dominant.
Today I'm taking my time so far. I'm not really getting too crazy. I'll have my day. If it ain't later on this afternoon, it'll be tomorrow. Caroline, I'm glad you're back.
Potentially going to be a little bit more targeted on tariffs, and maybe some of those tariffs will spare semiconductors, automotive industry. When that came out, you saw the futures pop, pretty mightily off that, and it's kind of carried forward into the morning. So, if you think this market still isn't news driven, well, I don't know what to tell you, because we're seeing a good pop this morning off that. In terms of where we could go with this, I kind of look at the technicals on this. But
Yoko knows this market's news driven.
Average,
Don't you, Yoko?
750 level, which has acted as a little bit of a resistance the last couple times we got there, but. It'll be interesting to kind of see if this carries forward. I mean, I'm looking at the strength today, and it's basically 9-1 advanced versus decliner. So it's a broad-based rally, Oliver. And as you mentioned, it's very juicy, right? And as you mentioned, it's a consumer discretionary driven rally, off the back of Tesla. But to a certain extent, yeah, everybody's participating, really.
Well, I think one of the other signs of, I like that stat on the breadth, one of the other signs of strength is when weak areas rally. There was a cut to Lennar, and that stock's up anyway. So the fact that some of the more kind of bearish notes aren't really resonating, other than for Lockheed Martin, I feel like is pretty good. Joe, when you look at volatility on the derivative side, real quick, I want to get your thought on that, just because VIX now is it's coming off here pretty substantially.
So not only is the VIX coming off, but I think last Monday we talked about the VVIX, that pulled back below 100.
VIX.
So the idea that these tail events, right, that the market's pricing in these events that before were kind of unforeseen, and we're protecting against really large moves in the markets. A lot of those hedges have been taken off. Now we'll see, kind of how that carries forward, but I think. Once the market starts to kind of pull back on that skew, and you're starting to see that flatten a little bit between the puts and the calls, could give a little bit more relief to this rally. It'll be interesting. Like I said, I think we're at a decent level here to kind of pay attention to this kind of 57.50 level. A move up above that probably gives a little bit more room to the upside. A pull back down from there. The other thing, Oliver, that's kind of rolling off this week is the JP Morgan hedge equity. So, we got I think it's the 56.50 down there on the put side, or I'm sorry, 55.60 on the put side, and then up around the 6,100 on the call side. Once we start to see those kind of roll at the end of the week, it could maybe spur a little bit more volatility. So kind of keep an eye on.
Okay, understood. Thanks. Appreciate that, guys. Good thoughts. Caroline Woods, Joe Mazzola. Nice look at the market there. Nice look at some of the movers. What's happening in derivatives as the VIX of VIX, vol comes down substantially. It's Carolina Joe, Trading 360 with Nicole Petalides is up next. See you this afternoon, 2 p.m. Central Time for Market on Close.
Dokie. Do.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row.
BTBT,
you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced
NESCOT compliance notice.
Also, because your investor checking account is linked to
that was last year.
brokerage account, you can manage your checking and investing.
I don't get these sometimes.
Location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing.
Not another dad commercial. When I first started listening to my dad used to build windows. Used to install windows. That was my dad. Okay. I'm gonna go put my soup on the stove and have lunch and then go for round 2. So far, my day winning streak is $30. I'm up at $30. Very unprofessional. I'm still freaking out about that girl. I don't think I could hurt a fly anymore. Although I did kill a couple ants this weekend. Okay, IWM broke resistance.
Micro after Goldman Sachs downgrading this stock to a sell rating.
I like your
Bitcoin
blouse.
Inching towards the 90,000
Very nice.
level. Our panel is standing by. I want to talk all about crypto in our 360 round. And there's been a lot of tariff talk, and now we're starting to see maybe we'll have a little flexibility on the tariff. The president's putting out some
What'd I
headlines,
tell you?
brought some optimism to the market, and so
Haven't I been saying that forever? That they're taking this tariff thing too. It don't sound right to me for them to be acting like this, for one. Oh, they might be a little bit easing on the tariffs. Analysts never get it right. If they do, they're doing it on purpose.
there you have it, folks. Let's check out a little more here. We're going to be going now to Alex Coffey.
Keep getting flashbacks from the rate cut deal when they said we're going to have automatically said we're going to have 6 rate cuts, and we didn't see them for like 6, 7 months, 8 months, and then we had 3.
Leading magnificent 7 names higher today, in many ways leading the market higher. It's on pace for its biggest daily jump since November 11th, which of course was the Monday following the election.
Tesla will roll out self-driving in China after software approval.
You mentioned that full self-driving news out of China. Reuters is reporting that Tesla is set to release its FSD feature in China pending and following software approval. Remember, it was initially scheduled to roll out this free trial of its FSD between March 17th and April 16th. That had been paused previously as there were some regulatory holdups, but assuming that they're able to get through the last few steps of getting that approval completed, FSD expected to be rolled out here soon, perhaps for Tesla drivers in China. So market seeing that as good news on top of what's already a risk-on day. Tesla way out in front, over 9% to the upside.
All right, Alex Coffey, host of Next Gen Investing. Great to see you. Tesla at 270.90 today, up 9%. Huge move, as you noted. Let's get some insights to the news shaping the markets. We welcome in Matt Lloyd, Chief Investment Strategist at Advisors Asset Management. Matt, good morning to you. A lot of the folks telling me how they're just looking to try, we always want to hold the lows. Now people are saying, can we actually get some higher highs clocked into the charts? What are you watching for?
Yeah, I think you have to kind of strip away the noise, so to speak, when you talk about the emotional sentiment of the markets, whether it's economic or a change in administrations and all the shifts. It's really not so much the direction, so much as the pace that's been happening in Washington that's kind of caused people. And we tend to, when we have these recalibration moments, we tend to either catastrophize or get euphoric about them. And we saw a little bit of both since November elections. And so I think when you strip it away and you sit there and look at where is maybe the direction, not only this year, but longer term, you are in a period where you're going to see higher spikes of volatility. We've seen about 6 to 7 spikes in the last year in volatility alone. That's going to be probably the norm for the rest of the year and maybe in through 26. So you're going to see these moments in there. So I'm watching the volatility. I'm watching the interest rates. I'm watching the consumer sentiment numbers that seem pretty dire now. However, that can really change on a dime depending on what people are reading and the market sentiment. But I think when you strip away the noise, you start to see that there is going to be some more upward moves in the equity market, but it won't be linear.
Right, understood. I mean, we're getting more and more headlines about tariffs. Do you think that we've gotten a little relief seeing that now the president's talking about some flexibility, and it seems like it's not going to be that we're going to be walloped on the 2nd of April? I think people were really waiting for some big event that day, and now it seems like it's going to be a little more piecemeal and case by case. Some of your thoughts?
Yeah, it's kind of like the weather. If you don't like it, just wait 5 minutes. That's what you're going to see on the tariffs. But then you're going to start getting the VATs, the value add taxes, the duties, and so forth. And it's very complex. And when you look at how the markets really react, but also
new high.
The economic base reacts, that recalibration is always
very
painful.
If they come to the understanding of what I've been saying for the last 2 or 3 months about these tariffs. This market could have a pretty good bounce this week, but they're still going to want to wait for April 2nd, because it seemed to me like these guys on here are so uncertain about everything. I'm not. I've got recordings saying that they're full of crap. Not listen to them about this tariff bull crap and worry. They're biased, for one. It's kind of like the IRS employee. She's spoiled because she's been working from home. And these guys are the same way. They're spoiled because they've been getting all that free money from Washington for the last 4 years. All that liquidity. And they're not getting, that's not getting thrown at them now.
Sure. Smaller banks, what are you looking at here?
Yeah, I think, well, first of all, you always want quality. And I think that for the broad base, after really, this has been 15 plus years in the making after the Dodd-Frank regulations. And what you're seeing is kind of the balance sheets, the hedging aspects of it from the banks, and with higher interest rates and now kind of a stabilization. Really, interest rates are kind of tethered in the 4.5% range on the 10-year because of inflation and so forth. You're going to see it go higher, a little bit lower along the way. But that kind of stability inside with the financials gives them a pretty predictable aspect of making money. But then also
some of these calls are up like 300%.
See probably an increase in M&A activity over the next few years. Probably not right away. I think once you get a stabilized market, then the IPO activity kind of starts to pick up a bit more. So I think when we're looking at, we like the larger banks, but really what we're looking at across the board is quality and everything, and the predictability as much as you can in anything in the markets is where the cash flow is and their earnings, and really how they're doing their managing their balance sheet risk and so forth. That's
have a coffee. I'm gonna go make my soup.
It's not just domestically; it's globally.
Understood.
Understood.
I know you like staples. Today we're seeing consumer discretionary leading the way. Tell me a little bit about consumer staples that you do like. What are you looking for there?
So again, it kind of is the stability of things. When you have inflation as it is, and we don't see hyperinflation by any stretch, but we don't see a really big reduction in inflation. And this is really what we call normalization of rates in inflation and in where the 10-year is. And so that also recalibrates into the PE multiples. And so when you look at it is, we think about liquidity, and a lot of people quote the money market fund assets, and everyone thinks this money, this $7 trillion is earmarked for the equity markets. I actually think we have to look at it differently. I think it's earmarked for stabilization of consumption in a sense. The $7 trillion in money market fund assets actually equates to about a little over 23% of the nominal GDP out there, which is one of the third highest levels we've seen in the last 30 years. The reason that's important is that gives us a little bit more stability on some of the numbers for the staples out there. So I think it's a more broad-based way of playing on the staples. I think inflation is going to kind of stabilize here, but I don't think it's going to be drastically reduced. So I think in that case, when you get that stability and so forth, you start to see some better predictability in earnings and cash flow from the staples sector. And it's supported by,
that's a big breakout on AMD today.
It's more earmarked for consumption than maybe perhaps the equity markets.
Yeah, and when you look at the particular movers, I know you're not commenting on specific stocks, but names like Tesla, UAL, Deckers, AMD, Nucor, Vistra are leading the way today. And we're seeing some nice moves between 5 and 10%.
Yep.
Do any of those names or the Mag 7 names sort of jump out at you or seem interesting? What kind of qualifications or moves are you looking for?
So when we look at like the Mag 7 in general, and obviously they get stretch valuations, but it's kind of a function of really what's been happening with households. Households have been increasing their equity share and individual equity share for the last 5-6 years. And actually this has been really happening on a bigger scheme since 1982, 83. So it's been rising, not linearly, but actually in a rising case. So you're going to get these kind of more visceral moves in there. I think when you're looking at those kind of particular companies, much like you saw during the rise up during the dot-com era, is who are those companies that are really going to do well and have some stability and have good profitability? In the case of like Tesla, they've been able to get a profit margin in there where a lot of the other companies have been having this trouble subsidizing that and so forth. So I think, if you're looking at those kind of companies, you're looking longer term. And again, they may have some great moves and some really big moves on the downward, but you want to look at the longer term on those things. And I think then you want to look at how do I get lower correlated assets, maybe the equal weighted, some international companies. It creates kind of a barbell position in the portfolio. And I would also suggest that one way with higher volatility in these companies in general is look at buffered returns where I can somewhat limit the amount of money I have at risk at any given time while still gaining some of the upside in them. So I think that's a way to play maybe the Mag 7 more higher volatility companies over the long run.
Okay, Matt Lloyd, Chief Investment Strategist, Advisors Asset Management. Good to see you, Matt. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Watson will take us through the technicals. Scott Bauer standing by. He'll take us through the trades for Boeing, Meta, and the triple Qs. We'll be right back.
Always clean, may I help you? Retail traders.
Hello?
Yeah. Hello.
Hi, it's Samantha with Medical Alert Systems. How are you today?
Oh, I'm busy.
We're calling to let you know that you may be eligible for a complimentary medical alert system with GPS technology.
We're about to hit the SPX, about to hit the 200 here. Could find some resistance. One, two, three, four on the SPY. Rising wedge.
Hey, it's Alex Coffee. I'm Jenny Horn. Join us for Next Trend Investing.
1 p.m. Eastern.
Oh
Only
God,
Schwab.
not her today.
Welcome back to Trading 360. I'm Nicole Petalides. Glad you're with us. The Dow right now is up 550 points. We've seen some up arrows. In fact, we snapped the selling streak last week, so let's see if we're turning things around. In the meantime, it's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Watson will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Great to see you both. Scott, I mean, what are you looking for this week? Are you trying to see if we can just make some new highs or hold the gains?
I think the big thing, Nicole, is that we're at the 200-day moving average. We just got right back over the 200-day moving average on the S&P. So
what?
When it retreats back, whether it's today, tomorrow, later in the week, can it hold there? I have my questions about that, but I think that is going to be really significant for the marketplace.
Okay, so first up with Boeing today, it's at 182. Some of your thoughts about Boeing, which actually got a nice contract last week. So tell me about where you think it could be headed and why.
Sure, but before I start, if you don't mind, I just have to give a quick shout out to my nieces, Sophie and Ella, who are here with me in Colorado today. Now, back to Boeing. I'm fading this move on this big contract. It is a great contract that they got. I know it was up for grabs here. There is really big resistance around 185, 186 area here in Boeing. So I am just buying a simple put spread. I'm buying the April 17th expiration 180, 170 put spread. I can do that for about $2.50. And I'm looking for just this resistance to hold and for Boeing to come back in a little bit.
Okay. And hi to the nieces. Glad they're there with you. Let's
Thank
take
you.
a look. Ben, take a look, please, at the charts.
Good morning, Nicole. Yeah, absolutely. And I'm right there with Scott in this expectation. In fact, you can see
I got
today this
189.
short-term candle,
He's got
a little bit of price
185.
discovery up above that 180, 182 resistance area. Now starting to give a little bit of that back. So we get this long upper shadow. But the other side of that coin is, up in that 185 range, that was kind of this high of this really messy, almost head and shoulders type of reversal. Now, it's got to, in terms of being longer term bullish, there's some potential there. It made that higher low from the November low to this March low. So there's some possibility for it to break out. But it's got to break above that 185. But in the near term, running into this resistance kind of in this 182 range, starting to see a little bit of softness again from the daily candle. If it comes back down through that one,
Just a little small moves. It's just kind of, I don't like trading like these small moves.
Levels of kind of magnetism, if you will, from an activity standpoint, pulling back down towards that 170 level makes a lot of sense. The maybe mitigating factor here is the RSI, again, driven by that candle and that price movement, is pretty strong, and it's not in an overbought range yet. So this could be one that maybe takes a little bit, but longer term, I think there's still some bullishness here to Boeing.
Yep.
Understood.
I agree.
All right, final thoughts there, Scott, on that one?
Agreed totally with Ben there. I mean, this is a critical point, this 182 to 185 area. And if it doesn't hold here, I think it can get back to that 170 pretty quickly.
Next up, you have here Meta, which is the only of the Mag 7
Oh,
that
Meta.
is showing
I
some
haven't even looked at
greenness
Meta
here.
today.
And up 3% today. Where do you think this could be headed?
Boy, this one is so interesting because just last week when the stock was down, 580-ish, 570 almost area, that was really big support. Now it's getting back up to some really big resistance here, right around the 620. You've got the 20 and the 100-day converging here, and it can't break through there. But if it does, Nicole, if we do get a continuation of the marketplace here, there's a lot of room for Meta to run to the upside here. So I am buying next week's, it's a pretty quick one here, next week's April 4th, 630, 640 call spread. Can do that for about $3 or so. And the big thing about this one is it has to break through that 620, 621 area, and then there's the room to go.
All right, so what do you think here, Ben, when you take a look at this Mag 7 named Meta?
Yeah, I think longer term, you look at the fact that it's above the 200 period moving average and still kind of staying there, really not even challenging it. You get this gap up off of a big engulfing candle in the last session. Now, a little bit of give back right at that 200 or that 100 period moving average, but clearing that area. And I've got resistance drawn in at about the 635 mark. So checking left to confirm what's going on over here to the right side. That could be kind of the Rubicon for this stock to cross, and you've got some magnetism to the upside in that volume profile up to around that $700 mark. As Scott said, some room for it to potentially move in that direction. The last thing that I'll look at here is the RSI and the fact that it's come off of pretty hard off of that oversold line. It never pushed down into an extreme, and it is below the 50% level on the RSI, which would suggest that there is some momentum room for this to gain some upside strength. Nicole?
Yeah, understood. I was just looking at the chart here, and that 740 down, but still like a winner year to date. It's amazing, even coming so far off the highs and still holding on to gains for this year. And 1 year up 22%. Scott, final thoughts on Meta or any of the Mag 7?
I mean, this has been the one that has, really stood out. There's no question about it. And in the face of, all of these stocks just getting pummeled, even though Meta is off that 740 area or so, it has hung in there really well. So longer term, like Ben said, I think this is the class of the Mag 7.
Okay. And last but not least, looking at the triple Qs, is now the time to move all your money out of bonds and go straight into the triple Qs? Is there some big opportunity happening?
Well, this is a pretty quick snapback Friday today, and it's a huge rally right up to the 200-day moving average. Now, the 200-day moving average had been support for quite a while. I'm looking here for basically a breakdown, some resistance there. Not saying that it can't break through there down the road, but as it approaches here, I think we're going to get a little fight. So I'm buying another quick put spread next week, April 4th, the 485, 475 put spread. And the only reason I'm doing that is because I think it's going to really struggle at that 200-day moving average. Longer term, I think we'll break through it and make a nice move to the upside. But short term here, I'd be really cautious.
Okay, so look, I mean, expecting some volatility, it sounds like, Ben.
Yeah, for sure. And I think you can see that in this chart, right? I mean, you see the volume profile over there on the right-hand side, and you've got levels of control kind of all over the place. Most namely, I think
He must be talking about the EMA.
I've drawn a line in there at the 494 mark just simply to denote where kind of the bottom edge of this resistance area is, but I think it exists from 495, 494, 495, well up into that 500 range. And then you got a whole bunch of choppiness up above. So it'll deal with that when it gets to that, if it does. But at the moment, I think potentially running into this area of resistance.
Wow, this guy.
At the 490 to 500 mark.
He has the 21, the 63, and the 200.
Again, like we said,
exact same ones I have.
There is some momentum potential here. It's gaining some strength. It's at that 50, kind of the 50% level of the RSI. So it's gaining some strength, not giving a lot back today. So it'll be interesting to see if this works itself out. But it does present some challenges overhead here from a resistance standpoint, Nicole.
Yeah, understood. I mean, Scott, when you think about the big picture here, if there's any final thoughts on the triple Qs, I'd love to hear that.
Yeah.
But is there anything this week that you're looking for in particular?
Well, we definitely get some, very important inflation data later in the week, and then I think people are looking ahead to next week, to April 2nd, right? What's going to happen with the tariffs? There's already news out this morning about, a change in what the administration may look for and what they may enact. So I think what this tells us is there's more volatility ahead. And we don't really know if we're going to be able to break out, if this rally that we've seen the last few days is going to be sustainable or not. I still think that we are in a sell the rip instead of a buy the dip sort of environment here.
You've been saying that.
Would be very telling.
Yeah, understood. So more sell the rip instead of buy the dip. And the tariffs, the April 2nd date.
Okay, my soup's about done.
I can't wait to buy ahead of April 2nd. I mean, right? It was sort of like the taboo day. It was going to be tariffs. It was going to be, rip your face off in a bad way kind of day. Do you feel like that's been somewhat alleviated?
I do, but again, given the constant news flow here, that could change again tomorrow or Wednesday or Thursday. So that's what I think we all need to be cautious of, because this fluid news flow of the tariff situation can change on a dime.
Understood. All right, Scott Bauer, Ben Watson, great to see you both. Thank you for the big three today. We looked at Boeing and Meta and the triple Qs. Thank you. Coming up next, we'll spotlight natural gas in the energy sector. The Liberty Energy CEO joining us, discussing the powering of AI revolution and how nat gas fits into that picture. Trading 360, we'll be right back.
Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls.
Might have a chance here.
Watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
I'm Nicole Petalides, host of Trading 360 and the Watch.
Darn NVIDIA, man. NVIDIA looking real good. SPY's at the 63 for the fourth time now. So if it doesn't hold here, I'm going to buy put. That's the SPY. And we're definitely at a pivot point. And we got the VWAP at 572.33, so a dollar dip. No, that did make sense. Oh yeah, it does. Definitely the 63 is support. Mister's flagging out, mannequin. turmeric.
That North America can help to supply, and that's a positive tailwind for us. So excited to see all of that happen.
And when we talk about nuclear and nat gas, I mean, these are things that you're dealing with on the daily basis. I mean, we weren't talking about nuclear energy years ago, and now we are. Does that have an important role now?
I hope it does. Obviously, it's a technology that still needs some support going forward. Natural gas, fastest growing energy source in the world, but should nuclear be playing a role in that down the road? I think so, and I think we have a very supportive administration that is going to look to remove some of the regulatory impediments that have really prevented nuclear from gaining a foothold and becoming a meaningful part of our energy mix going forward. But I think that's going to happen. I think you're going to see private dollars invested to really grow the nuclear space in the coming decade.
I mean, we look at oil, we talk about demand around the world, China demand, this demand, but just even here at home, I mean, Liberty has been just leading here at home to regions that are struggling with energy poverty. You're really focusing on that as well?
We are. You know, we built the business with a very simple mission, which was to better human lives, and that comes through access to affordable, reliable, abundant energy. That's a challenge even here in North America, and so we want to see the most affordable energy and reliable energy and accessible energy that we can, both here in North America and also abroad. We've recently started a foundation to carry that work elsewhere. There's still a third of the world cooks over fires, wood, grass, dung, things like that. We want to transition those people to clean burning fuel, to LPG. And so we are working today in Kenya and Ghana alongside entrepreneurs.
Mr. broke above the 50 SMA.
Also exports. I mean, what do you think? What do you think about what the Trump administration is doing with that? You noted here in some of the notes I saw LNG exports freeze. They lifted that. What's going on the export side of things?
Yes, energy demand growing tremendously around the world. The United States, largest LNG exporter in the world. It is our second largest export after oil and oil products, and it is our fastest growing export.
For the United States?
Just broadly for the United States. And of course, that's an important part of our world by providing some clarity around permitting there and allowing those projects to go ahead. That provides clarity for us to invest
there's
in
a
our
big
business,
bounce there on
confidence
the
that demand is going to be
SPX.
there for the long term, and so we can grow our business in support of that.
14 years in, still going strong and growing. I mean, what do you tell some of the shareholders that maybe...
I'm just being very patient right now. I have a feeling a big play is going to come in, but I don't want to rush it because we're just not moving much.
The Liberty Energy message?
Of course, we always have short-term blips in
We did bounce off that 63.
Macro situations, sometimes outside of our control. But we're building an energy business for the long term and
broke resistance
and, with a strong platform that will contribute around the world, I think, from not only the oil and natural gas side, but also the power generation side. So I'm excited for the future.
Do you you talked about demand. Is there any way to quantify demand? Is it improving? Is it improving greatly? Is it, what kind of year are we going to have?
It's moving pretty meaningfully for sure on the natural gas side. I think we're talking about an incremental 5 BCF a day of demand for power generation by maybe 2030-ish or thereabouts. Layer on top of that the incremental LNG export demand, and we have a very strong picture for natural gas inside North America. Oil demand continues to grow modestly year on year, about 1%.
No, I got rid of it. Are you in it, Francisca? You're in nothing yet? Good. I'm waiting for a big move somewhere. I'm just not that ambitious right now, as usual. I took 2 trades and I'm up $30. Probably my worst day in years of making money. predicted we'd bounce, but damn, I didn't take advantage of it this morning when I should have. Let's see if we hold the 63 here. So I could have got them puts right there at 420, the 5740s. Now we're at 520. These are the 5740s. By one contract, I'd have made $100 right there on that little candle. Here's another trend line, overhead resistance, and we're at that. We're at a number 4 on Mr. Sell the rip, huh? You really think so?
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with
Carl
the best
Nation.
service, wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange, a winning day on Wall Street. We're looking at a name on the move this morning. Diane King Hall, host of Morning Movers, is here of the Schwab Network, and looking at FedEx hitting it after hitting the 52-week low last Friday after lackluster earnings that it had. Now we're seeing the move that we have not seen since June of 2024. It's moved higher.
It is. I mean, this is either going out on a limb here, and it's early call about momentum potentially at FedEx, or it could be wildly wrong. So this is Jefferies, who's upgraded their view on FedEx to a buy from a hold. Now, they did ratchet down their price target, though. Their price target is $275. Previously, they had it at $300. They think that the market is, quote, overly distracted by the macro. As you mentioned, it hit a new 52-week low last week, but analysts are saying this could be a buying opportunity here. The pullback in shares driving the analysts to upgrade FedEx. One of the key reasons around this is their decision to spin off their LTL business. That's the less than truckload business. They believe that will unlock shareholder value here. It's a structural change that essentially Jefferies sees as a positive for FedEx. They're undergoing, in their view, this major cost transformation that will occur regardless of the macroeconomic conditions. They talked about initiatives that FedEx has like Drive, Network 2.0, and the Tricolor Initiative. They think that will boost efficiency and streamline operations. And so the belief is that even if economic conditions are still uncertain, that FedEx's own internal cost-cutting measures could drive earnings growth, or should drive earnings growth in fiscal year 2026 and 2027. And so overall, Jefferies believing that but when it comes to the big picture around FedEx, investors are too focused on the macro conditions.
Okay, nice to see you,
Good to
Diane
see you
Hall.
as
Good luck
well.
there at FedEx today with the up arrow on the heels of some positive comments. Okay, now disruptors. George Sillis is here, senior markets correspondent, looking at what was a favorite name, and that is Supermicro, but it certainly has had a lot of volatility lately. So, and recently, sure, up, but we're also saw a sell rating, right?
Well, yeah, I mean, if you look at Supermicro, obviously it's come down from its peak last year, over $100, and this was certainly a darling in the AI arms race, particularly in the data networking and server rack space. And I think always the challenge for this company primarily has been competition because liquid cooled server technology
Missing all kinds of opportunity.
Very unique, but there's a lot of competition from companies like
5740s.
Enterprises, and there's a positive catalyst for Supermicros is that they're current on their financials, which they were in question of going back to the fiscal year 2024, but they are current. They don't face those delisting fears anymore. And so right now, I think there's some mixed views going on with the analysts. If you actually go back and look last week, JP Morgan actually upgraded the stock to $45. But they did denote some of the problems.
Yeah, this is if you're in these trades, you got to make it fast.
Gross margin compression because the competition and lost pricing power. And today, Goldman's now had a $40 price target with a neutral rating. They actually downgraded the stock to $32 at the sell. And they denote very similar things that JP Morgan talked about, which is essentially, and this is the case, if you look at the last year, gross margin compression has really evolved in this name. It was down about 300 basis points in the last year compared to its 5-year average. But there are some bright sides for Supermicro because if you do look at some of the guidance the company's provided for fiscal year 2026, they're anticipating $40 billion in sales, and that's nearly double their trailing 12-month average, which is around $20 billion, and it's trading around 10 times 2026 earnings. But I think that Goldman is really looking at potential widening out of that earnings multiple because of slower earnings growth because of the lost market power and pricing power that the company may face because of competition.
Right, understood. How do you go about an example trade today now?
Yeah, I think I think the stock right now is pretty balanced. To be honest with you, Nicole, I think there's some positive catalysts and there's some negative catalysts going on. It's really just trading quite volatile.
Where's Rob?
Volatile-like because of the fact that it's a high beta name. There may be a short-term catalyst because of the market moving back to the upside, but volatility.
7 minutes of side movement here.
90% implied volatility is going out to the end of April expiration. So I'm going to sell some puts again because the overall market VIX is still 18 or higher.
Yeah.
We're going to capture that high implied volatility in case the market does continue higher. That'll compress. So I'm going to sell the 37 April monthly contracts. These are puts now. You could harvest about $1.75 a share in credit, or $175 a contract. So in essence, the break even on this trade is 35.25, and the stock just basically needs to hold $37 between now and expiration in the next 24 days for you to achieve max profit. And that premium is quite rich. It's $1.75. It's about 4.8 or so %, roughly speaking, a yield to the strike price in 24 days. So I'm not necessarily picking a direction, basically picking a level that the stock will hold between now and expiration, which is $37.
Yeah. All right. George Sillis, it's great to see you. Thank you. Looking at Supermicro for us after a downgrade over at Goldman Sachs, which is down 5%, and the example trade as well. Thank you. Coming up next around 360 round, all about crypto. Bitcoin has been getting near the 90,000 mark again. What's the crypto catalyst, right? And what's going on with Ethereum? Solana's had a lot of news with ETFs. We'll be right back.
Trading at Schwab is now powered by Ameritrade.
It's not an easy day for me
Even
today.
more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way.
But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. We're watching Bitcoin. Bitcoin futures got a bump after President Trump took office January 20th. They've not been at the 100,000 mark, though, since February 7th. So what's next for Bitcoin, crypto overall? People love crypto, and they feel this administration is a much more friendly administration to crypto overall, having a crypto czar and putting crypto into the sovereign wealth fund of the United States of America. Andy Baer is here, head of product and research for CoinDesk Indices, right here on the desk, and Alexander Bloom, CEO 2Prime. Thank you both for this conversation. So we're waiting for Bitcoin to get back to the records, but still it's had an incredible run. I mean, 1 year up 30%. And so, Alexander, you'll take that, right?
Yeah, great to be back again. Absolutely. You know, it's been a momentous rise for Bitcoin over the last year. It's, I think, never been less risky to buy Bitcoin. And I think the path from 1 cent to where we're at today is much more unlikely than from where we're at today to $1 million per Bitcoin. I think right now, you know, there's a lot of macro uncertainty between tariff fears and uncertainty, Doge cutting and slashing things, and lots of other rapid policy changes, instability in Ukraine and the Middle East. I think it's tough when the president, you know, you don't know if we're about to start World War III or if capital gains tax is going to be removed permanently.
You didn't worry about that 2 years ago?
It's a difficult environment for any risk on investors to get involved with. That being said, if you look at Bitcoin, it's rallied up to 88K today. Funding rates are still actually quite low, about even on funding rates. And there's a huge options expiration this Friday of about 12 billion in options. That
I think we're retesting for the last
and,
time here.
Speculators to reposition into Q2.
We're going to see. Is this the last retest of the top and then to the VWAP? That's my question. I feel like I want to take a small risk just to be in something. 5740 puts, or the SPY, or the 5770 SPY. How about a both? A straddle. Let me see. Is it strangle or a straddle? It's a strangle. Ooh, God, those are too expensive. We're going to find out real shortly here. I'm going to get in the put. The 5740. $3.50. I'm taking a risk. Prepare to cry. I'm not going to do it. I'm not going to cry. I'm going to win. Drop. I beg you to.
Made, a lot of them favor Bitcoin. It seems like most of the leadership focused on crypto has a favoritism towards Bitcoin, and most of the money in crypto is Bitcoin, over 50% of it. And so that's what I believe in.
The moat.
Yeah.
Yeah, the big player with the moat, I guess. Great to see you both, Alexander and Andy. Andy Bear here on the desk, Alexander Bloom there. Thank you both so much. Really appreciate it. Great conversation. Thanks
It
for
was,
being with
wasn't
me
it?
and joining us here on Trading
Unique.
360. I'm Nicole Petalides. I'll see you at 2 o'clock for the watch list. Join me then. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction
Drop.
by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions on markets, which are in rally mode, and then we'll have some option strategies. We're going to cover Boeing, which has rallied over 20% over the last couple of weeks.
Sure has.
And was upgraded today. And KB Home, which reports earnings after the close amid a steep sell-off in the sector. And like Folio has consumer sentiment data in Affirm, the buy now, pay later stock has fallen sharply this month after losing their partnership with Walmart. Now let's take a look at those major indices, which are near session highs as we speak. The benchmark S&P 500 up over 1.6%, the Dow up over 560 points, the NASDAQ 100 up 2% on the day, piling back into tech, and the small caps, Russell 2000 up nearly 2.25%. To help me break all this market action down, let's bring in my co-host for the day. That's going to be Kevin Green, Senior Markets Contributor here on the network. KG, it's rally ho here for equities today. And,
sure is.
It just seems like
we want
this
to pull
is all
back.
based on the optimism that hey, maybe Trump will be targeted with those tariffs as opposed to the broad-ranging one that a lot expect in the markets, at least anyway.
Yeah, and that's what the Wall Street Journal is reporting. I believe Bloomberg also confirmed that report. Now, we have not heard from President Trump specifically around this
Not
issue,
yet.
so we would love to get a little bit of clarity and or, a confirmation that, yes, we will see a little bit more of a selective process rather than just broad-based tariffs across
God,
the board.
I'm up $40
We're looking at pretty much any country that has tariffs on us. So we are seeing a decent little rally here. Tom, this is also after the OPEX expiration that we had on Friday of last week. And if you kind of look at the volatility, look at VIX just in general, seasonality-wise, we actually do see a little bit of a crush in vol. I think that's also kind of helping out the equity market for now.
390.
Maybe we do have a lot of this tariff talk being priced in for the moment. So a nice little bounce up, testing that 200-day moving average for right now. Let's see if we can actually get above around 58, 58.50. That would be a very key area from.
I didn't put that in here.
Be able to try to recover on the S&P 500.
Thought I had it in there.
That's looking really good today. We're at around
I didn't hit it.
80% of stocks in the green so far. So this is looking like a pretty decent day so far. Let's see if it's gonna hold.
Yeah, all 11 of the S&P 500 sectors are positive on the day. We got the heat map up there. Lots of green on that screen. KG Consumer Discretionary leading to the upside here today. And that's been that underperforming sector recently as people think that, hey, consumer spending's down, sentiment and consumer confidence is down. So this is a nice little reprieve for that specific sector, right?
It is. I mean, a lot of that's also being driven by Tesla. I believe Tesla's up about 9.5% today, and that's within that consumer discretionary bucket. But even if you're kind of looking at an Amazon's up over 2% today. What's going to be very interesting, though, for Amazon, has not been able to break above and hold above that $200 level over the last week or so. And we're trading above $200 right now, but that has been a key area of resistance in the past. That we're trying to reclaim. But if Tesla can continue to outperform, hold these gains, or even see a little bit more gains to the upside, consumer discretionary is definitely going to continue to see some love here. And even NVIDIA is having a decent day so far, with NVIDIA up around 3.5%. Once again, 120 level has been a key area of resistance for the stock. Let's see if it's going to be able to hold. A lot of these stocks are testing either their 20-day moving average or their 200-day moving average. So
Come on.
Confluence between the indexes themselves.
Nothing's moving for me.
Along with
We're
the
at 390. I'm up $80.
areas of support here.
Yeah, AMD up over 6%, Palantir up 5.5% today. Some of those chip names rebounding pretty solidly. Financials doing really well today. So broad-based rally. What did you think, Ken, of the PMI composite data that came out? Services looked really
down
good.
40.
That helped lend some support to the equity rally, but then saw a little bit of reversal in the manufacturing components with the PMI. What was your takeaway?
Well, manufacturing has just been soft for a very long time. So the fact that we had that print, I don't think is really surprising to the street. And manufacturing is all of maybe 25 to 30% of total U.S. Equity economic output, if you will, right? Services is really the bread and butter for us here in the United States, and that actually did come in better than expected. I did not see the prices component within that number, so I think that might be a very key area of focus because that has been kind of running hot both for manufacturing as
Finally
well as
broke it.
services. But if we start seeing that plateau, that would also give the market a little bit of confidence that maybe some of the sentiment that we see from purchasing managers might be subsiding. And you can kind of look at the yield market, the 10-year yield.
My first red day in a long time.
Complimenting the fact that maybe we're unwinding some of this near-term risk-off type of premium, hitting a key area of support on the 10-year last week, getting close to around 4.15%. Now we're sitting at around 4.3%. So everything that we would like to see, yields higher, equities higher, is perfect for now. You just have to be able to hold this and then have some follow-through going forward over the next couple of trading sessions. But the technicals for the S&P 500 kind of say that maybe we see another 2 or 3 days of this rally until we get to some really key areas that shorts might try to step in.
A few days of this rally, he's saying.
Covering there also, but KG, that's kind of what my theme here is, that these tariffs aren't going away. April 2nd, they're still coming down the pipeline, and maybe he targets some, but it just feels like he's going to come out between now and then. He's going to talk about more tariffs. They just put 25% on anybody that buys oil from Venezuela today. So you're always going to have that headline risk here, and is that what investors and traders should be continually focusing on because, yeah, the S&P 500 was up 0.5% last week, snapped a 4-week losing
called Target
streak,
out yesterday.
But at the same time, there's still risks across the board in most of its headlines, right?
Yeah, correct. So we don't know if this is a correction that has now, hit a bottom and now we can kind of move higher to all-time highs, or if this is the start of more of a bear market. I mean, it's not outside of the realm of possibility for the markets to have these counter trend bounces as we have a larger formation of a bearish market kind of taking place. And I think that you have to be skeptical about these bounces until you actually see us really confirm the price action, and also having that being complemented with volume and sector performance and broadening out of this market. So I would say cautiously optimistic. You are right. I mean, he may come out with a comment. What is kind of interesting though, Tom, if you kind of noticed last week, President Trump really didn't talk that much when it came to the tariff talk. And I think that's one of those signs. Maybe he got a little bit of a signal from the Fed. Maybe his advisors are kind of letting him know, look, one, it might be hard for us to implement and track, and then two, this will have a meaningful impact when it comes to the economy. And so maybe you're seeing a couple of these leaks kind of hitting the market in order to try to kind of give us a little bit of confidence that it's not going to come through. And then the last thing I will say, we're in this weird period where sentiment data is bad. Right. I think we can all agree on that. Mm-hmm. The sentiment data and hard data, there's always going to be a lag. And so are we, seeing the sentiment data, and then 3 months from now, is the hard data really going to show this slowing type of narrative? I think we're kind of in that pocket of uncertainty with tariffs. And we've seen these problems or these situations with President Trump before. Look, I mean, sometimes we create our own problems and then fix them, and everybody's kind of happy about that, right? And this could be another one of those situations. He's very unpredictable in that sense, and I think you just have to keep your head on the swivel here. Tight stops, take profits when you can, find pockets of opportunity. Don't stay too long in one trade.
Yeah, good lessons there, KG. And President Trump still watches the market, even though he said, hey, there might be some bumpy, period here while we, get rid of some of the massive spending that the previous administration had, do the tariffs. But, you mentioned that nothing's showing up in the hard data that's kind of putting any fear into anybody at this point. And, some of those numbers and data points are lagging, right? We understand that part of it. But, when I look at jobless claims, those aren't going up at all, right? And they're, you got Doge working their magic in Washington,
paying attention,
DC, trying to get spending down and waste down. But at the same time, when you look at that, if we start seeing those numbers, especially I'm looking at the jobs number, I think, and I think that's what the Fed's going to be keyed on moving forward is jobs data. But that still hasn't shown any cracks really at this point, KG.
And you're seeing a little bit of pressure to the upside when it comes to continuing claims, but I think it's not as aggressive as probably what the market has priced in, right? You're seeing some marginal increases on continuing claims. What's also very interesting about this dynamic, the Doge cuts, some of this stuff might be reversed. It sounds like the U.S. aid program, it looks like they might actually be reinstating a lot of those employees, at least for a month, as this kind of goes through the court system, right? And so there's a lot that's going to take some time in order for it to trickle into the markets. Some of these severance packages don't even end until like September. So some of these individuals that are losing their jobs on the federal level may not even show up in the rolls until later this year. So there's a lot that, once again, we're kind of in this odd, quiet period for now. And I think the market's going to be okay with that. And any signal that we get of softening of tariff policy, I think would be probably a really big win for this market. And if you're a bear, these bear market cycles don't just we don't just sell out of thin air, right? You have to have catalysts in order to do so. And you need to have compounding catalysts. We've had a couple of pretty decent ones. We're running out of narratives on the bearish front here. You need something to really kind of double down in order to really kind of push this market down. So I think that's kind of where we're at. And if we have these trend days, you gotta ride those trends until they stop.
Yeah, that's true. Just like we're to the downside. We're a 4-week losing streak there for the S&P 500. So now trying to right the ship here a little bit. KG, looking ahead this week, we got a lot of data points. Besides that PMI composite that came out, market kind of like that. But then consumer confidence tomorrow. You get some housing data throughout the week. And then PCE at the end of the week, and I think it's going to be the one everybody's going to focus on the most. But if you look at that confidence number tomorrow and then sentiment data on Friday, I mean, I just don't know if that's going to, reverse itself. Maybe some consolidation would be good enough for markets.
I think, I mean, actually, I mean, if you really wanted to see us kind of shake off some of this bearish narrative, this market needs to have 2 or 3 more days like this, 1% days to the upside. It's always this question of, are we seeing the October, 2023 lows type of market where we hit that 50-week moving average, and then after that, like 4 weeks, 5 weeks, we went up 15%. That's the type of thing that you're going to need to see in order to try to shake off a lot of these technical bear signals that are showing up on the weekly charts and the monthly charts. So I think if you're kind of looking at the economic data this week, Fed speakers will probably be the biggest focus for right now. Gets a little bit more of an understanding as to their thought process when it comes to tariff policy. Consumer confidence, I think, knowing what we know from the University of Michigan, we're probably bracing for a bad confidence number. But housing data has actually seen a nice little sharp rebound to the upside. So we've seen that with existing home sales, new home sales, hopefully we would have the same type of trend. Durable goods, very volatile. I probably would discount that just in general. And then Friday, we have PCE, and analysts are really good at projecting PCE because we already have 65% of the components. So I would not really expect any type of shocking upside beat or downside beat there, probably more coming in line with expectations. But from a technical standpoint, Tom, we need to have this train continuing to move to the upside fairly quickly because there's on the monthly chart, it still looks really bad. Weekly chart also doesn't look that great. And so that's something we have to be mindful of. I do want to highlight that you brought up Venezuela. I don't think there's going to be a lot of exposure there, Tom. Venezuela is not a huge exporter of crude oil. They have a lot of resources, but their infrastructure is lackluster, and a lot of the places that they're exporting to, we don't even do business with here in the United States, like Cuba and things of that nature. So I don't think that'll bring any major impacts to the broader tariff talk.
Yeah, crude oil up nearly 1.5% today, back above $69 a barrel. And KG, just real quick before we go, all the narratives, if we see some relief between Russia, Ukraine, we've already seen some geopolitical risks start to fade a little bit here. I just don't see a bullish narrative for crude oil at this point, but it still seems to be rebounding pretty solidly over the last few sessions.
Look, I would say so consumption-wise, you're not really seeing any type of bullish trends. That's been the case for the last month and a half, almost 2 months now, right? That push up to the upside that we see on that chart recently is more of that Arctic blast that we had in like early January or what have you here. The geopolitical risk premium is really underpriced, though. Everybody's kind of talking about this Russia-Ukraine conflict, and if we come to a resolution, is that going to be bearish or bullish? Look, I think the market has already priced that completely out of the market. It's not really a factor right now. The supply lines and logistics have already...
I don't like days like today.
...in the European and Middle Eastern markets over there. I think the Iran premium is discounted heavily. Honestly, Tom, it sounds like... It feels like we're going to go into an escalatory type of event with Iran. And if that's going to be the case, that's where you get your bull case when it comes to oil. And just to note, crude oil is moving up higher, Brent is moving up higher. They're both up 1.4%, give or take. But if you look at gasoline, up about 0.7% so far. Diesel's only up 0.3%. This is just an oil narrative. You're not seeing it in the byproducts. And so that's something that may be short-lived. But the Iran premium is really cheaply priced. I mean, if you look at the at-the-money call options going out a week for crude compared to realized vol, expected realized vol, it's really, really cheap right now. And that's not a recommendation. It just means that the market's really underpriced for the upside move.
All right, great breakdown for us. Gold actually flat today and off of those all-time highs we saw last week. Also maybe a little bit of risk off there in the gold markets because that was getting bid up as markets were getting hit on the equity side. All right, let's take a quick break here, KG. When we come back, take a look at Boeing. The aircraft maker stock has rallied over 20% over the last 2 weeks alone and was upgraded today. We're going to talk Boeing when we come back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
We're back to Fast Market here on the Schwab Network. It's time to talk Boeing. More good news on this front. They won the contract for the new next-gen air fighter from the Air Force. That was last week. Then this week we got some more good news. Let's bring in Caroline Wood, senior markets correspondent here, help us break these stories down for us. Caroline, go ahead.
Hey there, Tom. Yes, Boeing shares up another 2.5% today, adding to Friday's 3% pop on news that the Air Force's next fighter jet, the 6th generation F-47, will be made by Boeing instead of its rival Lockheed Martin. So sending shares higher today once again. Also likely helping shares the fact that it got an upgrade from Melius Research. Following this news, Melius upgraded shares to buy from hold with a $204 price target. So just to put that into perspective, Boeing shares trading around $180.
Well, that's not real good news.
Right now, so quite a bit of upside according to Melius Research. The analyst there points to multiple reasons for their newfound bullishness, including this contract win. Believes Boeing is entering a period of positive news flow that can drive the stock higher. So
back to 330 now.
Air Dominance program could bring approximately $20 billion in defense revenue over the next 5 years. Longer term, they say production potentially could generate as much as $60 billion over several decades. Does say that Boeing Defense remains a fixer-upper, though. Other reasons for bullishness, pointing to the Boeing leadership team, saying that CEO Kelly Ortberg has a strong operational focus. He's been in the role less than a year.
We're back at support here.
The right leader to basically execute this Boeing turnaround. They say he's sought brutal feedback from employees on Boeing's leadership and also culture so that he can implement some necessary changes and improvements. They're also upbeat on deliveries progress. We know that's a key focus for Boeing. They say that there's been faster than anticipated deliveries of 737 aircraft post-strike. So it's not just this win over Lockheed that has Melius Research upbeat, but it certainly is helping. They did downgrade Lockheed Martin to hold from buy following that news as well. Should note that a bullish analyst from Jefferies over the weekend on Boeing wrote that this win for Boeing could add about 25 cents a share to the company's earnings over time. That's based on $4 billion in revenue and profit margins of about 5%. So, definitely some positivity helping push Boeing shares higher once again. And should note, Boeing shares now up more than 4% in the month of March and up 3% year to date.
Caroline, are any of these analysts kind of talking about maybe some of the potential risk for Boeing? As you kind of talked about, a lot of the news flow has been positive after a streak of very negative news flow. Is there something that's a little bit concerning from these analysts? Are they still seeing a decent little risk-reward ratio to the upside for the stock?
I think that if you take a look at the overall breakdown, the majority of analysts are bullish on Boeing shares, 64% rated as buy, and then there's about 29% in the hold camp. So there's very few bears out there, but I think that the future of Boeing really seems dependent on Boeing's ability to ramp up production of their commercial aircraft. So while this win on the defense side is certainly good, I think that the majority of analysts' focus is very much also, on their ability to ramp up. And it seems like there is optimism around that. We saw J.P. Morgan last week, I believe, reiterate a buy rating on shares of Boeing. More so around some positive commentary from an investor conference saying that the update from Boeing CFO supported their sense that the company is making good operational progress, which is what, in their opinion, matters the most by far. It says much work remains, but the positive stock reaction to that CFO appearance makes sense to us, and we can envision continued strength. So I think that, overall, analysts certainly bullish on this name. The median price target is around $201. So I think that, with Boeing, I think you have to be cautious, but it seems like the consensus among analysts is a cautious optimism based on this breakdown and some of the commentary that we've been seeing.
Yeah, finally in the headlines for the right reasons as opposed to the wrong reasons, helping out the stock today. All right, great stuff. Thanks to Caroline Wood, senior markets correspondent here, breaking down Boeing for us. KG, when you look at the stock, I know you guys talked about it last Wednesday when I was not around, when they had some news last week, but you did an example trade there that day. Just go ahead and break that down for us, because I think that's important to kind of maybe revisit some of the ways that you looked at it before.
Yeah, definitely. So actually looking at that trade from Wednesday of last week, we're looking at the January 2026 200 calls and doing that for a debit of $13.40. Now, if you kind of look at the current pricing, they're going for around $17.40 right now. So you're seeing about a $400 profit. There's definitely different ways that you can kind of manage the trade. You could take the trade off, or you could also look at rolling it or building it out into a spread. And Tom, it's not a recommendation, but sometimes if it's warranted and you want to continue to leave the trade on, you could turn it into a credit spread, but it's still looking at a bullish move to the upside and just letting it ride. And so a very interesting trade last week, and once again, it's a longer dated call, so you're not going to see a 1-for-1 move or even a 50 delta move or anything of that nature. But as long as you get the right direction in a short amount of time, that's where you can see some of these longer dated positions work out in your favor.
Yeah, on that date, that stock the day before on the 18th closed at about $161. So definitely seeing that. You got 298 days in that position too, if you have a position like that on. So as you mentioned, there's lots of ways to potentially manage it, or you can just close it, the market's open. So lots of things to look at there. But now we've got another example trade that you
Boeing used to be a market maker.
More short as far as duration goes, right?
It could be on a real good rebound.
So this is still on the bullish side of the market here, looking at a vertical call spread. At the April 17th, buying the 190 call, selling the 200 call. Doing this for a debit of $2.35, so the max loss is $235. Max gain is going to be $765. That's if the stock is above $200 at the time of expiration, with a break-even point of $192.35. This is around a 3-to-1 risk-reward ratio here if this spread does max out, Tom. But this is one of those example trades where if the stock goes up to 200, that could be good. But if you wanted to kind of get some upside exposure and the stock continues to run, and you do see a profit of a 1-to-1 or a 2-to-1 profit, that could also give you the opportunity to maybe cut this trade loose. I think the biggest risk that you have is that everybody is now kind of piling into the stock.
Right.
And once you kind of get to that key $200 level, or close to that $200 level, you might see an unwinding of this bullish sentiment here. So this allows you a little bit of upside potential, but a little bit of flexibility as well in the event that we do see maybe a short-term pullback once it gets to some of these elevated levels.
Yeah, the volatility.
Yeah, let's break this one down. As Kevin mentioned, the April monthly option series, so expires on the 17th, 24 days to expiration. You avoid earnings too on this because they report on the 23rd. So if you think it's going to rally maybe into that earnings event while avoiding it, this strategy takes advantage of that. Buying the 190 strike call, it's out of the money to the upside, and then selling the 200 call, bullish $10 wide call, vertical. Kevin mentioned 235 debit, trading closer to 220.
Get out even.
But that to break even of 192.35, if you pay $2.35 debit for this, that's about just over 5% above the current share price in there. So you do need a move on this. And KG, I think that's one of the things to kind of reflect on strategies like this, where you're buying, an out of the money call vertical on this, is that you've got a really good risk reward setup, right? It can expand to $10.
I'm up.
You're paying $2.35 on this, but there's a reason for it, right? Because you need that over 5% move just to get above that break even, right?
Exactly. In this trade, because you're selling that short $200 call, it's also taking advantage
I
of
don't
a
know my
little bit of
call
a
on
higher
here.
implied volatility. So even if the stock does not kind of move in the direction, you're not seeing as much of a roll off in premium if you just did the long 190 call here. But I kind of go back and I look at the ATR, the average trading range for this stock, Tom, and on a weekly basis, it's ranging around $13.40. Now that is obviously elevated, but if we even go back to kind of the lows that we saw back in January of this year, when you're looking at the average trading range, it was still trading at around a $10 move to the upside and downside, or that range for that week. So this is a stock that actually can be a decent little mover here, but you just need it to go in the right direction to the upside in order for this to be profitable.
Yep, the option market pricing in for that option series about a plus or minus $12.80 move, so that would be above the break even on this one. But KG, I think a good lesson built into this type of position here is you got to, feel like, hey, this stock is going to go higher if you put this type of trade on, because the stock could go up to 190 KG in the next couple of days, and this thing might not expand that much, maybe 50 cents a dollar. Option premium will come down, or implied volatility levels will come down. That'll hurt it also a little bit. So you got to be aware when putting on strategies like this. Just like I think one of the first lessons a lot of traders do is they'll buy an out of the money call. The stock will go up, but it doesn't go up far enough where their call doesn't expand in value, and you got to be prepared for that, right?
Yeah, definitely. You have to be prepared for that. And obviously, every trade that you place in this market, there is going to be some perceived risk. And we know that this one is actually risk defined with that debit here. But Tom, if you kind of look at the 3-year weekly chart, the strikes really align with a breakout. That 190 level is an area
We're
of
470,
basically have
480.
since May of last year. And so if you try to get a little bit of a resistance level at 190 and it does actually break out,
Come on, drop,
and that's where this trade's going to be very profitable. But on the other side of that, if it does hit that resistance level and then fades back to the downside, that's where this trade is not going to be profitable. But once again, risk defined, you're risking $235 for the upside exposure here, and hoping that a breakout can continue. And if we're in a new risk on type of market, a lot of these stocks that have been beaten up, trading at very discounted valuations compared to historical averages, those might be the ones that a lot of investors as well as institutional traders try to rotate into.
Yeah, I think you're seeing that out of the NASDAQ itself today, but definitely need some more good news headlines on that example trade. So good look at that. All right, let's take a quick break. When we come back,
there we go.
We'll be joined by Andy Swan from Lifefolio to look at sentiment data in Affirm. The buy now, pay later stock is down about 18% so far this month.
I'll take
on the back
that.
of losing its partnership with Walmart.
Yabba dabba doo! About time, ain't it, Mike?
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
And Bardo,
actually,
your mic's on.
From Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
Thank you, buddy.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
I'm happy. I needed that. Just took a little while, a long while. thought you were looking at what? Punk?
Welcome back to Fast Market here
Oh,
on
yeah.
Schwab Network. Before we bring in our next guest, there were some headlines out. Trump said he will be announcing tariffs on autos, aluminum, and pharmaceuticals in the very near future. So maybe not the targeted ones that everybody wants. So more headlines doesn't seem to be negatively affecting equity markets, just below their session highs. So we'll continue to watch that story develop as Commerce Secretary Lutnick's also making some comments. All right, now it's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
Happy Monday to you. Affirm, it's been getting hammered so far this month on the news that they lost a deal with Walmart. And I'm interested to see what kind of data that you guys have, because you guys previously, as the stock was going higher, you guys were right with your data that, hey, they're growing. They continue to grow, take market share. Everything was pretty positive. Are you still seeing that kind of data, even with the Walmart partnership breakup?
Yeah, we are on the consumer side, especially. So, we don't have a whole lot of insight into why Walmart made the decision that it did. And, there's always the risk that Walmart's a canary in the coal mine, and that, all of Affirm's partners are thinking the same way or could be thinking the same way. There's definitely more competition in this space. I think Affirm was a really strong early leader. So we don't really know what's happening on, the partnership side, but what we can say is that on the consumer side, Affirm is best in class by quite a bit. And we still see very healthy growth metrics in terms of, the number of web visits. If we look at that on a year-over-year basis, Affirm solidly in the lead in terms of growth versus peers. In terms of, app usage, same thing. Monthly active users up 17% year-over-year. All of our sentiment data is very positive for Affirm. People feel like the company is fair, provides clear payment structures, very good on communication. And so consumers love Affirm, and they like it a lot more than its competitors. So right now we're just sitting here watching and thinking, okay, Walmart may have gotten a deal they can't refuse from Klarna as they kind of try to hype up the pipeline going into their own IPO. Who knows how much they had to give away in order to get that deal. And so it could be it's very possible that Affirm is still in the driver's seat, that there is more competition coming. But when we look at it from the consumer perspective and who the consumer prefers to use, and I think ultimately that's going to be who wins, that's who these companies will have to go with, it is clearly Affirm. And we think that as of right now that this pullback in Affirm share price is probably at least a trading opportunity, if not a longer-term investment opportunity.
So, Andy, I agree with you when it comes to the consumer demand. Do you think that there's any type of fundamental risk for Affirm as far as the credit profile and the potential of an economic slowdown, or consumers that might be directly the cohort that they kind of cater to, maybe falling back when it comes to paying down these installment loans? Is there any perceived risk that you have, or anything in the data that you're seeing that could allude to any type of weakness like that?
Yeah, I think that there's always macro risk, and there's always credit risk, especially when you're talking about some of these purchases aren't the most secure type of loans that you can make. You're loaning someone $200 over the course of a few months. It's a very different risk profile than a home or an auto. But Affirm has actually built out what I would consider industry-leading credit worthiness type of scoring. They don't rely on traditional credit scores. They have their own data sources and their own user metrics and behavior metrics that help them identify when a loan is likely to be paid back, or when a user might be getting ahead of themselves. And so we think that if Affirm was going to see significant problems in that kind of payback environment, that we probably would have already started seeing that, and we're really not. So I think Affirm has done a phenomenal job of building out its credit worthiness tools on these users. And again, I see them as the leader in the space. I think it's more likely to affect competitors than it is Affirm. You know, you never know. It's kind of like that Warren Buffett quote. I think it's something like, "You don't know who's swimming naked until the tide goes out." That's clearly a possibility and a high risk factor for Affirm because, again, these are extremely secure loans. But so far, they have proven to be the best in the business at assessing that consumer risk and delivering a loan product that consumers really like and are able to pay back. So far, so good for Affirm.
So it's just traded $82.50 a few weeks ago before this news came out. There's 3-year highs for the stock. It's pulled back 18% so far this month. With that data, Andy, if we had earnings coming up, they don't have them for a few weeks. Would you guys be buyers here according to what you've seen?
Yeah, I think so. I think that, you know, you kind of have to take the Walmart news with a grain of salt. This is a company that has, you know, they're with Apple Pay, they're with Amazon, they're with Shopify, they're rolling out further internationally. Again, a name the consumers love. I think it's very possible that Klarna just had to get out there and do a really, really aggressive deal with a blue chip prior to their own IPO roadshow and probably had to give away the farm to get it. And so that may end up actually benefiting Affirm in the long term because they're, you know, one of their chief competitors is having to get so aggressive to get a single deal that is less than 5% of Affirm's total book.
Yeah, I think that's one of the key metrics that Affirm with after this report, that 5% of the
I needed that little boost
volume and only 2% of its company's adjusted operating income also was part of that Walmart deal. So that's good to highlight. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down Affirm. Kevin, you look at this, you look at their data, the pullback that we've seen. So the example kind of aligns with Likefolio's data, with their metrics and stuff. If you think that this thing's going to rebound, which it has the past couple of sessions, it initially fell pretty sharply on that. So I looked at a strategy that avoids earnings because earnings are at the beginning of May. We went out to the April 17th monthly options here, KG, 24 days to expiration. We're looking at buying a broken wing call butterfly here that's bullish to the upside here. Buy one of the April 17th, the 50 strike calls, sell 2 of the 57 strike calls, and then buy 1 of the 59 strike calls. Paying roughly about a $2.50 debit on this. That takes your break even to $52.50 to the upside, not too far above.
If we don't hold this here trend line,
price of $52, so only about 50 cents.
That's the 200.
Break even. Your risk.
I'd almost get calls here.
$50 that you spent per spread on this one. But KG, you know, I looked at the option market pricing at about a plus or minus $7 move into that April expiration over the next 3.5 weeks, and that's where I put that short 2 options on the 57 strike. But even if it does continue to move higher above 59 kg, it's still going to be a double in profitability.
Yeah, and you're also leveraging the high implied volatility as well to kind of get into this trade. So you, obviously this is bullish to the upside here with risk defined.
This is the correction.
Downside if you were
so if I look at the calls.
And so, you know, this is one of those situations, Tom. You're really trying to hit right at $57.
The 57.70s.
Those short strikes, that'll really max out this trade. But as you kind of talked about, if it continues to move higher, it still would be profitable. And this is a stock that can move very aggressively. Even $7, kind of looking at what we've seen over the last couple of weeks, seems kind of relatively cheap compared to the real ice ball here. So giving you a little bit of flexibility. Now, Tom, I do have a question for you. Let's say the stock kind of does go into your favor here a little bit. Are you going to hold this until expiration? Because usually that's what you do with butterflies in order to really try to capitalize, or is this something that you would try to manage before that expiration date?
I think most likely, you know, you look at this and you're right. They don't start really expanding in, even if it does go at or near that 57 strike where you're short, where you want it to go. They don't start expanding in price as much because of the butterfly makeup of this. But if this thing expands to $3.50, $4 prior to expiration and the market's open, yeah, you can take off all of it, take off half of it, depending on how many contracts you did. Or if you feel like it's going to maybe hover around that that level at the option market's priced in about $7 up here, then you can let it go towards expiration, maybe close it out. If
Man,
it
it's been a
continues to
long
expand
day.
into or right before expiration. There's different ways that you can manage it, but that's a good point there, KG.
Going sideways.
Because it won't expand as much maybe as you think it will.
The
even with a couple weeks till
5770's at
expiration,
230 now.
Even if you get the move that you need on it. And
This is what
if you
I'm-
look at this, you can buy the vertical, the 50-57 vertical. You're still going to pay more for it. You're going to pay about $310 for that vertical as opposed to $250 for the butterfly. But your profitability a little bit better because you don't have that little dip after the 57 strike like you do on the call butterfly. So keep that in mind. Also, all right, that's going to do it for that segment, cash tags. Now we're going to take a quick break here. When we come back, we're going to take a look at KB Home. Home builder stock has fallen about 30% from its all-time highs and earnings after the close. Housing market's been under pressure. Stick around.
$230 to $280. Squeeze.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your
Now,
streaming devices.
take profit.
Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Out at $3. Another 350.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at KB Home ahead of earnings, let's get a quick market update. Stocks are off the session highs, but still in rally mode as we hit the last 15 minutes of the show. S&P 500 up 1.5%, Dow up 500 points, the NASDAQ 100 up 1.9%, and the Russell 2000 still up just over 2% in the day. Some headlines coming out. Trump said he hopes Fed lowers interest rates. Energy prices are coming down, so he's making some more comments out there. More countries will fill up Abraham Accords, announcing cars tariffs shortly, pharma at some point. So continue to watch those headlines because they move markets, folks. So we'll do that as we keep going here. Let's get into a discussion about KB Home. They report earnings after the close. The sector has just been decimated over the last several months. Margins might be shrinking. Let's bring in George Tillis, senior markets contributor here. Ahead of earnings here, George, it seems the bar is really low for a lot of these home builders. We had Lennar last week. That stock fell post-earning.
I thought the day was never going to come around, but I got it on the way down, and I bought it off the 200 right here, run it up to the 21 and got out.
30% since September. But even though interest rates had fallen
Now
since
they're at 320,
January, the
330.
stock just continues to drift lower. So I think right now the primary challenge may not necessarily just be interest rates for the home builders. I think there's a sensitivity right now to prices. Maybe prices need to fall for the home buyers to step back in. But nonetheless, if you look at KVH's estimated earnings, they're expected to actually be down. So they're coming in with a lower
home builders
when it comes to EPS, $1.56,
KVH
down 10.2% versus $1.76 last year for the same quarter. And sales are expected to be very low in terms of growth, only 2% higher at $1.5 billion versus $1.47 billion for the same quarter last year. I think the average selling price guidance the company provides, I think, is going to be really important here, because if you look at last quarter, they actually had about a $501,000 average selling price denoted when they reported earnings, but at the same time they guided for 2025 between $488,000 and $498,000. Now that's down from last quarter. It's also down from the previous year where the average selling price was over $509,000. So I think the price sensitivity right now in this space is the reason we're seeing the declines in price, but of the stock. But if you do look at the forward estimates for earnings, they actually have already come down. I went and looked about 2 months ago. The earnings estimates for this year were $8.66. They've actually come down to about $8.14, with sales at around $7.04 billion. Now keep in mind that number for this year, 7.04, is just a fractional increase compared to last year's total sales of $6.9 billion. So what we have here is essentially multiple compression. Average selling prices seem to be very stable to slightly down. We are seeing earnings estimates come down. Prices come down by about 30% since September. But typically speaking, when you have stocks that are estimated to grow in the mid to low single digits, you'll see the earnings multiples in those names trade in the mid to high single digits, whereas right now KVH is trading around 7.5 times this year's earnings.
Yeah, you always look at those, those stocks and the valuations, the PE ratios on them. They're always quite low. But George, when you look at the macro economic headwinds that might be out there, the higher interest rates,
they dropped down pretty fast.
Down, 10 years down about 50 basis points from those highs that we saw in mid-January. Ticking slowly, the 30-year mortgage rate's ticking slowly lower. That's helping to spur a little bit of activity. But George, the incentives that these companies have had to give to home buyers that are strapped and home prices remain at or near all-time highs, is that why we're seeing the steep 31% decline from these all-time highs? Is because they just can't make up the margins at this point?
That's right. I mean, the consumers now, or the home buyer, is really price sensitive. Just in my experience or my observation now in my neighborhood, there's a few houses for sale that have been on the market for quite some time. So for what it's worth, obviously the interest rate component has been a challenge for home buyers. But now it comes down to discounting, and I think that is essentially also why we're seeing, I would say, a pretty pronounced decline in EPS guidance that the company is providing, or at least the analyst estimates, like I said, coming down from $8
dropping again
just a couple months ago, down
we'll
to
see if it wants to stay bullish here.
But for what it's worth,
I'll
the
go
price
puts
in
again.
the stock has already declined 30%. So again, if they denote some declines in average selling prices versus what they already guided going forward, that might be
back at 200
pressure that the stock may face after earnings.
Yeah, right now the stock is hitting over 1 year lows here going into the report just last Friday. George, when you look at this, the stock rallied after earnings last quarter, after the stock had fell into that earnings report, but a big red candle, and now we're below those levels. Is this more of, the consumer confidence and sentiment data has been waning a little bit? Maybe people aren't out there ready to buy a house with all this uncertainty, right? Is that part of the problem also?
No, I think it is. I think if you just look at the price action in the stock, obviously it's still drifting to the downside. I don't necessarily see much momentum reversal going on for this stock. Obviously, the price action tells us a lot of information, but
there's a lot of uncertainty going on 3 or 4 years ago.
Soft affordability is challenged, and interest rates, irrespective of the fact that they have come down since January, it hasn't really helped KVH very much. And so I think that's very telling when it comes to this industry space or industry group. And lastly, I'll say this, that even if you look at what the Fed has done, you know, they're reducing their quantitative tightening in treasury bonds, but they're actually continuing their quantitative tightening in mortgage-backed securities. So again, I think that also presents potentially a challenge for the market here in the housing market.
All right, great breakdown for us. Appreciate it. That's
What
George
did I have
Tillis,
earlier?
Senior Markets Contributor here, breaking down KB Homes ahead of earnings. Now, the option market's pricing in about a $4.85 move, plus or minus either way in the shares. That's about 8%.
That's 57.40s.
So high volatility levels elevated going into this report. I mentioned the stock's off nearly 32% from those all-time highs that we saw last September. Stock hit 89.70, so significant drawdown there.
We're at a major pivot point right here.
So I looked at a strategy that's a paid-to-wait type of strategy, a little bit more conservative.
Oh,
but
shut up. I can't believe half the things you're saying today, any of you. Waiting for this squeeze to happen. I'm not in it. And we'll know any minute which way it's going to go. Shalom. I think we're going to come back down and hit this 200 EMA. $57.40s at $4. VIX is at 18. We're testing support again here. Yep, IWM. Jimmy talked about it in the video. At 208.02 was a major resistance to break. So we got to break it again. If it's going up. Everything's at kind of a support right now, and that's including the IWM, QQQ, SPY, and SPX. Jimmy is great. Mister predicted a good sized pump. Yep. I put it in the video yesterday. I like the Jimmy's the Great. Hint. Hint. Randy, are you making money today? Yes or no? Randy. Randy, are you making money today? Randy. 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 Okie dokie.
As it has been, but again, just listening along. I like to keep all my stuff at one place, and those who were Southwest Flyers and Southwest card holders and had those at Chase, if they were frustrated with some of those switches that Southwest had made Perhaps United also looking to maybe win some market share with partnerships like this to urge some of those Southwest flyers over. Let's talk some semiconductors, though. I know these two companies have nothing to do with one another in terms of the products that they bring to marketplace, but they are in that ever-important basket of chip makers. Let's talk first Supermicro computer. Of all the green on the screen, we found one name that at least earlier was red. I don't know if it still is, Jenny, but it was definitely red earlier. Still is, yeah, by about 1%. And it got a downgrade on a positive market move like today.
I know, so it is down now about 1%. And now looking at this chart on screen here, this is a brutal move.
Loudmouth is up.
We are seeing this thing actually outperform. So what I might say in Supermicro's defense is that while they are lower today, while the overall market is, they are still higher on the year by 36% and some change. Also higher on the month by about 1%, which is not something you could say for the rest of tech. So this day is a bit of an anomaly, but they have been consistent, at least in this recovery story. Goldman today dealt with a downgrade to sell from neutral. Price target, though, $32 a share, down from 40. The shares up, they said, now 38% on the year, now 36, like I said. It's the best performing stock now in their coverage, and so they do now believe that the risk reward appears now more unfavorable, with some downside risk on the fact that it's facing now competition. Also, its valuation is lofty, and its gross margin story remains pressured, at least in the near term. They did also say that competition in AI servers is now intensifying, in part to less product differentiation, following some investments from their competitors that are now addressing the overall huge market opportunity. So they don't necessarily see this as a Supermicro specific downturn, but competition is going to enter this market, and they said it's going to be fierce, and right now risk reward is not as balanced as they would like.
You know, this stock, depending on where you want to draw the line from, vastly different pictures. So super volatile name, a lot of questions still remain in this stock, and as those questions and the answers ebb and flow, positive and negative, big moves expected and have been seen in this move. I can't believe the stock got almost back to $70 again. It was down to 17 at its lows. Just so fast moving. And to see another $8 or $9, let's call it $10 of downside. I mean, we're talking 25%. So this is a pretty bearish note. But certainly within reason, if you are a little bit bearish on the space or Supermicro, given the volatility that this name has shown us that it can trade with over the last not only just few weeks and days, but really the last year and a half now, as the stock basically collapsed over the last year. All right, closing things out here, let's move to the more automotive focused on semiconductor. Now, I know that it's been less AI centric, and that explains why this stock has been such an underperformer for several years now. But if you got semiconductor in your name, Jenny, your stock had to go up over the last few years. At least that's what I would have thought, but not the case for ON, as it's down 25% for 3 years and 40% for the last 12 months.
Yeah, and this is one of those names that whenever I look at the pullback from highs, or like I was just doing an assessment outside of the biggest names out there in tech, what are we looking at in semiconductors? This is usually one of the worst performers and by a lot now. So it's been a disappointment story for quite some time. Today, though, with a not really optimistic note, although a price target that's still at a reduced level implies optimism, Mizuho actually cutting its price target to $62 a share, still a fair cry away from the $45.85 share we're trading at right now, but significantly below their prior target at around $71. Kept an outperform rating, though. They did say that right now, with the softening in auto and electrical vehicle trends, they also are updating their analog outlook now for 2025 due to the downside, and highlights the really elevated demand of uncertainty. Also did say that they see some downside risk to these auto semis with these tariffs. However, they did say that with declining inventories and outlook clarity, this could actually provide some upside to an already beaten down outlook now for 2025. So mixed picture, take that for what you will. To me, that sounds like you're a bit right now unsure of a market that we've called for bottoms in for quarter after quarter, and we haven't seen a bottom yet. We're still continuing to churn lower, unfortunately.
Yeah, and I know these companies are nothing alike, but this has got a lot more Intel-like trading activity than it does NVIDIA, so hoping to turn around, much like Intel maybe has recently. What stuck out to me, though, Jenny, of the analysts that are compiled by Bloomberg, it's something like 32 of them. Only 2 have what would be like a sell equivalent rating, so think underperform or underweight, depending on that. And it's Morgan Stanley and BNP Paribas. The price targets for those 2 underweights are 44 and 43. Well, the stock's trading at 46, so it's less than 10% downside. But if I just look at some of the outperforms, overweights that are from like Evercore or Mizuho or Wells Fargo in the last few days, 60, 62, and $75 price target. So the ones that are bearish say there's $3 in downside. The ones who are bullish say there's something like $30 in upside. I think if I was choosing between the 2, I don't know who's going to be right, but it tells me that there's a little bit less risk than there is reward if these analysts have any idea what they're talking about.
Yeah, and that's an interesting point. I also think a lot of times with these like analyst calls, it's like I feel like we're so backdated, like it's so reactionary. It's never necessarily like great at gauging forward-looking price. But I mean, I guess it depends on your conviction. Obviously, there's a lot of still macro factors at hand that do influence a name like onsemi, but yeah, technically speaking, this name has looked like a bit of a disaster for some time, so definitely worth looking a bit more into here, as we're down now 28% on the year and 39% nearly on a 12-month basis and on. So we'll be looking at that more from a technical standpoint. We'll also be diving into the latest with the volatility in super micro. We'll be joined by our chart master, Ben Watson. Coming up next, we'll also dive into some example trades on Next Gen Investing.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to look at the technicals on 2 of our names in tech, 2 very different performers, but equally as important to one another. Joining us now for this fresh insight is Ben Watson, of course, the chart master, but also the senior manager of trading services at Charles Schwab. So Ben, we always appreciate when you have you on. It's such a fun treat. We'll start off with actually a name that's always a interesting technical take, because that's super microcomputer with the volume and the velocity of, I'd say, central stocks. So let's walk through some of the technical trends that have stuck out for you in super micro.
Well, sure, Jenny, and thank you for having me on today. I'll tell you what, super micro, one of those stocks that, you know, investors either love or they hate, and depending on what it's been doing, it could be on both sides of that equation. But right now, you see the stock kind of coalescing down around this 200 period moving average. It's been below that 200 period moving average significantly, really since August of last year, with one little blip back above. that becomes kind of the question, and maybe the mark to beat here. Now, you and Alex just talked about the fact that, we see a price target cut and a lot of pressure to the downside, but it's hard to deny the fact that it's making higher lows in this intermediate term time frame since November, coming back towards that kind of middle part. There's this big symmetrical triangle, and I know Alex said, hey, it depends on where you draw the line. So drawing the lines off the highs, which are coming down, and the lows, which are coming up, that gets you to the point where the apex of this triangle is centered just about over that April 29th earnings announcement. That could be the pressure that pushes this one direction or the other. It's centering right around that 43 mark, which has been really kind of flip-flopping between support and resistance. You can see support back into the October timeframe, resistance coming on through November, December, and then you get a little of that blip above. Whenever we see that excursion above and then it moves back below, that can generally be a confirmation of an area of support or resistance. And you also see both the
At that second support now,
relative strength index and the MACD, the moving average convergence divergence, both starting to build towards positive territory. They're not quite there yet, but again, a lot of pressures squeezing down. And I don't know, Jenny, I know you like things like watermelon and going on picnics and barbecues and stuff. I don't know if you've ever tried to squeeze a watermelon seed between your thumb and forefinger, but when you squeeze it hard enough, like between support and resistance here, it can pop out pretty quickly. So that may be what investors are looking for here.
Okay, and I love that analogy. That makes me think it's going to be warm out soon, because it's very much not the case here in Chicago. It's very frigid, so that makes me want all of that type of summertime vibe. But when looking at Super Micro here and some of the long-term trends we've seen, is there any degree of concern based on the fact that technically we don't have a lot of data to go off of, at least at these new price levels, and also the fact that we were in such a, not to say bubble, but such an exuberant time period that we've since really fallen back from?
Sure. There's no denying the fact that it's got a long ways to go to make back that ground. And the question is, will it ever get back up to some of those elevated or lofty highs? But, it's got to get out of its own way here first, and getting out of its own way perhaps begins with crossing that Rubicon of the 200-period moving average here, Jenny.
Okay, yeah, so a lot to look at here, and hopefully you're correct. Hopefully we see some
got a 1, 2, 3 coming up on SPX.
Vibes for Super Micro, which has been, actually still having a pretty decent year, all things considered. So all this in mind, now we'll look at trading this name for example purposes.
We're below the VWAP.
Joining me again, of course, is my co-host Alex Coffey. Alex, walk us through the thinking here. I know we've seen some resurgence and interest in this name, but hey, we're still up highs by 62%.
Yeah, I deferred directionally to the Goldman analyst on this one. I thought it was quite the call to downgrade to outright sell equivalent rating. Obviously, the stock reacted to it with it being down on such a strong day for the overall market. That being said, it has firmed up even since when we just started the show. But nonetheless, looking at neutral to bearish short call vertical in this name, giving it a little bit of cushion in case a recovery does happen for a short period of time. But looking for the stock to basically kind of stay where it is or even move lower here with this strategy. We're going out to the April 17th. This is going to be the April monthly cycle, Jenny. And we're looking at selling the 44, 46.5 call vertical for around 50 cents. If you can get 50 cents, we'll create a 3-to-1 risk reward, which we risk $150, a chance to make 50 per spread. Break even, the even 45. I guess it's odd, but you get the point. That I was trying to make. $45 round here is the break-even point. So as long as it stays below that through expiration, that's your theoretical break-even point. Neutral to bearish strategy. Perhaps you're already an investor in SMCI or have long exposure even. This could be a way to complement that, take off a little bit of that risk theoretically as well. So it doesn't have to exist in a vacuum, but kind of going alongside that downgrade to sell. It has been talked about kind of a squeezing-like pattern, setting up maybe for that earnings event down the line to break it out of the pattern. This looks to stay ahead of that event and looks to kind of look for more of the same in Super Micro. Neutral to bearish, though, with the risk being to the upside.
Yeah, and a name that's actually, as we talk, it was down about 1% to kick off this show, but now actually slipping into green territory as we speak. So that's been nice to see. Now to shift gears back to another name we're looking at from a technical standpoint. On semiconductor, very different story than Super Micro, a little bit more longevity as a company of interest, at least as far as our volume and our own coverage, but down 28% now on the year, Ben, and down 39% on a 12-month basis. I mean, what are you seeing here from a technical viewpoint?
Well, I'll tell you what, Jenny, this kind of fell off the cliff back in December below that 65 mark. And once it started on that downward trajectory, kind of breaking down through that support area, you saw a quick move to the downside into that February earnings announcement. And it was really kind of getting sucked down. You saw that little bit of a bounce coming off of the February earnings. But that puts it kind of right in this area. It's been building this kind of oscillating range that it's been in around the 50, back down to 46. And now you see it touching back on this 42 level of support. We get a little bit of a double tap at that level over the course of the last couple of weeks or so. But building at the same time, with price kind of compressing down against that 42, you see that the RSI, that relative strength index, is making higher lows. That's kind of a little bit of a hidden bullish divergence here. Now, is it a strong bullish divergence? Not really. Because if we were seeing price still moving to the downside on those lows and the RSI ticking back up, that's probably a stronger indication of some upside move. But the MACD is also gaining some strength, kicking over into those green positive piles there, if you look at the histogram. I think what you see here from a technical perspective, if it can gain some strength on this gap up and rally today, if it can break through the 46 mark, 50 kind of is that magnetic area where you've got that, in this case, the 50-period simple moving average. You've got a horizontal resistance level that this could get sucked up to and perhaps stay there. Now, once again, earnings are over the horizon in that April timeframe, and that's going to be a concern because that can push it up or down. But I think you see perhaps a bit of neutral movement here once it gets through this 46 resistance.
Yeah, and definitely starting this week off on a pretty bright spot here as we're up now 4.25%. So that's at least encouraging, and hey, we're hanging off the lows by 10%, but definitely a trend that has felt consistent, if not steady, to the downside. But appreciate it, the technical takes, as well as, of course, Ben Watson's just, I'd say, good-humored self on our show today. We so appreciate it, Ben Watson, our chart master today. Now when we look at, of course, trading this name for example purposes only, Alex, having a decent day, but as investors know of on, it's been a pretty brutal road to the downside.
Yeah, and while these trades do not have anything to do with one another, you'll kind of see how you could start thinking about multiple trades and how they relate. We'll get to that in just a second. Looking at a bullish strategy here in on semiconductor. We talked about how obviously there's more analysts in the buy and hold camp than there are sells, but even just the upside price targets being so much higher than even the downside more bearish ones, perhaps there is a little bit of positive asymmetry to the potential reward to the upside. That said, looking at a bullish call calendar, selling April 4th, buying April 17th at the 50 strike, just looking for a move higher towards 50. It's a pretty big move if you were to get it, about 10%. So only a little bit of time for that to happen, but a name that maybe is capable of making that kind of move if there is any sort of good news or just a lack of bad news for this name. And what I mean by how these names or these trades rather could kind of coincide or work together in some ways, you'll notice it's a 50-cent debit. It means our max loss is $50. On the other trade, we collected a 50-cent credit with a max reward of 50. So you can kind of see it's like, oh, you collected a credit one way. If that trade worked out, kind of redeploying that capital in a way in this trade if you started to think about those trades that way. So, of course, they have nothing to do with one another. It doesn't mean that either would work, but it is something to think about. $50 max loss, Jenny. Throwing the dart, as we say, looking for a move towards 50.
Looking for a move towards 50 and actually not making some decent progress even today to get there, as we are now just below $46 a share. We'll leave it there, though, for Chartmaster. Now, coming up next, it's time to discuss Tesla. There's no better way to start off this week than talking a name that will frequent at FOMO throughout this week, I'm sure. Tesla, though, today, talking about it on
I'm taking my sweetest time today, waiting for the right one. These moves are slow.
November of 2024.
These moves are just slower than slow I've ever seen in a long frickin' time. I don't know what's going on. It's the weirdest thing I've ever seen on a chart. Not the weirdest, but I mean, it's just a weird chart day. Hardly any bitty, every minute. I mean, the moves are just real small. I'm trying to figure out if this thing's going to squeeze to the upside or down. Right now, it's an ascending triangle. It could go up off the VWAP. I'm going to buy a call. What the hell? We'll give it a shot. I really don't want to. I want to hit that 200. The 57.65s. Snake with an ascending triangle, breakout, boom, baby. We're back to the 200. So that's called an ascending triangle. You got your snake with an ascending triangle breakout. I mean, I've had support right here. I didn't notice that earlier. I think I would. That'd have been a smart move right there. Kind of went down below that there, but snake with an ascending triangle. God, 280 already? And these things are depreciating big time. That was 280 down here. Now it's 280 right there. Caroline, I love you with all my heart. Can I come work with you? Please. We'd make a great team. I think she said, come on. Jenny from Chicago, Caroline from New York, it looks like Chicago there too.
Advocates and fans, and he certainly has no shortage of those who are, let's say, the opposite. And so when we look at this particular stock and we look at how to trade this name, depending on where you fall and what you think, you might have a different opinion. The news today seemed positive. The stock's moving back above where it was pre-election, which from a technical standpoint would be perceived as a positive. I looked at a bullish strategy because it's to the upside here today, best move in months. And it's the FOMO segment, Jenny. So that's what the fear of missing out in my mind is today. I looked at a call diagonal spread, buying the April 17th 300 call and selling the April 11th 305 call, looking to spend $3. The big key to this, and you could do a calendar spread, you could look at something more similar to what we looked at in one semi, but a name like Tesla just, it can make moves that are very, very large in magnitude. And if you're bullish this name, I wanted to set up something from an example purpose that wouldn't have upside risk theoretically. So even the event
what would that be?
A massive move higher and it ran through the strike, that you weren't losing to the upside on your bullish strategy, particularly for our FOMO segment. So for a little bit more risk, we made it a diagonal. $3 debit means you're risking 300
diagonal.
And with this one, the best case scenario would be a move towards 300, 305 by that April 11th expiration. If it happened today, that would be fine. If it happened tomorrow, that'd be fine. But best case scenario, that second week of April.
Okay, yeah, this name, again, with some pretty massive upside today on not really any, like, hugely specific news. I guess it had a lot to do with FSD in China.
It's great news, Jenny.
It's volatile almost every single day, so we'll definitely be covering that
Snooty.
this week, I'm sure. But that'll do it now for FOMO today. Now, coming up next, it's time to look at the social media stocks. And the outlook as the year rolls on from the sell-side community. As we have Pinterest today.
She's totally wrong.
More bullish analyst note out of Guggenheim. We also are looking at Meta Platforms, which is making a pretty nice move to the upside of 3%. So we have special guests joining us to discuss social media names more coming up next.
Doo-doo. Another ascending triangle.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'd now like to welcome in Dan Gang Hall, the host of Morning Movers, to discuss 23andMe filing for bankruptcy. Of course, my co-host Alex Coffey. So when we look at 23andMe today, Diane, this was a name, a stock doesn't frequently come up on my radar, but making a huge move to now.
Yeah.
I mean, a pretty substantial
This is
move
the
here to the
opposite.
downside. Yeah, 26%.
Yeah.
And usually bankruptcy news.
More than that, yeah. It's the opposite of a FOMO move right here.
Absolutely. So, I mean, what is driving this with the latest? Because 23andMe, I'm devastated by this. This was at one point, like, really, I'd say groundbreaking technology, or just like the whole concept of itself, I think, was so cool when we first got wind of it.
Yeah, there were a few issues at hand here. One, the company has never turned a profit. I mean, this is a company that came to the public market in 2021 during that massive inflow where we saw companies taking different steps to go public, and the SPAC. So they took that route. So it was a special purpose acquisition company is the process that they took to go public. Today, I mean, it's a far cry from its peak that it saw. Once upon a time, it had a valuation of around $6 billion. Today, its market cap is quickly approaching 20 million. So a far cry from its heyday. It's filed for Chapter 11.
Okay, we're pulling back again.
It's got several issues. They had trouble generating consistent revenue because when
Prepare you in the name of the Lord.
consumer comes to it, after that, for its its history, its ancestry, etc., then what? They struggled to try to start a subscription service that didn't really turn into anything. They struggled to try to have these different partnerships to offer therapeutics and research. It really struggled to take off, and so now they're filing for bankruptcy protection. It will go through this court-supervised process. The CEO has stepped down from her role. That's Ann Wojcicki. Now, she had tried to take the company private before. That did not resolve in it going private. She had a lot of pushback for it. And you'll remember in the fall, the entire board had stepped down, and that is, that really says something. They do have some new board members now, but the board members at the time really didn't like
one, the attempts that she was trying to do in taking the company private and just how she was operating the company. She does stay on the board, even though she's stepping down from her CEO role. She does stay on the board, and she will likely try to do something with, with some kind of trying to find a buyer for this company during the bankruptcy process. But again, it will be a court-supervised process. They have to sell assets throughout this process. According to the bankruptcy filing, they're reporting assets and liabilities that come in a range, and this is on both sides of the equation, between $100 million and $500 million. That's on both sides. That's accounting for everything. So again, the other overhang they've had for them is that massive data breach that they had that exposed thousands of individuals, not their DNA, but enough information that it was, a significant overhang for the company. In fact, on Friday, the California Attorney General had told people if they were registered there to take their information off of 23andMe. So a lot of difficulties for this company.
Yeah, and troubles, I didn't even realize about some of the data. I can see why this data remains sensitive, so just troubling, I think, from even brand perception idea there. But appreciate that great look, of course, Diane King Hall. And now it's time to shift gears and look more into the social media stocks. I'd now like to welcome in Craig Warnemont, the Chief Investment Officer at Venture Visionary Partners. Craig, thank you so much for being with us today. Well, starting off with Meta here, that the behemoth of Meta and Pinterest, both names, I frequent the apps far too often myself. But when it comes to Meta here, we've pulled back about now 17% from the highs. I mean, do you see this as any opportunity given how successful and consistent Meta has been for now several years?
Thanks, Jenny and Alex. Yes, we do think this is a big opportunity for investors to get in on a name that sometimes people feel like they missed it or the big ones are just too obvious, but this is a great opportunity to pull back from mid-February to mid-March, bringing the stock back down to trade at about 23 times forward earnings. Bears are nervous that those earnings numbers maybe come down a little bit because of high spending, mostly on NVIDIA chips and everything they need to make their AI offerings competitive.
Well, they pulled back.
Actually, if you look backwards and you see how much the company learned during their last foray into the metaverse, it seems like they've gotten pretty good at religion on cost control. In 2024, Meta posted the highest profit margin the company had since 2018. And so a big part of that was holding SG&A, selling general and administrative expenses, constricting that growth, so it actually shrank by 800 basis points since 2022, the quote-unquote start of the year of efficiency for Mark Zuckerberg and for Meta. So we really like the stock here. We've been adding to it as part of several of our strategies. And we've got a price target of about $825 versus the price last week of $580. So we think that this is stock that offers a lot of potential for investors, even though it's a big, obvious, well-known name.
Craig, it's also found this sweet spot in social media where those who go on it, be it Instagram or some of the other platforms, found the ads are somewhat welcome. The Instagram sort of e-commerce aspect of it has been such a flawless execution. Really, the only other name that I think's pulled that off in social media has been TikTok. That said, the next name we're going to look at, which is Pinterest, and I saw you have a $47 price target here, so if you did the math, percentage-wise, you guys like this one a little bit better in terms of the upside. But what Pinterest struggles with is expanding its user demographics beyond sort of its key group. What are your thoughts on Pinterest? I imagine some of the same market dynamics have presented a lot of the same opportunities.
Yeah, that's true. A lot of the same opportunities, and we do have a bigger percent upside, but it's probably a little bit less reliable of name, less well-known, and so on a risk-adjusted basis, we like them both equally. The bigger percent upside is needed to justify taking risk, and it's not a flyer. It's no 23andMe like you were talking about in the last segment, but certainly not as big of powerhouse as Meta. So we do like Pinterest quite a bit, and last quarter, in February, when they reported their Q4 numbers, they reported all-time record high monthly active users over 550 million. They reported record high revenue per user in that same quarter, and they said that management attributed that to their AI tools helping user engagement. So the people who are on there using it more and getting more people on, that's kind of the golden combination that all social media, any company really is striving for. So we think that the pullback for broad market reasons, nothing that they did in particular, the last update they gave was very positive. So we're looking at this as a nice gift to investors who maybe wish they got in before the earnings announcement. They have a chance to buy it at that same price now and hopefully recoup quite a bit in the coming months.
Yeah, so last question really quick before we let you go. I'm curious your thought on the impact of TikTok. If it goes away, if it stays, I mean, do you think that there's any narrative that shifts for either of these stocks, being Pinterest or Meta?
In the long term, it probably doesn't change the future of either company much, but in the short term, it's going to drive investor enthusiasm or caution in the area. So while the political ramifications are probably...
I remember when Pins was an unknown.
It seems that if anything takes away from TikTok, it gives to everyone else in the space. So anything that handicaps TikTok would be a good thing for these two.
That's kind of what I have been told and sort of read about. So I'm glad to get the insight today, and both of these names having pretty nice sessions to kick off this week strong. So we so appreciate it and appreciate you joining us today, Craig Warnemont, the Venture Partners visionary, here to discuss more on social media stocks. So that'll do it for now.
Pin shares are trading higher after
it's time to talk Oklo as we close
Cunningham
out the show
upgraded
with
the
some
stock
positive news, also
from neutral
earnings
to
throughout
buy.
today after the closing bell.
Raises price target to $40. Oh yeah.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30. Today we are talking Oklo, and here to tell us more is George Tillis, Senior Markets Correspondent for the network, and of course Alex Coffey. George, there's always volatility in this one. We've fallen a bit out of favor as of late, but we have earnings, so that's going to be an exciting catalyst for a name that is actually still hanging on to a 30% rally on the year.
Yeah, it is. I was just looking at the price action. Obviously, this is a name that's been up and down quite a bit because of the nature of its business as well as its financials. But nonetheless, I mean, this stock is still in play, particularly because of its technologies. It's essentially a small nuclear reactor design company right now. They actually are looking to get scheduled approval, at least for the application readiness assessment phase.
Okay, we're back at resistance.
To begin manufacturing their small modular reactors, which again are deployable reactors for power generation. And we know that it's in high demand because of data centers and artificial intelligence. But one of the challenges for this particular company is revenues. It hasn't produced any sales as of yet, and right now that's a primary challenge for the underlying business. They are expected to report earnings. They're expected to lose about 7 cents per share on an adjusted basis. No revenues to speak of, so it's a little bit challenging to provide a financial profile of the business right now. But it is certainly a company that is probably going to be up and coming when it comes down to deployable resources and, of course, nuclear reactors that are, again, from the standpoint of deployable ones that, again, increase the yield on a per unit basis, particularly in the areas of data centers.
George, I want to get your thoughts on this. Oftentimes, I think utilities, especially for long-only portfolio managers, is sort of a risk-off investment. It's where they pivot, given their mandates to be invested in equities and looking for lower beta segments of the market or sectors of the market. Some of these nuclear names, particularly Oklo, though, I don't know that that really fits the bill. I mean, this to me just seems like another extension of the big tech, the big AI trade, given the build out, the volatility, and the high beta aspect of this.
Yeah, so I think what you brought up is a great point, Alex, and I think I'm on with you in this. This company is not a utility. A utility company supplies electricity to consumers and commercial businesses, and they're usually regulated, and their only source of power in a regulated area because they're regulated monopolies. Oklo essentially is a marginal power producer, power generator that, again, is modular in nature. So in other words, they're able to be relocated to different areas. It's kind of like a rolling generator, let's put it that way. So that's why there's a lot of volatility. There isn't cash flows or revenues to speak of. And again,
Three Black Crows.
Need to receive
They just trying to tell us something
regulatory
again.
approval to begin, deploying their technologies. But
Are we going to stay up? Are we going to hold this support? We are in the sweet spot of a Darvis box. Or are we going to bounce? That's the question. I'm going to be looking at the calls here. Where are you? I don't know if it's going to hold or not. Right around 57.51. One more leg down. That's my guess. Here we go. Prepare ye in the name of the Lord. Pay attention, Yoko. 57, 50, 91. 57, 65s. And the 57, 70s. A change. At 195. Okay. 180. Bouncing up off my little support line. $220, $225. Now, if it breaks to 63, boom. If not, you need to get out. To 2.25. It's getting a bit warmer up all the time. Been one word day today for me. I know some other traders are kind of going, what the fudge? They're supposed to meet in Saudi Arabia or something? Am I right? Russia? Well, I made it to $1,000 today. Unbelievable. Now let's see if it goes to 57.47. Randy, prepare ye in the name of the Lord. 57.47. Oh, they already met in Saudi Arabia? Oh. Okay, get ready. Randy. We will move the calls up to 57.60. At 235. He's gonna break it. I can't take it. He's off the 200 SMA. Oh no. Ooh. No. No. Expansion pattern? Yes. Okay, I got to make a business decision. 3 huge crows. Jimmy, what put did you have earlier? I'll find out. Oh, it wasn't that one. Yeah, it was. Or was it? 57.40s. Yeah, it was. Ooh, they're at 580. Okay, that ain't bad. Okay. Man, look at that. Fuck. 175. 1.75. Okay, I made a business decision. 175 and 235. Yeah. Oh, Randy. Ah. So I'm at 235 at my initial entry. I could sell them here. Are we going to break the 200 EMA? Yes or no? $250. I could make a business decision right here. I think I will, because I don't trust none of this crap today. I'm out. 250. Yes, that's the EMA. 200. Oh gosh. Where's Yoko today? It's the EMA and the 9. It's having a hard time making the decision. Hey, this is Brandon. They took away my what do you call it? Secret Service. And I'm scared. I'm going to go hide in the attic. Okay, get ready to make another business decision. Now we have 3 black whores, hammer, a pullback, and a boom. I don't want to get too overexcited today. I've had a couple of good 3 trades there. I don't want to ruin a good thing. We are flagging out though. 9 hasn't crossed yet. Not yet. Now, if I was to look at this again, it's a second retest down here. Didn't hold it. Am I getting back in? I'm not sure yet. Let me clean this all up. I'll make a business decision here in a second. We did come back and find a good solid support. I'm not going to trust it. We're getting ready to squeeze though. We're getting ready to squeeze. I'd say within 1 minute. Okay? The countdown will start right now. 60 seconds. Mike, pick up on this. 59, 58, 57, 56, 54. Okay, get ready. Come to a double bottom here. As Jim looks at his calls, he's looking at the 5760s at 155. Can he get him for 155? That's the question. Because we came down and retested the double bottom, baby. And we're leading off with a hammer. Oh, missed it. You could have gave me 150. Well, it's 1:16 now, 2:16 Eastern time. There's the bald-headed guy with Mr. Hickey.
A nice little rebound day today after the S&P 500 snapped that 4-week losing streak last week. It was up 0.5% last week. So yeah, having a nice little rebound here. I'd just be wary that if it continues, because I think we're at some pivotal key levels here from the S&P 500, right near its 200-day moving average. If it can kind of get above there and settle above for maybe a couple days, that might lend some support. But yeah, you can't fight against this risk-on trading that we're seeing across the board today.
Risk on?
Without a doubt, people are wondering, when is it safe to get back in, or should I take profits, or do I buy the dips? I mean, we've been all over the place, no doubt, and to your point, right around that 200-day moving average too. So some key levels to watch. Can we make some higher highs, or at least recent higher highs? Let's talk about Intel. You found a bullish trade there. I believe it's trading.
I didn't look at Intel today. I called it out for a pullback.
Well, it was positive. It was up a couple percent earlier on in the session. Now
Whoa.
it's slightly in the red. So, yeah, maybe somebody taking advantage of the rally that we saw there
right.
earlier in the day. Pulled back. It's still up over 20%
Again,
so far in 2025, but coming off
but
of
not
really
enough.
low levels. And this is all based on the fact that they've got the new CEO.
Damn, thing went to 175 to $2.
Systems. And he's going to take over, Nicole. But there's a lot that he has on his plate. He needs to, maybe do a little bit of restructuring. How to get more customers for their foundry business. How they.
I called the double bottom.
Some of the costs that they're outlaying into that foundry business.
I just didn't take the
Is it
trade.
going to be worth it? And then you start looking on the AI side. They've lost the race to NVIDIA and AMD in that space. Can they find a resurgence or a niche within the AI chip industry? So
bottom of that hammer,
boom. Bhutan, as he gets into his groove here at the company, but I think it's all going to be based on maybe the next couple of earnings report.
Now, I want to ask you a question. So it's clear to say that this would not be a double bottom, that the bottom of that wick would be a double bottom. But I called it off the body of that candle, of that hammer. That's what I call a double bottom. So who's right? Would you have waited for it to pull back and hit the wick? Or would you have took my advice and bought it off the body of that candle? Randy? Punk, would you have took that trade? Yoko, we know you wouldn't have. like I do? Very good. So you like the bottom of the candle, yes. Very smart. Randy's the smartest one in the room right now. Ain't that right, Magnificent? Say yes. No, no, that was the wrong answer. Now here's the triple bottom. The body, and the wick. So it's getting ready to squeeze now to the upside. What do we have? We have an ascending triangle. Oh my God, Jim, you're right. That is an ascending triangle off of 3 black whores. So I gotta go get paper towels and 2 keys made. And I'll do it at 3 my time. I want to see how much toilet paper is. I want to see how much toilet paper's gone up at this place. Well, it didn't break. So the 57.20 puts are at $1. Well, that don't make no sense. Yeah, see, I don't know, sometimes I don't understand puts. I'll be right back. Especially later in the day.
Through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free.
I didn't see how far down it went. Oh.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New
Tomorrow.
York Stock Exchange. A green day on Wall Street. You even have a bid in Bitcoin today. The VIX is taking a breather. Stocks are higher. The Dow's up 410. We're off the highs of the day, though. I should note that. Boeing, a Dow component, a winner. The shares are higher today after being
I love
upgraded
you.
to a buy rating from a hold over at Melius Research. Melius has a $204 price target on Boeing. And cites the recent contract as some really great news there over Lockheed Martin. They won out for that Air Force 6th generation fighter for that upgrade. So the firm also believes that the CEO, Kelly Ortberg, is the right leader for the turnaround of the company and has empowered employees to give brutal feedback on the company's leadership and culture. And Melius believes Boeing is entering a period of positive news flow that can drive this stock even higher. FedEx shares
Keep
are
hoping,
higher
keep
today
pumping
after
it.
receiving an upgrade to buy from hold at Jefferies, and the firm lowered its price target on the delivery giant to $275 from $300, believing that investors are ignoring idiosyncratic cost transformations that it thinks can lead to continued EPS growth in fiscal 26 and 27. Jefferies believes that any rebound in the industrial economy would have a meaningful flow through to the earnings. And there you have it. It's up almost almost 5% right now as we speak. Now we take a look at Tesla. Now this is a winner, a leader on the major averages. Rebecca Lindland's with us, head of global automotive industry offering at Allison Worldwide. Thank you for
prepare
being
ye.
here. Big day for Tesla again. I mean, the stock's up over 10%. And full self-driving, good news for the company in China, right? What does it all really mean, getting approval for this?
It's a big deal.
Well, so Nicole, thanks for having me on. They're actually facing a delay in rolling out full self-driving to China. So what's happened is back in February, the Minister
Randy.
of Technology basically said
We're finally retesting it for the last time here.
updates need to have regulatory approval first, which is greatly
I'm going for it.
slowing the adoption and the rolling out
57
of more
30s
sophisticated versions of
or 60s
self-driving for Tesla.
at 130.
So what version has gotten an okay? You know, there seems to be a lot of optimism pertaining to full self-driving in China.
There is a lot of optimism for sure, but the challenge is
For sure.
that Tesla actually cannot utilize the information, the driving
Oh, shut
information
up.
that they would get from their nearly 2 million Tesla owners in China. So learning the new roads, learning any changes that are going on is very challenging because of the tight hold that the Chinese government has over gathering that type of information. So when you think about things like construction zones, changing intersections, you know, if you've ever been to Beijing or Shanghai, those intersections are incredibly complex, and constantly seeing how drivers utilize them can help shape and form decision making that goes on in full self-driving mode. Without that ongoing information, it can really challenge the quality and the experience of full self-driving in China.
Right, understood. I mean, there's no doubt that they were going for this, and they
Plus, they might run over the little man.
Always a hurdle, because this is something Elon Musk was touting, like, oh, we're going to be doing it really soon, but sort of left out the details on when you actually get the approval from country to country. What do you foresee happening? I mean, is Tesla a winner, a leader with a moat? Is it something special in your opinion?
Well, I mean, Tesla's been the market leader for years, particularly when it comes to full self-driving, and they continue to be. But in China specifically, they're facing a lot of regulatory hurdles because they aren't a domestic, considered domestic manufacturer. So a company like BYD, which outsold Tesla last year, they are a local manufacturer.
Who is this girl?
They are certainly a huge competitor for Tesla when it comes in general.
We're having technical difficulties.
Full self-driving. And again, it's important to note that these changes just came in February. So I think the intention for Tesla was that they were going to be in compliance, and they thought they were in compliance. So they had put out a 30-day trial. That's what they've had to put on hold now. On Weibo, it's not really specific when they plan on trying this again, but it is obviously a huge amount of focus for Tesla in China. May Musk is actually there just yesterday meeting with some of the Tesla executives in China. So it's obviously a big focus for the company, and they will get there. It's just a matter of time.
I mean, I think that's what's giving the. I mean, you tell me.
I'm telling you, she's a liar.
Is it the optimism on the full self-driving that you think it will get there? Is that the whole point?
So I'm not a stock analyst, so I'm not.
Then what are you doing here?
Stocks. But I do think that Tesla, they have been on the forefront. They're a huge target. Everybody is after Tesla. So even more so than they've ever been.
Oh,
so
God.
I think that all the attention on them is because they have been the market leader around the world in EV.
I don't want to listen to you no more, chick. The real you just came out. We know you can't stand Elon. You're jealous.
Actually producing and selling more vehicles, I think, than Tesla in China. But Tesla's not just an auto company, right? I mean, the whole idea is that it's an AI company, it's a robot company, it's
Tech.
a charging company.
Tech.
And there seems to be so much more for Tesla. I know there's a lot of controversy whether
It's
or
a
not
space company.
Elon Musk should still be running the company, and there seem to be some of those conversations.
It's a
could be
Doge.
distracted by like Doge and things like that.
She said Doge.
Right? These are the speculation that people are saying. Also, we're seeing some
Oh,
vandalism
God.
on Teslas from people that don't like Elon.
I love
obviously
Elon.
That's not nice. If you buy something, whatever part of the world you are, if this is my property, please don't ruin it.
Exactly.
It's
Well,
kind of like
vandalism
a crazy
is
thing,
absolutely,
right?
yes, vandalism is never acceptable. I don't care what your mindset is. It's just not acceptable by
It's a
any
terrorist
means.
act.
But part of the challenge here is that people have bought into Elon Musk's dream and vision, and Tesla is much more than only EVs. There's the power charger, there's the solar panels that they're working on, there's SpaceX, of course, there's Neuralink. So again, he's really pushing the envelope. I mean, early on, Elon said he wanted to change mobility, he wanted to go to Mars. So when you are a big dreamer, yeah.
What about the 5-minute charger? I mean, BYD comes out and just says,
15 minute.
Hey, folks, we've got the best charger on the planet. It's 5 minutes. I feel like whatever
15.
the other ones do in no time. I mean, are we going to see a lot of 5 minutes? Because that was sort of a hurdle for folks who have regular combustible engines. They don't want the hour wait to charge. I mean, now everybody, if they could do 5 minutes, they might jump on board.
15.
It's a huge issue. Charging is a huge issue. I've said for years, people don't have range anxiety, they have charging anxiety. And of note, in China, there are literally millions and millions of charging ports. In the US, there's about, I want to say between 60 and 70,000, that's it. There's almost 200,000 gas stations. So we are well away from having a
Okay, I'm now at
proper
145.
full charging network to support.
I do believe we'll break
types
the
of
21
EVs
on the third
and the type
attempt.
of EV penetration the U.S. wants to see. China's been much more
Break it.
aggressive in terms of getting level 2, which is like the 8 to 12 hour, and level 3, which is the super fast chargers, out into the network.
I
for
could
the
sell
public
this at 150.
Yeah, you make a good point. I mean, you can go to a mall here
I could've.
in Long Island or something. It'd be a huge mall. There'd be 2 chargers, right?
Exactly.
Okay, Rebecca Leland, it's great to see you. So you see a lot more coming here for EVs and more. Okay, thank you, Rebecca Leland.
Thank you so
head of
much,
Global
Nicole.
Automotive Industry offering at Allison Worldwide. Thank you. Stephen Dickens is standing by. He's going to break down a lot of these tech stocks, looking at NVIDIA.
Oh, boy.
The GTC event. The state
The
of the
patience are
AI
running
will
out.
Explain. The watch list. We'll be right back.
Now you can sell it at 150 if you're scared. Let's break the 200 at this resistance line. I want to break the 200 EMA. I want to break the 200 EMA. Yeah. Break it. I wanna break the 200 EMA. Let's break it now. Boom, boom, chick, boom, boom, chick, boom. 160. You can take 160. Get out, you coward.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
I'm really debating on if I want to sell this now at 160 or sell it at 550. We're at the 200, folks, so you have to make a business decision. Uh-oh! Boom! Yeah. Jingle bells at Jingle Bells 295, 330. Oh, I'm going to get out. I can't take this anymore. He's nuttier than hell. Woo! Out of $3, I mean. Magnificent. I think you know what to do right now. I think you know what to do right now. Exactly. It's not common, but I love it. Woo! All out at 370. I could take that. What turned out to be a boring day turned out to be the best day of my life. What caused the pop? Trump going light on tariffs boosts Treasury yields. I don't know. Randy, what'd you think about that? See, Francisca the other day said I had a wonderful voice. So I thought I would sing to the market. That's what made it pop. Am I correct, Francisca? Say yes. Yes. Did you hear that, Mike? Every time I sing, it rockets. Don't be honest, please. I should get another A for saying that these people, these analysts, are anal about these tariffs. You've heard me every day laugh at them, right? Say yes or no. Always clean as a gem. May I help you? Retail traders, this is a recorded line. This is a recorded line. Thank you very much. Why they hang up on me, I don't understand. Man, I'm telling you what. I said wait for the pullback, and I jumped in it, and boom. Oh, okay. That makes sense. Yoko. I held the runner, but I just didn't hold it. I can't believe that, man. It turned a long, sour grape day. I thought this day would never end. It's another tune. The day was so long. I was about to take a nap. And then Shelly showed up. And she sat in my lap. I'm very impressed. Anybody jump in that trade with me at 130? Randy? Chris? Randy did? Chris did. Oh, Chris. Good job. You love the chewing. Making love to my soup. Oh, man, I tell you what, that was really nice. That was very, 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 very nice. But I really need a good grade for saying that all this tariff talk has been hogwash. Even the Chinese leader knows it. The only ones that didn't know it were the fat cats. And they're supposed to be the experts. You know why? Because they're biased. Oh, man. I'm going to go get me some water and come back and try. I'm going to go make me a cup of coffee. I think I deserve that. And I drink decaffeinated coffee. The only time I have caffeinated is when I go to church. And I grab one cup. Got to have something to keep me awake while the preacher's preaching. Randy going long? Spy? Randy thinks the spy's going longer, higher. And don't forget, this morning I came out and said what? I started in with saying that the tariffs were going to be lighter than what the fat cats think. First thing today, and then Trump comes out and verifies it. So I get another A+. Thank you very much.
Nothing for you.
Nothing for you. Woo! Randy thinks we're going higher.
Thank you very much. That's really nice. Thank you.
Yes, sir. And I've been saying it from a long time ago, so that ain't nothing new for me. If you can count to 3, you can trade with me.
Count to 3 and trade with me, but count to 4 to make much more.
Exactly. Woo!
Time their leverage is a lot lower than it has been before.
Yeah, understood. All right. It's great to see you both, and truthfully, we're not that far away from Memorial Day weekend. Patrick, is it estimated that
These things are depreciating on the and hardly dipping.
This year?
So I think that's the place to get in.
We're going to be really close. Yeah, you know, with a combination of relatively low gas
57.60s at $4.
Americans are really feeling reading the headlines. So it certainly could be a busier summer, but again, a lot lays in the fold here when you talk about tariffs in the direction of the U.S. economy. Okay. It's certainly very difficult to predict what direction we're going to be going in the next 6 months.
Oh, you're an idiot.
Patrick DeHaan.
These guys are supposed to be professionals. I don't know what's got into them. They just hate Trump. Get me on there, baby. Titellini. I'll tell them all. I'll tell them all. Nicole. Yeah, we can definitely go higher. And I was reading, when we have days like today, futures are easier to trade. Is that right, Punk? That looks like a pretty good setup. You just have one monitor? One big long one? We got the level 2. Is that what that is? No. Is that the Parsons pivot points? This thing dips down to the 21 or back here to the 200, where it takes off now, and I buy one contract. It's right now, it's power hour, ladies and gentlemen. The time is now power hour. Prepare ye in the name of the Lord. Mannequin, does that sound good when I say power hour close to the mic? I'll find out. Say yes. We are now approaching power hour.
coaching power hour.
It's funny. $4 to $5, please. Thank you. 520. $5.50. $5.60. I think I can sell it here. I mean, today was long and tiresome. I took 2 naps, very short ones. Man, this thing can do a double top. I think this thing can do a double top. $57.63.01, $57.64.66, and $57.66.42. That could have been one of the best plays. It could be the play of the year. Had a couple of them, but that definitely ranks up in the top 3.
$2 for a piece of toast? Bullshit!
Sparks. Still watching Guild? Unbelievable. It's 2:09. I bet you that caught a lot of people off guard. As far as I know, I'm the only one that's been talking about the tariffs being the hype, been a bunch of bull crap. This room here, as I'm in a few others, and there's no mention of it. The news is out now, but what may that bring? A great rebound. It won't matter what the news is. Well, he got one thing done. He got Europe to spending more defense money. Now, if they do it, that's a different story. They brought work to the U.S., that's right. I really do believe these people are stupid sometimes. Only a couple of them. Only very few. We're not worried about the tariffs. And saying it could cause a recession, it could cause stagflation. You could cause your wife to get pregnant. Carvana. I haven't even looked at that one. Oh shoot, it's down to $1.50. I mean 161. I think I would have looked at that myself. Oh man, that was a bargain there. Yeah, that was a bargain there. Triple bottom at 163.84. Huh. Okay, Jimmy said we'd pull back to the 21. Here we are. The 57.65s. This is what I used to tell people when I was trading, to pay attention to the news and learn what news can do for a stock. So the market just bounced because Trump said that he was going to be more lenient on the tariffs. So does that give this stock reason to hold and keep the highs, or is it just a reaction to a reaction where it has the breakout and pulled back? What kind of news affects the stock? Is it an everlasting run because, you know, maybe a new CEO comes into play? Or maybe it's a stock that had the CEO sexually harass some employees to cause it to go down, and did it last? Does it keep the stock down? How important was the CEO to the company? Offerings. How does a stock react to its news? Is it one that's an everlasting run, or is it one that would just kind of have a nice little bounce and then pull back within minutes? Pay attention to that when you're wanting to be in the now. Pay attention to the news and how it reacts. Like I just called this off before we even got here at the top. I said I wanted to wait for it to come back and hit the 21. And boom, right there's $100 contract. See, this news is old news to me because I already knew it, but none of these other idiots out there knew it. The fat cats, the so-called analyst. Am I right, Randy? Say yes. Amen. 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 I asked a girl at church this Sunday, I said, what key were you singing that in? That was just so beautiful. I was singing in the key of C. She replies, but the song before that was in the key of B something. B flat. Will we hold the 21 this time? I don't know. We have a flag. We have another ascending triangle. Ascending triangles all day today. Well, that's just what I'm seeing. That is an ascending triangle. And we're getting ready to squeeze again. And we're getting close to the end of the day. We have 38 minutes left in the market. Blanket. Cindy triangles are bullish chart pattern.
Q4 2024, and then look at the expectations, going out further on their fiscal, it's going to come down to like 50%. So to your point, I mean, it's obviously slowed substantially. Where do you think the growth will stabilize or kind of equilibrate from that initial massive boom? Because clearly we're on our path to some lower but arguably sustainable rate.
Yeah, I would say deceleration probably to the mid-20s. Low to mid 20s. I would say that over the next couple of years. And again, you have to keep in mind that these guys have done a great job. There's no question. I mean, for example, Blackwell, you can refer to it as a full stack. It's not just one chip. It's just the type of product with the software around it, with the CPUs, by the way, which ARM certainly benefits from. With the software around it, it creates that switching cost for its clients. But the question is, are companies willing to spend that much on for inference where it doesn't necessarily require that general purpose types of chips, where maybe you might need some more, chips that are focused on specific apps and or specific tasks. So, those questions remain. But again, we're looking to see if there are additional opportunities come about from if the stock goes down.
Okay, understood. Appreciate the framework. Thanks a lot, Ollie. Helpful for us. Like it.
Sure, Oliver.
Always appreciate a good, I guess maybe a little contrarian take from what you hear from the uber bullishness on NVIDIA. I'm Robic, Senior Equity Analyst at Weston Capital Management. Coming up, let's look at the options flows and get KG's take on how high we can go.
Man, I'm just so happy for that trade.
Believe me, when it comes to investing,
I talked about this last week, and I'm going to talk about it again. And I did talk about it again. I said, I'm just going to keep waiting and waiting and waiting until that trade comes in. And I was scalping for little pennies there, and I took a loss on that one. So I was about $30 until about noon. And I was just being very patient. And I had someone in the room remind me last week that I was kind of snapping them off too fast. Now I trade much better when I'm more patient. I trade good when I'm snapping them off, but it depends on the market conditions. Today it wasn't a snapping day. It was just, so I waited and waited, sat here bored to death. But I told you and I told myself, I said, I'm just going to wait for that time, for that perfect time to come in. I mean, it can be boring. You can sit here all day long, and then all of a sudden, within 1 hour, you've made 2 or 3 great trades and you're done for the day, but you'd had to wait 5 hours to do it. So when it's boring, just do extra work, extra homework, or take a nap, or walk away and cook something, or occupy yourself. But I said, I'm going to wait for that right trade. And then they started coming in. The pullback started coming. The volatility started coming in. I was able to get 200 here, 300 there, 400 there, 350 here, there. And then all of a sudden, 2,700. And I bought them dirt cheap. 10 contracts at 130. I mean, $2,000, $2,500, that's a lot of money in a few minutes. So it was worth waiting and being bored and doing whatever I had to do to occupy myself. You know, if I wasn't live on YouTube, I'd be jamming, I'd be playing my guitar, just sitting here watching the market. Watching videos. The one monitor, I got 4 monitors, you know, I can be watching a video and learn something about space or vacation properties or anything like that. Just waiting for that right time of the day. It could happen first thing in the morning, the rest of the day could be boring as heck. It could happen later in the day, and the first part of the day is just boring, and you want to leave and go do something else, but then you come back and you say, damn, what did I miss? What causes the market to pop like that? Especially when you come in here bullish to begin with. If you watched my video, you would have picked up on that.
The wild card is going to be the whole Venezuela aspect. It's definitely going towards China. And so if he is trying to increase tariffs by another 20, 25%, you're talking about a 45% tariff on China goods, which would be monumental. But the market's really discounting that. They're not even taking that into account right now, which I find very, very interesting here. The other reason why I say the dynamics have shifted a little bit, let's look at the VVIX chart. VVIX, vol of vol.
Yeah, Mazzola pointed that out to us this morning. That's a really good one.
Yeah. Vol of vol is now at the lowest level that we've seen since July of last year. A tremendous unwind of volatility. Now, there's 2 things to kind of note there. Massive unwind when it comes to volatility, meaning that the market's really not pricing in upside vol skew or a VIX spike, if you will. That's one thing. So this is bullish. That being said, we get to one extreme and come pretty much to another extreme, as we're seeing on this chart. Volatility is actually relatively cheap now. So if you are concerned about the next 2 months, 3 months, next week or 2 weeks, downside protection is actually really, really cheap. Even if you're looking at the money straddle right now, you're pricing in a very low implied move for the S&P 500 for the remainder of this week. This is also another big game changer, that volatility index, or if you're looking at VVIX. Also, that backwardation is now kind of rolled off. We're in a normalization, kind of at the normal skew if you're looking at VIX minus the VIX future here. Something that you probably wouldn't see if we were going to lead up to another significant pullback in the market. Now, if that does kind of shift and we do see prices going up and vol starts to creep up again, VIX higher, S&P 500 higher, that might be an indication that something's on the horizon. But that VVIX crush is something that I haven't actually seen VVIX crush like this in a very long time. Yeah. Even when we had this, the yen carry trade situation, that blowout that we had to the upside for VVIX itself, I mean, the way that it came down was aggressive, but not as aggressive on a relative basis or on a percent change basis like we just saw over the last 2 days, 3 days.
Yeah. I really like that chart because it's something that we talked about here just in terms of trying to figure out how to trade the last week and then coming into this one. The idea of shorting vol versus long stocks kind of seemed to favor the former. We talked about that with Jason Coogan at Simplex, where the two often go together, but really to get vol going down, all you really had to root for was just the market stabilizing. If you ramp up, even better. And it seems like that's what's happening here, is that we're letting out this massive sigh of relief that the stuff we priced in at VVIX 130, VIX 30 was not a black swan. This was just a fast correction like Sam Stovall told us about. I mean, it was fast, though.
It was. I'm still not going to be in that all clear camp. I know that you might.
Sure.
And
I didn't say I'm all clear. I'm not saying all clear at all. That's exactly what I didn't say at the top of the show. I don't think we're all clear. What I think is that we have reset and that the black swan stuff has moved to the side for a moment. So now the volatility resets. You can make some more reasonable bets, right? You've got a wider array of bets now you can make with vol cheaper.
Yeah, well, vol eventually would come down regardless. Right?
Anthony,
It actually
don't hurt
took
him.
A little bit longer than maybe we had expected, but now we're starting to see it roll off. I think the options expiration on Friday also helped out with that. I mean, we had a lot of positioning, $4.4 trillion worth of options premium being rolled off here.
You got a green
seasonally,
jacket
but
on?
once again, vol usually crushes right after that. So I just go back
Classy
and just say,
set.
mechanically, vol should be a little bit lower. The dynamics and tone shift from the leader of the country right now seems to be a little.
I don't think I got a
different.
green
I think
tie.
if you were to get something that could actually reaccelerate volatility to the upside, I think it's the China angle and maybe the Iran angle, but most likely the China tariff angle, which I think the market is not pricing in that at all. And you're kind of looking at a situation too where like high yield credit spreads actually might be breaking significantly to the downside. We kind of talk about this correlation.
You got a chart for that, right?
Yeah, high yield credit spreads, when you really look at it on the platform, it's usually a day behind. So we have to be mindful of that.
Okay.
But I would not be surprised if you see a massive crush to the downside when it comes to high yield credit spreads just in general. Keeping up with that trend with volatility crushing to the downside as well. That also gives you a little bit of confidence. That means that liquidity is also kind of coming back into the market across different asset classes. Liquidity in the E-mini S&P 500 also looking pretty decent. If I eyeballed it, you're looking at probably around 30 to 35 contracts on the bid and ask. Ali, we were literally sitting at about 8.5 contracts a week ago. So there's a lot internally that has actually adjusted here. I still say counter trend rally for now. Let's see what happens. But the environment looks a lot better than even what we saw on Friday going into the close.
And to your point, a lot of it with that OPEX was a big deal. KG, last point too, because you talked to us a lot last week about looking for stocks up, yields up. That was a really important part of my analysis as well. So we're getting that. I'm curious if, as stocks rally back, vol comes down, if that lets people sell bonds again, might that keep the credit spreads pinned a little bit? Will that put any stress on the credit market, or should it just follow VIX generally?
Yeah, you know, that's actually a really interesting dynamic, Ali. There has been a little bit of a disconnect, actually, for the last month or so between high yield credit and what you're seeing in treasuries, right? And so we can have high yield credit spreads moving to the downside, meaning that there's more demand there. But we could actually still see people selling out treasuries, especially on the long end of the curve, which is probably what they will be doing. 10-year, 20s, and 30s seem like that would probably be the trade to kind of sell out of those if you were kind of in this risk-on type of regime, rather than selling out of the short-dated, because you're still getting a pretty decent yield on that from a portfolio standpoint. So I think you can still have high-yield credit spreads inching back to the downside. We came off a very low base, though. We have to be mindful of that. I mean, historically low base. So I think stabilization in yields just in general is going to be conducive for equities moving higher. I'm still not a true believer that dollar is going to ramp back up to the 108, 109 level. I think dollar is kind of going to probably see resistance at around 106. And I think that's healthy enough for the market. And if we do have some tariff risk, lower dollar is going to actually help out a lot of these companies here. So I think we're looking pretty decent here. I would, if you look at the weekly, last week seemed like we should have had a green week. We eked one out. This week, it seems like we should have a green week. Consumer confidence tomorrow, but given the dynamics that have changed today, Oliver, I think you discount that consumer confidence number. If the Trump administration continues to have the same tone like I just heard 30 minutes ago, right? I don't say it's defeatist, but they it seems like they're easing up, and maybe somebody told them, "Hey, chill out." Who knows? I'm serious.
Yeah.
It's different.
Fair enough. All right, love it, KG. Good stuff. Thank you, sir. Appreciate that very much. Nice setup for us, too, there at the end, looking at credit spreads and talk some bonds with the team at Macquarie when we come back. And we are still well bid. Market having a real good day here. Bonds down, too, by the way. Don't lose sight of that as part of it. Treasuries selling off was an important sign that markets were firming and fears were dissipating.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Let's continue the bond talk. Greg Dizzy joins us from Macquarie Asset Management, Senior Portfolio Manager and Head of U.S. Fixed Income and Municipal Bonds. Greg, welcome to the show. Thanks for being here.
Thank you for having me, Oliver.
I think it's good if we just kind of pick up where we left off there with my colleague talking about volatility in stocks versus credit spreads. What are you seeing when you look at credit markets right now?
Well, the markets have been mired in really confusion or opaqueness, right? So we went through last year, which I would classify as a total recalibration of expectation on what the Fed would do. And the key element of that recalibration was the resiliency in economic data. We get to last week and we get an update from the Fed. And it seems like from an investor standpoint that the Fed will continue to contain optionality with respect to rates. We've had a change in administration. It's created a lot of uncertainty around policy. And this is interesting because investors are looking at a backdrop where all-in yields are very, very attractive. As attractive as they've been in over a decade, really across fixed income. So I think you have to choose your spots in here. We are of the opinion that rates will continue to fall, albeit not in a straight line. So if you ask me if we're going to close the year at lower rates or higher rates than where we are now, I would say we're going to be lower. But really, investors have been mired in this confusion, and we know that any uncertainty creates paralysis for investors.
You're only creating the uncertainty. It's not there, you ding-dongs.
I wouldn't say substantially lower. I think we have some wood to chop here. Certainly, we'll need some resolution on the tariffs. Your prior guest, I agree. I think there's been a recalibration over the weekend, and today's equity performance speaks to that. Certainly, the targeted tariffs is a much better proposition from the investor standpoint than just wholesale tariffs across the board. And the Fed paid homage to that concern with their comments around growth. First time mentioning that there were growth concerns out there. So I think investors have to pick their spots, but bond yields are attractive for investors.
Okay. So investors of all forms or those who are happy to lock in 5%, if stocks start ramping up, does that change the equation a little bit?
Notice the way I use the term investor and not traders, right? So I think if you share the outlook that we have here at Macquarie, rates will eventually come down and stabilize, albeit not at the levels we saw post-COVID, where we saw record low interest rates, but rates will be lower. As a result, and I'm going to use an asset class that I'm very familiar with, municipal bonds. If you look at municipal bonds, their relative value to treasuries, you have to go back over 2 years to find equivalent value in the market. And then all-in yields, you have to go back really to 2011, 14 years to get equivalent yield, right? So the question becomes, do you have the intestinal fortitude to enter the market ahead of the clarity on the issues that are impacting investors right now?
Okay, tell me about the munis then. Do you go for the juicier stuff? Is everything in the muni land pretty safe? Can you go for high yield munis? I'm kind of still in that mindset where I'm looking for a good bang for my buck.
Yeah, Oliver, I think you're spot on. Two things. One, we had unprecedented fiscal aid to state and local governments, which trickled down through those economies and the sectors within the marketplace. So really, for the last couple of years, the question from muni investors has been, is it as good as it gets, right? Can it get any better? Our call was that credit would stabilize, with no real expectation that there was going to be massive degradation in credit spreads. And really, you have probably the best technicals in the municipal market in what you identify the high yield sector. Only represents about 11 or 12% of the market. And if you look at the the Bloomberg indices as a proxy for the overall market, on a grossed up basis and an absolute basis, municipal high yield is the number one performing fixed income asset class. And we do like high yield in here at this point.
Wow. What can you get nowadays, high yield and munis?
You're looking at high yield funds that are throwing distribution yields off in that 5 to 6% range.
Okay.
And if you gross that up using just federal taxes, it's extremely attractive and much more attractive, quite frankly, than taxable corporate high yield.
What about a state like Illinois, where we did get an upgrade thanks to tons of COVID money, but it's been kind of slipping away, and we're not really on the side of the political aisle that's in charge right now. Is there any cause to be wary in states like ours?
Sure. You have to keep an eye on it. Certainly, I think there's going to be pressures. But, Oliver, most states have to balance their budgets, right? So they'll have to do the necessary things in order to facilitate that. But, again, given the outperformance of the economy in Illinois and then the fiscal aid that was able to help them pay down some of their bills, we saw multiple upgrades of Illinois. Hence, it makes sense with a little bit strain in here and perhaps some underwhelming financing heading their way. Perhaps you should keep an eye on that credit.
All right. Greg, thanks a lot. Great insights for us. Appreciate that.
Thank you, Oliver. Appreciate it.
Good look at bonds and good look at the municipal market, too. A subject fancy from our next guest as well. Cooper Howard takes us into the bell for the big picture discussion on bonds as we look at a, hopefully, powerful finish. Maybe we can do like a Friday thing and ramp it up. It kind of looks like we're trying to right now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
There we go. 460.
Bond discussion here on a week with a lot of economic data. Cooper Howard going to join in the conversation. Director of Fixed Income Strategist, Schwab Center for Financial Research. I know what that smile means, Cooper. You love that muni bond talk.
We do love the muni bond talk, Oliver. So it's a lot of bond talk, even though it's not a Fed week. So I'm all in favor of it.
You know, well, we got a lot of stuff this week. I mean, I guess I kind of didn't realize I was so focused last week on what was going on in the price action that, you know, with inflation, we talked about that. We got GDP.
I picked it up at
we
460.
Got coming up. What's on the top of your list as a catalyst for the bond market this week?
You know, I'll look further than 1 week, and I think that it's April 2nd. That's obviously the big thing that the bond market's moving off of today. All the discussion over tariffs, potentially them being a little bit more narrow than originally anticipated. So I think that that's kind of plays into this broader theme that our team has had with what's happening with the bond market. And really, we expect to see a little bit of choppiness going forward as the market tries to clarify what happens with trade policy. Does the growth hit occur first, or does an inflation hit occur first? And given those cross currents that's happening right now, I think that's why we expect that the bond market's probably going to trend a little bit sideways from here, Oliver.
Today we got a decent sell-off. What do you think is the connection with stocks? Do you think if stocks come back up, yields go up with them?
You know, I don't necessarily think that there's too large of a connection right now with one versus the other. What I really think that is happening is just reaction to the news and the data that's coming out. We got the PMI numbers this morning. They were a little bit better than expected. Market tends to focus on the ISM numbers a little bit more though. But really what I think is happening is just hopefully better clarity over what's happening with tariff policy and trade policy.
And what do you think that is? Cooper, walk me through the framework of what tariffs do to bonds in your mind. Is it clear?
You know, it's not necessarily clear, and I think that that's what the market is trying to navigate right now, and why we do expect them to trend sideways going forward. So on one hand, trade policy, if we enact tariffs, most economists agree that it's bad for growth. So there's an element that you could see yields move lower off of growth concerns. However, the flip side of the coin is that there's also the element of potentially tariffs leading to higher prices, higher inflation, and you could see yields move a little bit higher. So you've seen this kind of push and pull in the markets, Oliver, especially since we've started to see yields trade down recently, of what's going to come first, that growth issue or that trade or that inflation issue. And since the January highs, the market's really been betting that it is going to be that growth issue. But
we have 4 minutes left.
If they are more narrow tariffs, then that's a potentially good sign. But overall, there are likely to be tariffs that are going to be implemented. So I do think that that's a negative for the market. And previously, or what your previous guest said, our view with the longer term direction of rates, even though we do expect them to chop sideways in the near term, over the longer term, say by the end of the year, it wouldn't seem out of the question for yields to move lower.
Okay. Cooper, what did we learn in the kind of week post Powell now with 3 sessions, Thursday, Friday, Monday?
Powell now.
Does the higher yields sense suggest that Powell is helping improve the growth outlook? Does his calm nature and willingness to cut support the economy?
You know, I don't necessarily think that we've learned anything major new in the market recently. We did hear from Bostic today saying that he favors 1 rate cut rather than 2 rate cuts. So I think that that's helpful or a little bit illustrative of a lot of what Fed officials might be thinking, trying to take a little bit more of a cautious approach on where we go from here. So overall, I don't think that that's too much new information, Oliver, but I just think that the Fed is trying to take a little bit more of a cautious approach and not get over their skis a little bit.
Okay, because we've done full round trip. Bonds rallied, and then now today, as we speak, we're right back to where we were for Powell. So it's been interesting, a little U-turn. Thanks, Cooper. Appreciate the.
All righty. What a day. Days like today, you got to learn from. I think I played it very well. I didn't rush myself today. I didn't get into a huge, heavy cost average down trade. Only did one, where I had to cost average down, and it could have been a lot worse. And then scalp when the market started showing a little bit of volatility. That's when I really like to shine. instead of just going sideways all frickin' day. Did for like 3 hours. It was really getting monotonous. But I kept telling myself I'm going to wait for the right time. I know this market's got to pull back and get some volatility in here. I don't know if I did the right thing by getting in this swing, but now it's at 450. Well, what the heck, it's an experiment. I don't like swinging stocks that much. Unless we're in an uptrend. Now it's at $4 fucking bucks. Shit. Oh well. We'll see how it opens up tomorrow. $3.60. Oh well. I don't think I've ever swung the SPX. We'll see how it goes. It could just go ahead and get back down to the 57, 55 area and run back up. I really had a lot of fun. I mean, I was boring at first, but once I got into a couple good trades, it just changed my whole everything. So I'm going to get out of here. Catch you all later.